know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Oh, how's everybody doing this morning?
Who do you?
You okay?
I'm great.
Are you?
I'm great, yeah.
Beautiful, beautiful. Hey, dividend alert, all your X's today.
Live in Texas?
XLU, not my X's.
Okay.
No,
Market's
that's all.
X's. XLU, XLB, all the X's.
June is going to be triple witching, though, isn't it?
Yes.
June is triple witching, as it always is. Yeah, sure.
So you'll have all those middle of this month, too.
That's true.
And then
Qs, if you have a QQQ position.
Qs are today?
Today you have to do something
Yeah.
about the dividend. The Qs are go X dividend, which means Latin for without.
I do have a Qs position we'll have to look at.
Yeah, you have to look at deep in the money calls, but
I got some deep in the money calls.
Do it. Uh-oh.
You may have a spread. You may have a spread even.
Yeah.
Even a long spread that went to full max value that you're going to want to close out because you don't want to pay the dividend.
Yeah.
Probably somewhere around 40-ish cents or maybe a little bit more. I'd have to deep dive into it, but.
Yeah.
But all your X's, I think the biggest one's XLE, which is about 60 cents. The rest are somewhere around.
So the Qs are today. Into tomorrow. Hey, they go X today.
That is
without.
That is correct. That is correct.
Did you not know that? Didn't you
No,
get an
it's-
email
I
from
thought the
Tasty?
Qs were triple, like part of the triple witching.
Oh, I see.
No.
That's what I would think.
No.
Like I thought they would be on this whatever the 17th. No, the 18th.
No.
Are they not?
I'm gonna check again.
I know one
I'm gonna
forget-
recheck my checking.
One of them is usually kind of goofy. Is it the Qs? The other three have it on the 18th. No.
Let's take a look here. Next Q to that. It does say June 22nd. You are right.
That's what I thought. The Qs are usually it's usually the three right at expiration for triple witching, and then there's usually the Qs. I think is like the Monday after, or the Tuesday after, something funky like that.
All right. Well, I'm gonna do some deep diving because I don't. When you said it, it made me think about it.
Yeah.
And then after I looked,
I thought I smelled smoke.
I will go to the
All
trade
right.
desk. I will go to my
All right.
third source here.
Yes,
and
Go
see
get
what-
Marty.
see what's going on.
we'll figure it out. But okay, it's on the docket.
Yes, we'll see.
Got it.
QQQ. All right, go ahead. Talk amongst
Yes.
yourself.
How was your night, V?
Uneventful.
Yeah.
Just had some errands because, I got back from vacation, so I didn't have groceries. So had to, just go get groceries and run some errands. Had to go to Home Depot. So
One of my favorite places.
Home Depot?
Yeah,
I do
I-
like the Home Depot.
I kind of like.
I'm annoyed they're putting too much crap in the aisles though. Like just
what?
like right in the middle, like just displays. And I'm like, do you really have to put those gloves like right there?
I like the big black totes.
Yeah.
The heavy duty ones.
Have you
I
seen
got
the
a
little
couple of
mini
those.
ones? They're so
have.
cute.
They are very cute.
And I'm like, what can I put in this?
Yes.
Beads.
Oh, that would be a good one.
Yeah.
But you need to get like an organizer for it.
Yeah. How's your man shed?
My man shed is good. That's where I got my black tote.
Yeah, I figured.
I also got
This is in the garage.
So
It's his illegal man shed.
yeah, it is.
there's
His
no problem with
contraband
that.
man shed.
What do you call it when you?
It's a public garage. I mean, it's a private public garage.
I was gonna say eminent domain, which is not the right way.
Kind of manifest destiny, squatters' rights, whatever.
Yes,
yeah.
that's right.
That's just 9/10 of the
Because
law.
if you put something there and
Did they ask for
stays there
permission?
for
Yeah.
like a year,
Right.
then don't you get to claim it?
Right,
as
sure,
yours?
squatters'
isn't that
rights,
like
yeah.
property laws. It's like
Well, I should, Lawrence. I'd have to talk to Lawrence about this. My old buddy Lawrence. He was a squatter for a while.
Okay.
He knows all the rules.
at his mother's place.
No, at other people's places.
Oh, really?
At other people's places before he got on his feet, he would just squat places for like a year. So he knows all the rules.
Yeah.
Very nice.
Yeah.
Yeah. But my new thing is I bought like one of those, those like carts that like they've got, handful of wheels and you can fold them out. Like
Oh, yeah, in a
groceries.
utility cart. Yeah, you
like
take them to the beach or a tailgate or, yeah.
I got one of those at Costco. That was one of my, like, as I'm browsing through Costco, I'm like, oh, that would be.
Oh, because you were a newly minted
Yes.
Costco man. Yes. So that's the trap of Costco. You go in for one thing and you're like, look at this beautiful utility cart.
It really is. Costco, you think you're saving money, you are not saving.
No.
Why do you say that? Because I always say I can't afford to save any more money when my wife wants to go to Costco.
Because you just buy too much. It's like that. It's like I just saw it and I was like, that would be great to have. And it's 100.
Sure.
It's just
I can't believe you held out this long, like to 36. Like that's kind of goated, though.
I know.
Yeah.
So that's.
I don't know.
So where are you going to take your cart, Nikki?
I just use it for my groceries.
Oh.
Like, it's just a great thing to have.
Sure.
It's really wonderful.
Sure.
It really is.
Can't go
But
wrong.
I got by without it for a year and a half, which is the.
You know what it's great for? Like when they have like the free concerts or the movies in Millennium Park. So you like load it up with like the blankets and the cooler and like the little chairs, like a nice date night. Like, let me put you on, Nikki.
Okay.
Yeah.
So hopefully I'll use it.
Yeah, organize it. Like, it's free. Like, I mean, you're going to spend $200 at Trader Joe's on like
on
little snack foods, but
on orange chicken and fried rice in the freezer.
Nikki, I stand corrected. You are 100% correct. You're right. During Triple Witching, you are 100%.
I've been doing this.
Little error made there.
I've been doing this for quite some time.
This is why you should double check your double checking. You're 100%
It's okay.
correct.
It's okay.
100% correct.
We're close to taking your keys, but it's okay.
That's true.
It's
That's
okay.
true.
We still love you.
Yeah.
It used to be so good.
I know.
It used to be so good.
We're gonna take your keys.
So it is the 20th or 22nd, something like that, and then the rest of them are all the
or the
18th.
16th or something like that. Yeah.
Because there's a holiday. It's like a federal holiday,
yeah.
so the market's closed.
Yeah,
that Friday.
That 18th is a Thursday.
Yeah.
Got
That's
it.
a little gold scoopy. Just make sure you put that through.
What'd you just do?
I just sold out of my gold futures.
Oh, that you bought the other day. Yes,
Yes,
very, very nice.
Hey.
Very nice. Your
Couple
gold was
bucks
up
on it.
$50, right? 51.
Yeah, just a little something.
Start your day off right.
Yeah.
Pretty good.
Good for you.
How about you, Bat? How was your evening last night?
Better than my morning so far.
Oh, no.
I'm just kidding.
You're doing fine. You're
Just
okay.
kidding. Thank you.
You're
thank you.
okay.
Evening last night, impromptu get together in the backyard last night. I had to deal with for a little while.
For your son? In the middle.
Ooh, nice.
In the middle of his finals week?
Yeah.
No, he's done.
Oh, he's
School's
done.
over.
School's over. Okay.
Last week was school. Last
Okay.
week was his
Are there some ladies
Wednesday.
there?
What's that?
Some ladies there?
There were some ladies there. I asked him, this is not going to be like a 1 a.m. thing, right? And he's like, no. But at 11:30 they were done.
Okay.
Which was
Okay.
They cleaned up, which is good. But
Sure.
Mom can't sleep. You know what I mean? Like I can sleep. You know?
Are you guys like sitting at the window?
No, I'm sleeping. I'm sleeping. I don't hear, don't tell. I'm like Clinton.
Yeah.
Like I don't want to know.
What?
No, I don't know. I'm good. Don't hear, don't tell.
Yeah, you don't want to be the one that busts them up.
Was the joke trying to be don't ask, don't tell?
Yeah. There
I
you
was
go.
so good. I was like,
I knew you'd get it.
I was like,
I knew you'd come around.
what does Clinton have to do?
Yeah.
Okay.
I knew you'd come around. I knew
Okay.
you'd come around and get it. Yeah.
So what are Vinny's big plans for the summer?
Oof. Well, he wanted to do the camping thing, hike 7 miles.
To do a through hike, yeah.
He's never hiked before in his entire life.
Sure.
He wanted to hike 7 miles to a camping site.
It was so good. He was set. So when we were there for Memorial Day, he was like setting up his tent to show everybody that he could set it up.
Yeah.
Outside.
And I told my dad, I'm like,
Well, that's good. You should practice
I'm like,
in your
this is the
at your
perfect
house.
time
Yeah.
to water test it, to rain test it. Just
He's like,
to
get
see
the
it.
hose and tell
Get
him
the
it's
hose
starting to rain.
and start spraying it while he's setting it up to
You
see if he can do it in the water.
actually good gear testers at the beginning of every season will do a test to see if there's any seams that they need to reseal with seam sealer to test the waterproofness of their gear. So I know you guys are doing it from a malicious standpoint.
No.
But every good outdoors person at the start of every season tests all their gear. But what happened then to the plans then?
They got foiled by the mommies. All the mommies were in
Sure.
I mean, they were right on this one. The kids were all wrong on this one. I mean, they could. So then they were going to go to. We don't live too far from a forest preserve, so they were just going to go to a forest preserve, buying an axe, and they were going to
buying an axe.
Clear out a little area.
Oh, that's good. They swing.
That's illegal.
That's
illegal. You can't do that.
Yeah, we explained that to them.
Did they buy the axe already?
No, they didn't buy the axe, but that's what they were going to do. So which they already took my axe. They squatted in somebody's empty yard.
Oh, okay.
In between two houses.
Sure.
They would just kind of sneak in and hang out there. That was last summer's Camp Peaches. That's what it was called.
Nice.
No, so that was squashed. So just stupid schemes like that. Now it's about fireworks.
Nice.
Yeah. They were going to drive down
to Indiana, get some fireworks. They're going to go to Hammond.
Exactly.
Yeah, that's where you got to go, like to Indiana.
Or go north. I said, why don't you guys go up to Wisconsin?
No, Indiana.
You don't have to go through the city.
No, Indiana's the place to
stop
go.
at Mars Cheese Castle. That place is.
Yeah.
Wisconsin doesn't have good fireworks.
And they said that you have to sign something. In Wisconsin, they go, well, you have fake ID. What are you signing? I mean, what are you?
No, the Scotties don't mess with that.
Yeah.
They're not. They don't.
Yeah.
Because you can do whatever you want when you're 18. So
you have to go to the lawless land that is Indiana. Yeah. I'm sorry. For the tobacco and the fireworks, that's all we can offer you.
So that was yesterday's conversation. It was a good one.
Okay.
It was a good one. It keeps me on my toes.
This summer is going to be so good for you. It's going to be so funny.
The weather hasn't been good. So we've gotten June has been, pool weather. It hasn't really been poolish weather. So they've been kind of
so sorry, my lord, your piggy's getting cold in the pool.
yes. No. They've been pent up. They got some pent up energy.
It's just barely June, so.
It is.
Yeah.
It is. Well, it's half the year's over. It is part of summer.
Look. If the young boys want to go to the Vanetta Logan Outdoor Survival School, I'm running a course. I will be adult supervision.
Okay.
But yeah, I'll take those kids into the woods.
They might take you. Be careful if you get 6 suburban kids at your door one day.
They're not coming to the South Side.
Mm-hmm. They're gonna want to know. Where can we buy an axe?
That's too funny. Hey, we have a great show for you today. A lot of really good content headed your way on this terrific Tuesday. At the top of the 8 o'clock hour, we have an options jive, reducing cost basis, the trader's edge. Nikki.
Yeah, it should be a good one. I mean, it's reducing cost basis, selling calls. You could do call ratio spreads. It's something that I like to do, but we're really talking about just selling calls against long stock positions, selling in the money puts as a way, or at the money puts as a way to wheel into stock. Will be a good one.
Okay.
Beautiful.
And then at 8:40, back at it again. We have Futures in Focus. We are joined by Craig. Everything you need to know about Forex futures. Craig from the CME is joining us.
6A, 6B, 6C, 6E, 6J.
Ooh.
All the sixes.
Okay.
Yes.
Nice.
Which should be
very nice.
Yeah.
There you go. You're a Cincinnati 6, Nikki.
That doesn't sound good. That doesn't sound good. That's like a Chicago 2.
You're Cincinnati 6, though.
Wow. Rough.
That is a fun game, like a fun scale. It's like, okay, what is this and this, then okay.
And
we're all beautiful on the inside.
Yeah. the personality. I've got lots of personality.
That's sparkling personality. But we are happy that Craig is back and he will join us Futures in Focus. So like Nikki said, all the sixes for your Forex futures. Then at 9 o'clock for market measures, all about probability and the importance of number of occurrences.
So this is another good one. So we're talking about just like the amount of winning trades versus losing trades and how you need to have a number of occurrences to kind of make the probabilities play out. So just because you're doing something that's really high probability doesn't mean that it's going to work in a data set of 5 or 10. you got to have a lot of occurrences, and when you have a lot of occurrences, the probabilities tend to play out. So it's another good one.
Okay. And then we have live from the trade desk at around that 9:20 time frame. Q in the house counting down all the top trending tickers over at Tasty Trade, and Mr. Ryan Grace on the Tasty Crypto side of things. So that is at 9:20. And then at 10 a.m. we have the Listen Jenny show live from the floor of the SIBO. It's always electric when the ladies are live. So tune into that at 10 a.m. Super exciting. And for tomorrow, if you have a trade idea with an underlying and a directional bias, we would love it for what's your assumption.
Yes.
So submit your trade ideas and you could be featured on tomorrow's show. And if you want to be featured in Liz and Jenny's show, use that hashtag LIZJNY, and the ladies today could answer your question during their live show. But in the meantime and in between time, do you guys want your daily dose?
Sure.
Hit me with my theme music.
Our leading story. Breaking news.
Coming
across the wire. Leading story.
Top story.
Just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's June the 2nd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
Palo Alto Networks.
Okay, PANW.
Yeah, PNW.
Oh, wait, did you say Ulta?
Yes. Yeah.
Okay.
You still shopping there?
All the time.
Yeah. Ulta comes out after the market.
I mean, the options markets aren't great in Ulta, but
Yeah,
They're not.
But I like it as a company.
You don't want to trade it from an option standpoint.
brand.
It might be something you're interested. I mean, the real news today is like Marvell and some of these other.
Yeah.
Marvell up $45.
I got you.
Yeah, HPE.
I got you.
Was up
I got you.
All right.
Well, hey, getting to the first headline of the day. Investors are piling into bullish options bets. Another sign the stock market is getting overheated. The call-put ratio hit the highest level since January 2021. That peak sort of meme stock juiciness. Semis have gone parabolic. SOX is up 89% year to date. There have been record monthly equity allocation surges. Where do we go from here?
Yeah, I mean,
This is the opposite of what this was the opposite of the headline you had in late March when the markets were making lows and allegedly, fund managers were
at the
reducing.
lowest allocation.
Yes,
yeah.
exactly.
I think some of this, and I kind of talked about this with Jamal yesterday, I think the numbers have gotten really big and the moves have just been incredible. And I think for a lot of people, rather than buying a handful of shares of SPY, and SPY goes up $5.
You mentioned this yesterday,
and you make $25 on that, 5 shares of stock. It costs you,
You can make 1.5 million just buying some stock. No, I'm just
No,
kidding.
but I
You just
think-
need to buy SOX or DRAM.
Well,
or,
I think people, instead of just buying shares, and because of the information that is out there in terms of like option education from tastylive to a million other places, and tweets and all this stuff, I think people are gravitating towards the leverage and just the buying of calls because, one, the market just goes up every day.
Sure.
2, it's really expensive to buy shares and the relative return is so minimal. And you know what? A lot of people say, you know what? I'm gonna risk $500.
Sure.
And I'm gonna buy this call.
YOLO.
And you get a Marvell type move, and that call goes from $500 to $5,000.
And you are a stock genius.
And you're a genius. And that's what the market has been for the past couple months. Does it last forever? Probably not. But, I think that's part of what you're seeing here is that, things are very expensive right now in all facets of life, and it's no different here. So
Two things to point out. Bullish sentiment is above its historical average for its 5th straight week. And historically, an analyst from Bank of America says June is the worst month for stocks in a midterm election year.
Ooh.
So
That's true. Then there was the other headline was we've never had a market correction in June. I mean, that was yesterday's other headline.
sure.
I mean, there's always.
Yeah.
I mean,
you can cherry pick whatever stat you want. It's a curve fit.
And I agree. I believe we're overextended. And yesterday looked more like the market might give it up a little bit. Like oil was bid, bonds were weak, gold wasn't.
Iran said no deal. I thought we were cooked.
Iran said no deal. We've
What
had
do I know?
everything. And now today we are down 15 handles. We were down 35 handles earlier, but you've got the opposite. Bonds bid, You've got oil down, you got gold bid. I mean, nothing seems to upset the market.
Nothing makes sense.
And nothing seems to matter. It doesn't. And, that's what happens in a bull market.
Yep.
This next headline comes from the, that's a shame, department. Jury finds Andrew Left of Citron Research guilty of securities fraud, and he faces 20 plus years of sentencing. He was found convicted of 13 out of 17 counts, and he allegedly made $20 million in profits from his alleged manipulation. He will be sentenced in August. Jury found Left guilty of tweeting false/misleading info to move stocks, then trading against them. Citron Research would famously go after companies, but now the case puts in the spotlight on activist short sellers.
I don't think anybody's having like a Poppy Day for him. Poppy, the little things that you used to give out when you would donate.
From the Great War?
Yeah.
Cool. Topical mention, Boomer.
I don't think anybody's worried about him right now, but
I think this is crap.
This is horrible.
You have people like Ackman who was, shorting into his doomsday call. It's just, I don't know. You always get the little guy, and it's like all the other ones.
Is this the little guy? I don't think this is the little guy.
Yeah.
Well, it is.
million?
It is interesting. There were other people that were prosecuted under this, but the Trump administration dropped those cases. This case was started under the Biden administration, but it has stood. So that is
What about every
interesting.
one of the celebrities that pumped meme coin?
Yeah.
Or like Floyd Mayweather.
And instantly liquidated 1 million people off of something in Banana Land. Like some of the stuff he's put out has been, I don't think it's all been fake, but
But it's a blurring of that line between this is my opinion as, a research firm, and then this is outright manipulation of that market. Like that's where they're saying he crossed that line from.
Yeah, I feel like it's just
they're gonna appeal. I'm sure
he's just the one guy that kind of just went down with the ship when there's 1,000 other bigger fish to fry.
And just because there's others, that doesn't make this less wrong.
No, I'm just saying there's bigger fish that you could actually go after that are out there in the open every single day, and
Go for no further than Elon Musk. We would talk about it for years. How he was the CEO of a company, and he would talk about our numbers are going to be absolutely fantastic.
Sure,
and stuff. You're not allegedly allowed to do that. But it's the way.
No alleged about it. No, you're not allowed to do that.
Some sort of make some sort of requirement legislation where somebody tweets something that breaks the rules, they get a fine. Something.
Sure.
I don't know.
This is everywhere.
Well, we'll see what happens. In other news, Binance is launching trading of 7,000 U.S. stocks and ETFs for non-U.S. users. B-Stocks tokenization is coming. Users can trade stocks with USDT, USDC, BNB, and other supported crypto. Binance has over 300 million global users. They will also offer a $5 minimum fractional share purchase option. It places Binance in direct competition with other global online brokers.
It's coming. I think everybody's going to have, fractionalized, tokenized stock trading. I don't see the benefit to most people, but I think it's going to be.
But again, this is for the non-U.S. market, so maybe that's where the utility and the benefit lies. So people that don't have access,
I think that'll be the case for all of them.
Yeah,
because once it's tokenized, you don't need any sort of clearing firm to handle the transaction. If it's tokenized, you could transact from anywhere with any dollar amount because it's all going to be, recorded on a blockchain. So I think it's good.
How do you play this sort of advancement in technology? Is it through Bitcoin because everything's tied to the blockchain? Are you trading like a traditional brokerage then, or
It's interesting because if you look at all this, like,
do you use stablecoin like a Circle?
Yeah, I guess maybe you do a Coinbase or Circle's probably another interesting one. But if you look at all the like CBOE, CBO, CME, ICE, all those stocks have gotten absolutely whacked.
Oh,
Like CBO was it went from like 370 to 300 in the last like 2 weeks. So maybe some people kind of scared that this is changing. But
Interesting.
CBO is going to do this.
Yeah.
Like all the exchanges are going to be tokenized. I imagine they will be in short order.
But SIBO has taken a big hit from, like you said,
Yeah, it's a
360
huge move.
Yeah, huge move.
It's down 20%. It's bear market.
Yes, yeah.
tell
fair market
Craig
territory,
he
yeah.
has some explaining to do. No,
CME.
CME is okay.
CME is worse than that.
Oh, no.
325 to 250 in 2-3 months. That's a bear market. Oof.
What is Bitcoin doing this morning?
They're getting
Hit
killed.
again.
Oh no, okay.
Down $2,200, under 70,000, 69.4. I mean, that's the first time we've seen Bitcoin under 70,000 again since like April of earlier this year.
Well, maybe it was off on this news that Strategy sold 32 Bitcoin for $2.5 million. Its first sale since 2022 to fund preferred stock dividends. They still have 843,706 Bitcoin remaining in their treasury, but it's their second Bitcoin sale ever.
They need to because MST
out.
can't do anything else, right?
Yeah, I think this is probably not a short-term good thing for crypto.
MicroStrategy down on the $5 too to under 145, close of 149, closer to 150.
Yeah. I will say this sort of thing, the capitulation, usually signals like kind of a bottom.
Okay.
Like this is like the guy has been talking about how you should sell your kidney to buy Bitcoin.
Yes.
And now he's got to sell some Bitcoin to, pay some dividends.
Kramer also got a little bearish on Bitcoin too, kind of rethinking his whole thing there.
The company said that the sale proceeds would fund their STRC preferred stock dividends and that it was not a sign of financial distress.
Sure. Nothing to see here. Nothing to see here. We just have to sell something so we can pay our dividend.
Sure.
Think about it.
Don't worry about it. Just nothing to see over there. Hey, in a crazy announcement, HPE surged almost 30% after hours after crushing Q2 estimates. Their revenue was up 40% to a record $10.7 billion. AI systems orders of $1.8 billion and a record backlog in Q2 contributed to all of the gains. Their networking revenue was also up in double digits. The CFO raised 2026 free cash flow guidance to $3.5 billion, check.
Everything just goes up.
Yeah.
Have you looked at the options? Don't look at them yet.
Oh, options in there are probably horrible.
So,
I mean, it's hard now that the stock
three-
up $12, $13 though.
no, I
at
know,
what the
but I'm saying marked as from yesterday. What do you think the 65
The stock was $48 or something.
stock was $47?
Yeah.
What do you think the 65 calls traded for? Let's just call it
How much time?
3 days. The 65
would've
strike
said-
calls is a 50% increase.
I would say a nickel. I mean, that's what I.
$1.75. I sold them at $1.75.
Yeah. And you're still going to be okay.
Yeah.
Whoa.
Yeah. With 3
But
days
that's
to go.
these stocks, some of these going into earnings, they're pricing as if they're doubling,
Right.
if not tripling some of these stocks. I mean, you're talking
Like
about
you're Hewlett Packard. Calm down.
it's just.
I think I have a Hewlett Packard copy machine.
A printer?
Yeah, printer. Thank you.
Yes,
Hello.
Is that what they're called?
Like I have a facsimile machine.
Is that what they're called now?
It's just unbelievable.
So we call them like all-in-one printers. So we don't just okay.
The scanner printer combo.
Yeah. Print, scan, fax,
Yeah.
whatever you want to do. Hey, Anthropic confidentially filed
You
their
don't have one, I bet.
I don't.
I don't. I have to print stuff either here or at my parents' house.
Yeah, see, because I'm independent.
Yeah.
You don't need no man.
That's right.
Anthropic has confidentially filed an S1 with the SEC. It's the first major AI lab to initiate a public offering. Anthropic's latest valuation coming in at $965 billion. Anthropic says their annual revenue run rate is $47 billion. They're targeting an October IPO. Love that, fall season for them. But they are growing faster pre-IPO than Google, Facebook, or Zoom did at the same stage.
Yeah, I think it's a race. I think it's a race to
But they beat
Get
OpenAI to their filing by
Yeah.
just days, so we'll see.
that. But I mean, yeah, that's a huge win. I think out of those two, the first one to IPO is going to have the upper hand because the liquidity is going to be.
First one to file usually gets the better divorce settlement. That's just how
Well,
it is.
and Anthropic is less encumbered by the lawsuits that OpenAI is facing from just a multitude of fronts.
Sure.
So
Sure. I just think it's the liquidity situation of those $2 trillion ish.
Yeah.
Of liquidity in a handful of days. You got to be the first.
You get $1 trillion. You get $1 trillion.
You got to be the first. But SpaceX will be the interesting one. If you've looked at
T-minus
Cerberus.
10 days. Yeah, 10 days.
Cerberus is down like 50% from where it IPO.
Oh, Cerebras?
Yeah.
Cerebrus, whatever.
Cerberus.
Yeah. Cerberus?
I call it.
Cerberus? The pool?
Whatever you want to call it.
Yeah.
It went from 380 to 240.
Oh, wow.
Yeah.
Scoopy.
220.
NVIDIA and Microsoft have unveiled RTX Spark, a 1 petaflop, love that, AI super chip that will reinvent the Windows PC. News of NVIDIA just returning to the personal computer market yesterday sent a bunch of the chip stocks lower. Then more news came out about this partnership with Microsoft and a petaflop and all this jazz. What are you doing in NVIDIA or Microsoft?
Up about $3, 227 and change.
We got long some NVIDIA. This will be a good move.
Nice.
Got some diagonal spreads.
Good job out of you.
Yeah. But, I mean, the NVIDIA is not the sexy name. Any of these other, your Marvells,
it's the
your
big
Dells,
elephant in the
your
room.
HPEs, everybody's looking for the smaller cap. These are still mega cap
Well,
companies.
they're not looking for the $3 move. They're looking for the $30 move.
Yeah.
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 That's why those calls were priced at $1.50.
Exactly.
So what are you doing in Marvell this morning then?
Hopefully I have a position. Up
I don't have a story about it. It's just up for.
Yeah.
$45 or so.
Jensen said it was going to be $1 trillion company. So
Oh, okay, cool.
Here's-
Thanks,
yeah.
Jensen.
It's up $40 right now, flirting with 260.
But that's not illegal.
Right.
Well, it's not his company.
And it's just his opinion.
Yeah. Yeah.
But they did invest like $2 billion in it not too long.
They've invested in everything.
Yeah.
I guess that's one way of putting it.
In other news, Alphabet is.
Although I have a bakery in someplace up north that really could use some help that I invested in, so go there. Jimmy Bread.
You should make it a meme token.
That's right.
Yeah. Buy the
Google.
meme token. We're not going to dump on you.
Alphabet, the parent company of Google, is going to raise $80 billion in equity, including a $10 billion Berkshire stake to fund a record AI build-out. What could go wrong? Alphabet's 2026 total capex is $180 to $190 billion. Compute capacity is what matters right now, and to dominate, you need to just keep selling bonds. Alphabet already raised $30 billion in bonds in February and $11 billion in European debt. Has this gone too far?
So we were talking about this a little bit before the market opened here today. You had a little bit of a take on this because money is, let's call it, you said 3%. Let's call it.
I said for a company like Google, they could borrow money at basically zero.
Fed fund rate. Yeah, sure.
They're going to get below market rates.
Okay.
Below whatever the short-term rates are. They're not.
They're going to get the insider bank rate.
Yeah.
Yeah.
They have some credit. It's a $4.5 trillion company.
Sure.
Like they're okay.
Sure. You're going to get paid back.
Yeah, I think it's interesting. Well, I think it
Stock's
makes a
down
lot of
$10.
sense for Google. It makes a ton of sense. I mean, you're diluting. It's a share offering, so like
Right.
the owners of shares are being diluted 2%.
Sure, and that's why the stock fell after hours on those worries of dilution.
I think just the takeaway from it is interesting. You could kind of spin it like, if you could borrow money for free, basically.
Hell yeah.
Why wouldn't you?
Everyone gets a jet ski.
Well, why wouldn't you get debt? The debt, this is straight up saying like, okay, I'm giving away money. I'm taking money from shareholders. I'm taking value. That value, like if the stock goes up 2%, you miss out on that 2%. From Google's perspective, you're selling shares. The company is selling shares here. So versus raising debt, where if the stock goes up 10%, you pay for the debt and then some. So like it's an interesting thought of like, the company is selling shares into highs to get some liquidity versus just going to the market and just asking somebody for free money.
Sure.
So it kind of tells you a little bit, like you wouldn't do that if you thought the stock had 25% upside. You know what I mean? Because
interesting.
You're
not necessarily because the company's putting it in Berkshire's hands, which is a lot better than putting in
$10 billion
Batista or Tony.
That's 10% of it.
Yeah.
12% of it.
Well, they've been buying since it even says here since Q3.
All I'm saying, if in a year, if the stock goes up 20%,
the company doesn't benefit from that. But is that by the company doing this? Did the stock go up 20%, or because it put it into hands that are not going to sell and put it back out into the market?
Yeah.
Diamond hands.
So you
that's
gotta,
an
it's a
extrinsic
business
value question of like.
I'd rather dilute and put it into a fund's hands than dilute and put it into your hands or my hands or
Rude.
Nikki's hands.
Yeah, sure.
Look to scalp it, trade it.
All I'm saying is if the stock goes up, let's say 10%, Google misses out on $8 billion of revenue, and they would be paying close to $0 in interest.
Yeah.
There is a spread there.
But yet you would say at all-time highs, diluting is not a bad idea.
But that's what I'm saying is like if you think.
But I thought you said I was all right, Spider.
But no, I'm saying if you, as a mega cap, if you think that the upside is capped here, this makes more sense than taking out debt and having more upside exposure. That's all I'm saying.
Yep.
If this is a one-off, I say, okay, no big deal. But if every mega cap starts doing this, it's telling you that rather than funding via debt, they're going to fund via the share price, which is essentially selling shares. Like they are selling these shares. They are short selling $80 billion of their stock right now.
And I'm to backtrack a minute on the whole Andrew thing with him being found guilty as a short seller. I'm getting a lot of feedback saying that he was doing things that weren't matching what he was saying publicly.
Yes.
So
that's where it was manipulation.
So,
right.
Yeah.
Right. So that makes it a little bit of a different story. If I say I'm short Google and I think Google is going to go bankrupt, you're just talking your book and saying what you're doing. But I'm saying that trying to accumulate shares.
Ackman was doing that exact thing. He literally went on CNBC
allegedly, we don't
at
know.
The bottom. No, you could look at all of his filings. He was scooping and then telling everybody hell is coming on CNBC. With
markets in turmoil.
With 100x the size of this little small fish. That's
allegedly.
Hey, I got to keep it moving here. Salesforce jumps 10% after acquiring Contentful to build an AI native content layer for Agentforce. That's a hell of a sentence. CRM shares were up 10% yesterday on the acquisition. Contentful has 4,800 customers. The financial terms were not disclosed, but Contentful was last valued at $3 billion. Agentforce agents could ask for, assemble, and then publish digital content without manual steps.
Well, it's back down 5%, $200 after flirting with 210 yesterday. CRM's a tough little good trader, meaning Ivy Rank is pretty good in there, 82, probably one of the highest ones on the board.
I got short some of these yesterday, which will hopefully work out.
Some of the
today.
SaaS?
Unless this get instantly bought as everything else has every single morning. But some of these charts, I mean, like Snowflake, I know we had good earnings. And the company made like $1 per share. But it went straight back to all-time highs within 4 days.
Yeah.
I mean, you're talking about like 40, 50% moves.
Totally normal.
You look at Datadog, it's the same situation. Like, I'm not sitting here short these stocks, but you got to think that like sometime there's going to be.
Right.
Sure. Datadog was up 89% for the month of May.
Numbers are unbelievable.
Everything
But it's
is
a trade.
stats.
It's a trade. Also, just to be clear, I have the position on, okay? No lawsuits here. Please.
There you go.
FedEx Freight begins trading on the NYSE under the ticker FDXF, completing its long-awaited spinoff. Again, it's a 1-to-2 share distribution ratio. There's going to be $4.1 billion cash dividend to the parent of FDX. There's been a number of companies that have been splitting off some of their units with mixed results. You see more success in like a GE than you do in some of maybe like the Kellogg spinoffs or all that other jazz. But just FDXF, just letting you know.
Okay.
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 I don't know. We'll wait till the options come out. And
FedEx Freight is the largest LTL carrier in North America.
I mean, that would change the price of FedEx, right?
doesn't seem like it, as FedEx is just off of all-time highs, 338 and change made yesterday. It's unchanged today, down $1.
Yeah.
I don't know how the back end of this works.
Yeah. What is it?
FDXF.
Yeah, it's here. Huh. Okay. Yeah, I will have to look into that
Okay.
more. I don't trade a lot of FedEx.
Sure.
I mean, it's near high.
But it's like a transportation play, just like
Yeah.
a straight logistics play if you are into that. But it automatically gets added to the S&P 500 DJ Transport Index. So. In other news, GM, UAW striking out at a GM axle supplier, and nearly 1,000 workers walk out, threatening Silverado and Sierra output. 1,000 UAW workers are on strike, no contract, no axles. GM is trying to add a 6th production day in June, just as the axle supply is threatened. 98% of workers authorized the strike. What are you doing in GM? Because GM had been surging. This is bad.
Yeah, when does this get added to the Trump portfolio?
Oh, there you go.
Yeah. GM, Ford, right? John
GM
Deere.
82 and change. My buddy Kenny's long Ford. That's his big play. It's had a nice run from 13 to 16, but that's where it sits.
Yeah.
They're American companies, you know. You gotta
Yeah, you gotta
put them in the portfolio.
get in there. Hey, Blue Origin's launch pad may not be restored until 2028 after the New Glenn rocket explosion, and it puts the Artemis moon mission at risk. Oh no. There's a moon-based contract that NASA has extended to the Bezos-owned Blue Origin, but Blue Origin has no other launch pads for New Glenn, and the vehicle has been grounded indefinitely. Luckily, no one was hurt, but the spectacular explosion, many people were saying, now this is a cinematic map. Like, they were like, AI could not recreate this. Like, it was so intense, like... You know, Hollywood was like foaming at the mouth for it. But again, luckily no one was hurt. But you do have other companies like Rocket Labs, because people thought maybe that was the rocket that exploded, but it was not. Again, it was Blue Origin. And you can't trade Blue Origin right now. You can trade SpaceX like in 10 days, but you can't trade Rocket Labs and some of the other space stocks. So
Or Amazon or Space.
Yeah, Amazon.
SPCE, which I'm going to be losing
Virgin
some money
Galactic,
on
yeah.
this morning, bought some shares yesterday.
Very nice. Look at you.
You know how degenerate this market has got? So Jamal pitches it. He's like, yeah, this, you know, like you see an insane call volume. It was 100 million shares, all this stuff. You remember this stock from
it's in Virgin Galactic. Yeah, it's Richard Branson.
Yeah, but it went nuts like during the pandemic.
Yeah. It was almost like meme-like.
So it's a play on kind of just the you know, like space with
space race.
SpaceX coming. Even Frankie was buying shares. Okay, so when Frankie chatted me and said,
And he's like,
That's how you gotta go contrarian. You gotta go contrarian, man.
he said, I'm buying shares and selling strangles, and I said, okay, so I did that.
All right, very nice.
We'll
Very
see.
nice. And
We'll see
Rocket
how
Labs
that
is up about $3 too. So
Yeah.
no matter where you went, you get paid.
McDonald's is launching its next strategy. It's the new strategy name, and it includes automation, menu innovation, and AI hospitality. Archie, the automated ordering system, is being piloted. I hate drive-through AI. I hate it with the passion of 1,000 suns. But it will be 4 pillars: menu quality, consumer connections, operational efficiency, and hospitality reinventions, with bigger bets on chicken, beef, and beverages. What else is there? But what are you doing in McDonald's?
McDonald's has been an absolute dog. It's kind of surprising here.
$2.74, down another $2 today. Probably going to be flirting with lows it just made late last month or early in May.
Yeah, I've got a little long delta, but not a big position here.
Ivy rank of 64 is pretty good. Probably,
Hey, I might have did something.
Probably warrants a trade. You may have did something. Market's going to be a little bit wide in McDonald's.
Yeah,
I've been in and out of McDonald's last.
We've traded it a handful
Yeah.
of times. Pretty
Yeah.
good.
Yep.
Hey, in sports news, Myles Garrett got traded to the Rams for Jared Verse and 3 picks. It's the biggest defensive trade in NFL history. Garrett won back-to-back NFL Defensive Player of the Year awards in 2024 and 2025. The Rams go all in to win now alongside reigning MVP Matthew Stafford. In fact, iconic former Rams player Aaron Donald said he might even consider coming out of retirement. Donald's only 35, so he's not like super washed. So just putting all the things together, I guess. Thoughts?
Yeah, I mean, it makes sense. They're a contender.
I love that he's dating Chloe Kim. She's a gymnast.
Oh,
They're super cute together.
wow.
Like, yeah, I like when there's crossover, like the pop girls.
Just making a super athlete.
Yes, he's a good boyfriend.
Yeah. Okay,
Yeah.
Good.
Yeah.
Yeah. Good for the Rams.
Yeah, good for the Rams.
Yeah, they got
They got a stud.
Yeah.
Hey, as I was,
And he goes from like a 2 and
Yeah, like the worst team.
I mean, it's a huge lifestyle upgrade for him.
Oh
No
my
offense
God.
to the city of Cleveland.
oh
but
yeah. I mean, he's big pimping now. You
Yeah.
kidding me? This is
yeah,
great.
it's great. As I traversed a lot of this great country during my vacation last week, I just have to tell you, I am a Buc-ee's super fan. I got to go to the Buc-ee's in Georgia. I went to the Buc-ee's in Tennessee. There's a Buc-ee's in Kentucky. And so I've been to Buc-ee's. I've been to the Buc-ee's in Missouri. Been to the Buc-ee's in Amarillo, Texas.
The Buc-ee's all around this
I
land.
know. I love it. Their smoked turkey sandwich has a chokehold on me that I cannot describe. And you can get Bluebell ice cream. As a girl who was born in Texas, I love being able to buy pints of Bluebell ice cream because you can't get it.
Good.
Yeah, it's good. I love the chaos that is Buc-ee's, but this guy
I wouldn't follow the signs that say 257 miles to the next Buc-ee's.
always
to get the
locked in. I'm always locked in,
the
and it
Bell
keeps,
ice cream, but
it's,
sure.
it's great. But this guy has a $100 million business idea. Sharks, are you ready to invest? Watch
All right.
this.
I want to make $100 million in Nashville. Open up a Waffle House and Buc-ee's down on Broadway. We have enough celebrity bars. We need hash browns. We have plenty of street meat. We need brisket. Waffles, beaver nuggets, amazing merchandise. And can you even imagine, after a night on Broadway, stepping into the cleanest
Yes!
bathrooms in existence? It'd be
Yeah.
heaven. It'd be perfect. And you could go low-key like this, or full blast waffles and beavers. This would change the city forever. It would make a lot of people very happy and a few people very rich. Just a thought. And now I'm hungry. If you
I
want to make
like it. I
100
like it.
Waffles and beavers.
Yeah, it's open 24 hours, so I love it. I love it.
And their bathrooms are the cleanest.
It's so
in the entire
clean.
world.
So clean.
Have you
so
ever been
nice.
to Buc-ee's?
No.
You gotta go on you gotta get a road trip. You gotta go to
300
Buc-ee's.
miles. I'll just take off, today.
Go now. You'll be back by
Yeah.
the morning.
Yeah.
There you go.
After the show.
I mean, the brisket is worth it. They make like a brisket burrito. I think you would really like it. Anyway, what's coming up next?
Getting eggs too. You can,
Yeah.
if you get there early, you can have that too. So you're all good. We'll take a quick 90-second break. Come back. We got more Tasty Live right after this with a little bit of a look back from yesterday. Confirm and send a whole lot more. We'll be back in 90 seconds.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. tastytrade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join tastytrade today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right. What comes up next?
We're going to take a little look back.
That's right.
Let's see what happened.
Let's do it. Index performance for June 01. That was yesterday.
Frankie's trying. See, Frankie, I love a quick trip. It's one of my favorite stops on a road trip is a quick trip. Have you been? You've obviously been to a quick trip.
Yeah.
Quick trips are great. They have the iced coffee there. They got the little sandwiches, little snacks, cheese and meats. It's great. I do not agree from what I've seen from a Buc-ee's. Frankie's saying, quick trip. It's basically a Buc-ee's.
I think the closest Buc-ee's is a couple of 100 miles.
Yeah, but I don't know if you can compare those two. It seems like Buc-ee's is on a different planet.
Buc-ee's is a cult following 400 miles away in Kentucky.
There you go.
Yeah, you ain't going. That ain't no quick trip.
So, all right.
Yeah. Index performance for June 1st, yesterday. Go.
Yeah, so it was another strong day. I mean, we didn't go anywhere for probably 4 hours.
Yeah.
It was the first couple hours of the day. We rallied back. We had a little bit of weakness in the morning, and then it was off to the races, and we basically settled at the highs. NASDAQ was the same thing. The Russell, the weakest of the group, was selling off a little bit, but it was another buy the dip day. Any stock that you were looking at, we managed some positions in like AMD and BE. Like AMD was down like $25 at one point. It ended the day down like $3.
Right.
Like it was just a routine buy the dip across the board.
Dips aren't even dips. They're one.
The
down.
dips are like
they're a down opening.
Tiny little micro dips.
Right. It's not that interesting because Russell's almost unchanged, but Russell's the strongest of the group.
Mm-hmm.
Dow, mini S&P. Dow's the weakest, I guess. Next slide, please.
when we look at the Mag 7, NVIDIA had a big day, but it's just kind of been, it hasn't been.
Almost felt like a down day yesterday, even though even the S&Ps and NASDAQ were higher.
Yeah.
Almost.
A little bit. There was some movement to the downside.
Yeah, it was moving.
Yeah. Microsoft had a nice day too as well. It's down a handful this morning. The rest of the group down a little bit here. Meta
Apple Ivy rank is high. It's been up the last couple of days. It's in the 40 range. I put on a position in Apple yesterday. We'll see how it goes. You scared of selling calls in Apple?
I'm not selling calls into anything. Do put diagonals, put calendar spreads, something like that. I don't think it makes sense to sell calls and anything into this.
Okay, next slide, please. I did.
In terms of the movers, so you had tech up pretty nicely. Energy was up as well on the backs of what was like, what was the high in oil, like 95 yesterday?
You're talking about front month. Yeah, it got as high as 94.78. Close enough.
Yeah.
Back down to 91. That's what I was talking about yesterday. Oil was bid. Volatility was bid
for a part of the day. And into the close, they bid volatility.
Yeah. And it's down today. VIX down 22 cents. I don't know. Weird markets.
Yeah. You had a little bit of a bid in some of the mining stocks as well. But mixed bag across the board. It's always been tech kind of leading the overall direction of the market here.
Yep.
When we look at the biggest movers to the upside, so you had MGM, that's a takeover, right?
Yeah. Barry Diller, I believe is his name, making a play for it. 84 years old. See that? Kenny Weiss, my buddy, he's 84 years old. He's not buying an MGM, but Diller is. What's he doing at 80-something years old?
The rest of the group, some of the high-flying tech names, you got Dell in there. Datadog, which has just been on fire. Oracle had a nice little bounce. It's now down here this morning.
CRM's down too.
ServiceNow, some of the software names.
I mean, NVIDIA up 6% doesn't even make the list.
Oh, yeah.
MU up 6% doesn't even make the list. I mean,
that doesn't get me out of bed.
That doesn't
6%.
Palantir almost.
We're double digits or nothing at all.
Right,
I mean, the CRM at 9.68%. Oracle just under 10%.
ServiceNow just made the list up 9%.
Yeah, who cares?
I mean,
nothing.
Is quite a list.
Gains for ants.
Yeah. It's ServiceNow, by the way, 126 after trading up to 137, 138 yesterday, down around $8 or $9. So it might make the list on the other side today.
On the downside, SIBO, which we mentioned earlier in the session here, it's had a pretty decent sized pullback here from the highs. You had Qualcomm giving it up a little bit, CME in there, Meta, it gets a one-day bounce and then it goes back to 600. It's there today, this morning. You had Ford pull back a little bit, Tesla as well. Maybe starting that sell to buy some SpaceX, but a little bit of a downside move. I mean, none of these are too scary of a move given where most of these stocks are.
True that.
We look at the heat map here. Again, it was another day where a bifurcated market. Remember that?
I do. I don't know how to spell it, but
I don't know how to spell it either.
Okay. I do remember from yesterday. It was the word of the day. It was the word that I learned.
Very bifurcated. Huh? Lots of big ups, lots of big downs, not a whole lot in the middle.
It looks more bifurcated to the red side here. Yeah.
Well,
I almost said it felt like a down day.
Well, that's what I'm saying. It's more red, but the market's up.
Yes.
That's bifurcated.
Yes.
It's like
that's the definition of it. I looked it up.
Definition. It's
a beautiful word.
Not a lot in the middle. It's not like a choppy, like, oh, this was like, kind of 50-50.
Right.
It's big on both sides.
Bigly. Good job, buddy. We're going to take a quick 90-second break and come back. We're going to come back with a little bit of confirm and send right after this. Let's Tasty Live.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is
how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. A look at, viewer emails. Before we do, let's see what's going on with the market. Even the S&P down just around 16 handles. Last night when I went to bed, they were down around 35 handles. I thought we'd have a red day this morning. I didn't think we'd have a red day of only 16 handles. I was wondering to myself, I was going to say, you know what? If even the S&Ps are down 50, 60, is it a buy the dip? Is that enough? Or is this day one? That's what I was thinking. Now, I don't know what I'm thinking. NASDAQ down 34. Russell's the only green of the indices, up $1.40, and the Dow is down $2.26. Crazy thing to me is volatility down 24 cents. You did talk about it getting bid a little bit on the close yesterday, which it did, over 18.27. Now 17.83, down 22. It does not make sense. It does not compute. Bonds up 18, 112.25. Bonds go higher. Rates typically go lower. Bitcoin going lower, period, regardless of what rates do, down $2,500, under 70, flirted with going under 69,000 at 69,200 right now. You can see this fall over the last 2 weeks without really an uptick. Ethereum doing the same thing, back under 2,000, 1964 is the low, 1981.
When you're mentioning bonds, we have an iron condor there, so I just closed out the put spread for nothing.
Yeah, 3 ticks. Beautiful.
Just I'm still now.
It's a bad trade. Is your call side? I haven't looked at what you call.
Yeah, the call side is like at the money, the 113, 115.
Yeah.
I mean, we're out like 10 ticks.
Yeah, you got 24 days left.
Yeah. But I just legged out of the put spread because it's worthless. Like
it can only go down 3 more ticks.
Yeah, there's nothing left to make.
Get another $45 or something like that. Good job. Oil down 73 cents to 91.43. Flirted with going under 90. Flirted with going over 92. It's right in the middle at 91.40. That's oil bid yesterday, as you can see. Flirted with 95. I don't know. Crazy time. Gold, good sale of your long in gold. Trade up to 71. Now trading 45.47, up $41. Silver up twice as much as gold, up almost 2%. Let's just put it that way. Net gas, which I haven't mentioned in a while, quietly coming down from around 3.4 down to 3.12, still over $3. You remember most of last month spending it under $3. On the movement front, HPE, we talked about it, had earnings. It's trading $60, up around $13.
Yeah, it should be a good one.
That should be a good one for you. Good. Marvell, MRVL, NVIDIA, Hong says next $1 trillion company goes from 219 to 245, 246. That's all I got.
Cool.
Google down 10 with a little bit of earnings, a little bit of stock offering.
Tuesday, June 2nd.
Go.
Let's do it. How do you figure out max profit on a diagonal? Also, how do you decide when to close or manage?
Yeah, tough one because it has a volatility component to it. It has a delta component to it. Let's just say you're doing it the way time component to it too. I don't know what the max, I mean, I can tell you what the max profit is going to be on your $10 wide spread, meaning you bought the 140s, sold the 150s, you paid X for it, hopefully $4, $5, $6, $7 for it. You can only go to $10. So that would be your max profit on it. I can't tell you on each one. If you bought it at $4, your max profit is $6. If you bought it at $7, your max profit is $3. I can't tell you when that's going to happen, but the closer you get to expiration, obviously, the closer you get to max profit. It's a omnidirectional strategy. If you do a call side the way we do it, buying a call closer at the money, selling a call further out of the money, shorter dated in time would be a bullish strategy. The opposite for the put side.
Yeah, there's a variable of.
That's why when you look at it on any tab that analyzes a trade, it won't give you anything. And then you can set the different. You can change the volatility going higher to fit your long strike.
Time passage. Yeah, the width of the diagonal is roughly like a home run.
Yeah, the $10 width is.
But you can look at this like, okay, I'm selling the call to like reduce some of the cost of buying the long call, and then I want to hold the long call, until expiration.
And make it almost like a poor man covered call or something.
It's like there's a variable there. So ultimately, if you're looking at this like a trade, think of it from like a return on capital standpoint. If you did a diagonal spread for $5 and it's at $7 and you're making a 40% return on it, like maybe you take it off the table.
Right.
If you're still bullish or bearish, whatever the direction is, then hold it. But, you can't, it's so hard with stuff that's not, like when you sell a put, you can only make so much. It's pretty easy to say, I sold it for $1, it's marked to 50 cents, why hold it?
The interesting thing about this is, you're looking at worrying about your max profit, worry about your max loss. Whatever you pay for the diagonal is your risk.
Yeah, that's probably the bigger benefit.
Yep. Honestly. Next one, please. The close for OKLO on May 29th was 66.88. I was sure my covered call at 67 was safe, but unfortunately my stock was taken away. I know I don't have the right to do anything since I sold the call, but usually it needs to be at least 0.01 in the money before being called away. Why did my shares get called away?
So I'm just looking at it now. The high was 70.01, but that doesn't include the overnight, the extended hour trading. So the extended hour, the stocks trade for another 30 minutes after the market closes. And those options have 30 minutes where they can be exercised or assigned. So that's expiration risk. And so what happens sometimes is if a stock rallies into the close or in the overnight session, whether it be from earnings, from a tweet, from a whatever, your calls are not expired. They expire from a trading perspective. You can't trade the calls at once 3 p.m. hits.
That's correct.
Central. But after you have another 30 minutes after the close where they can be exercised or assigned. And essentially that's what happened. That being said, the stock is now, it's up about $1 here, but yesterday it closed at 66.93.
More importantly, it opened under 66.
Yeah, so it actually helped you.
It was that. So just going to prove that nobody knows anything. Yeah. But the answer to this question is, which you hit, is when you sell a call, the person who buys it has the right, but not the obligation to exercise that option. And they could call their brokerage firm. Remember, if it's 0.01, it's going to be an automatic exercise unless they call the brokerage firm and say, do not exercise. Yeah. So it's not a given that it will be exercised, but you could pretty much play on it. The gentleman or the person is right there. If it closes under that strike price and that option closes at 0 or is marked at 0 or marked at 2 or 3 cents whatever the case may be. Usually it does not get exercised unless there's, like you said, some sort of news or event, or the stock trades higher in after hours and they sell stock after hours and they exercise their
exercise the
calls.
call, yeah.
Yeah, it certainly can.
But
luckily for you, it didn't hurt you in this one. It actually benefited you.
It could get extra. If the stock was at 60, it theoretically could get exercised.
Sure.
You have that right to exercise your call at 70 or 67, whatever the number is. But nobody's going to do that because they're going to lose $7 on the trade. That's the whole point. So the option had value, whether, that's probably the situation where stock rallies, 50 cents and it's at 67.25. Person sells stock.
That's why it's zero to close an option here that you already have on at Tasty Trade, I should say. So buy that option back for pennies and sell another option with more time if you want to stay in the stock.
Yeah.
Next one, please. With patent day trading going away on Thursday, I want to ramp up my trade frequency. Would you veer towards more zero-day trades, or would you just get more aggressive in managing, adjusting core trades?
I think for the most part, the biggest change will be the zero-day trading, if that's what you want to do. Obviously, keep your risk in check and don't overtrade, and don't let size get out of hand. All the things that we always talk about are still in play here. So I think for the most part, it's not going to change a lot for most people unless you're doing the zero-day trades. The change will be a huge positive, because if something does work really quickly, you're not going to have to sit there and be like, oh, well, I have to wait till tomorrow because I can't get the stupid PDT, hit. So that's really what's going to be, if somebody does a put spread or sells puts and the stock rallies in the middle of the day and they want to take the money and run, they're going to be able to do that now without having an issue. The zero-day SPX stuff, it's going to be a lot easier to manage too, which I think will be the positive. But nothing from a size, trade frequency, I don't think any of that should change for most people.
I agree. I don't think I have anything to add. I don't think you should be looking, especially if you've been successful in whatever you're doing, you shouldn't be looking to do any of these things just because of patent day trading away. What you should be able to do is manage your trades more frequently.
Yeah.
Good thing.
I think that's the biggest draw here.
Next one, please.
What do you think could cause the market to fall and stay low for more than just a month or two? Is it even possible, or is there just too much liquidity?
I mean, not a matter of if. I mean, it's when the market has some sort of correction. We had one in March. Maybe it won't be until next March because we had one the March prior to that. I'm just going from recent history here. It's going to happen. I don't know when it's going to happen or how much further we get extended. I mean, anybody will tell you at all-time highs, you're always extended, right? I mean, we've never been here before. That's why they call it all-time highs. So I don't know. I don't think there's too much liquidity or anything else like that. I think markets are cyclical. I think it'll be a buy the rumor, sell the news kind of thing when the war finally does end for real, and not just when the president says it 20 different times that it's over. When it really does. So that's going to be my thinking, but we'll see.
Yeah, I don't know when it comes, and I don't think it really changes anything from a trading perspective.
No,
like you're still going to.
And nobody knows anything.
Yeah.
Going back to that exercise of the option, nobody knows anything. So just trade what's in front of you, which is the good thing. Right now, like you said, you can't get in front of it. I wouldn't sell naked calls in these crazy stocks, blah, blah, blah.
No.
Sometimes it's trades you don't make or the strategies that you don't do that are actually the ones that make you or get you into the chips. We'll take a quick 90-second break and come back. We've got an option jive coming up next. We'll be back in 90 seconds to Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
It's options.
Jive.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right, with this option jive. Even the S&P is down 21, about 20 handles off of their lows, about 20 handles off of their highs.
Crashing.
All four indices are red at the moment, as the Russell just went down $2.60, volatility up 17 cents. Bond still bid. That's all I got.
Cool. Let's do it. Reducing cost basis. The traders
and you.
So cost basis improvement is a powerful factor afforded to sellers of an option. Common questions arise between when we get the question of what is my basis? I sold this call for $1. I bought the stock. What's the basis? What strategies reduce cost basis? There's a number of them. And I think it's important to understand that it's not actually changing the value of your shares. This is just value that's coming in. You sell something for $1, it expires worthless. You keep that dollar. That's a cash value. You're not actually reducing your stock is purchased at whatever the purchase price is. So these are two buckets. But from a position standpoint, that value that you capture on whatever premium you're selling reduces your risk on that position. You sell something, you buy the stock at 100, you sell the 110 strike at $1. Your overall position is valued at 99. Yes. Right? You've collected $1, you bought the shares at 100, it reduces your overall position down to 99. So basis is the effective price that a trade is placed. So using a stock as an example, if you were to buy 100 shares of SPY, it was trading at 740-ish when we put this on. What's it at now, like 760?
That's the easiest way of looking at it. By looking at
so here you bought the shares $16 lower, 2 sessions ago. And so when you
pat
buy
yourself on the back, you're a great trader.
Amazing, incredible. So your purchase price
mystified your friends and neighbors.
Your purchase price and the cost basis are going to be the same thing. It's just whatever you purchase the stock at.
Beautiful.
When you are initiating a cover call, the purpose of the cover call is to improve the basis of the long or short stock position. So you can do this with short stock. If you sell stock, sell put, it's a covered put. Buy stock, sell call, it's a cover call. The collected premium reduces the relative purchase price of the stock while increasing the probability of profit. So it allows you right now to the ability to reduce your cost basis on your position as a whole. When you are selling a call against buying stock, the position as a whole has a break even that is below where the price of the shares were purchased. One way basis can improve is with a covered call. It's the purchase of a stock combined with the sale of a call option. Again, here's our example. Buy the stock at 100, sell the call at $1. Your cost basis is at 99. That's your position as a whole. You've sold an option for $1, bought the stock at 100, it puts you at 99. The same thing can be done with a put. So a covered put improves basis in the same way. So you're selling shares, you're selling put. It's the same exact risk profile, but to the downside for the stock.
Not too much to add here. It's just simple math.
Yeah. Mm-hmm. I think it's important to just understand that it's in different buckets. A lot of people say I sold the call for $1 and I closed it, but my stock is still marked at 100. Your stock is what it is.
Yeah.
The option is a different piece of the overall trade. It's all in one, you got to look at it in combination.
Mm-hmm.
But there's a lot of different ways to trade around a stock position. So improving basis before buying or selling a stock with the potential of being assigned stock, you can use a strangle to essentially get into shares at lower or higher prices. A strangle, when you take it into like a little bit of a different context, you're selling a put to say, I'm going to be long shares at X price.
Somebody could put stock to me, yes.
I'm selling a call. I'm going to be short stock at this price.
That's correct.
That's synthetically what a strangle is. A strangle is saying I'm going to buy stock here, I'm going to sell stock here, and in between is where you profit from, as if you had short stock here and long stock here. That's exactly what it is.
That's correct.
And you get paid to.
But do you look at it? Do you look at a strangle as a basis reducer? So
no.
So even if you were a long stock, let's say you were long stock or short stock, whatever you want to say, but let's just do it from the long side because it's easier that way. Would you sell a strangle and think of it as a basis reducer?
No, but you could look at it and say, you know what, I'm going.
You can look at it any way you want.
I'm long NVIDIA and Meta and Microsoft.
You're long SPY.
And then you could sell a strangle and SPY and say, you know what, I'm going to sell.
You can have my long stock at this lofty price. That's where you're selling the call. And I'm willing to buy more down here. You could look at it that way, but I don't look at it as a basis reduction.
Not on entry. I agree with that.
Okay.
I agree with that.
It may ultimately become one, but I don't look at it that way.
Yeah.
Next one, please.
One way to make this overall cheaper, if you don't want to buy the shares, diagonal spreads, which are calendars, diagonals, poor man's covered calls. In some respect, like a zebra trade is kind of a pseudo long stock position. Buying a longer dated in the money call, that's your synthetic stock position. You're selling an out of the money call, which is your covered call type position. It's going to significantly reduce the buying power on the position. You will be paying some extrinsic value, so you don't have the same amount of upside, but you're not using the same amount of capital. So using a poor man's covered call is a way to reduce the size of a covered call type, a traditional covered call where you're buying shares, selling call.
Right, but it's nowhere near the delta. I mean, you could do it as the equal delta to a covered call, like get 70 long deltas or something like that. But we do them, you're usually long somewhere between 15 and 25, 30 deltas would be a lot.
If you do them out of money, but if you do like a poor man's covered call where you're 90 days out in time, you buy a 70, 80 delta call, it's pretty close to a synthetic stock position.
Yep. Yes, it is.
Doing a cover call with a fraction of the share. So this is another kind of more intricate way to think about call or put spreads. So a traditional cover call requires 100 shares of stock. Selling a call spread against a fraction of shares is a synthetic cover call. So the problem here, obviously, is you're going to be using buying power on both sides of this trade. 100 shares is going to cover one short call. When you're long 30 shares and you sell a call spread that might net you 20 or 30 deltas, you're going to be margined on both those trades. So it is a capital intensive trade. But if you are long a handful of shares, let's say you're in Micron and you bought 10 shares of Micron, and now it's a really big position.
Sure.
You can sell an out of the money
because the stock went up so far. Yeah.
Well, just in any, yes. You have a small amount of shares.
Notional value has increased nicely, which is a good thing.
Which is a great thing.
Right.
But it's hard to now go and buy 90 shares of Micron to make a cover call.
It's probably impossible for you because
for most people.
But yeah.
So instead of doing that, you can sell a call spread. Maybe you sell a 10 or 20 point wide call spread that might have 2 or 3 deltas. That's going to reduce. That is a covered call type position because you're long 10 shares of stock. You're selling a call spread that might be.
You have 0 delta for argument's sake,
or maybe 1 or 2 deltas.
Sure, whatever.
It's a way to kind of do that with a fraction of shares. So this is something that you can do if you don't have a full 100 share of stock.
Very good. Yeah, totally.
The other way, and you mentioned this for strangles, and I think this is the most applicable, is being long or short the stock and adding a strangle. It adds an extrinsic value component to the position. Again, this is capital intensive, and if you're looking at it like this, you're probably doing this in combination with a long stock position. So you're saying, okay, I'm going to buy more shares at X price. If we get to this price, I'm going to sell out of those shares. It gives you a straddle type risk profile if you're putting on this trade. So long the stock, selling a call, selling a put, it's a covered strangle because you're covered to the upside. You have the potential to buy shares at a lower value. And I think you have to really look at it like that.
I think you do too. Agreed.
So to maximize an active trading strategy, efficient use of capital allocation along with strategies that reduce basis are of great importance. Of course, these are good things to keep in mind. By improving basis, we collect a greater amount of credit, increase our overall probability of success. So you're always trying to, all these strategies that we talked about are going to increase your probability of success versus just straight up stock. If you were buying or selling stock, 50-50 shot. If you add a extrinsic value component, you are going to increase that probability. So many strategies are very similar, therefore focus on the delta, the vega, theta exposure. I think again, whether you put on a strangle and add to it, you got to look at your whole position as a whole and not just each little entry point.
Let's take a quick 90-second break and come back. We got the opening bell next. Even the S&P is down 16, NASDAQ down 26, Russell down 3, and the Dow down 272. It's the first time all 4 indices have been lower. Almost for the opening. We'll see if it holds in the next 3 minutes. We'll be back in 90 seconds. Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son. We got about a minute before the market opens here as even the S&Ps are steady, down 15. NASDAQ down 15 on a percentage basis. You can see 15 handles are not the same as the NASDAQ's 30,000. Even the S&Ps are 7,500 percentage basis. Even the S&Ps are actually down more than the NASDAQ, even though the NASDAQ is down more on a change basis than even the S&Ps. Russell down 4 And the Dow down 260, volatility in by 22 cents, volatility actually contracting a little bit as the market's going slightly lower. Bonds up 16 ticks in the middle of their range, down to 12.13, up to 12.30, sitting right at 12.23. Bitcoin cannot catch itself an uptick. It traded under 69,000 for just a second there, down a little over 3.5%. And Ethereum down 1, and let's round up 0.5%. Oil did catch itself a little bit of a bid. Remember last time I quoted it was 61 and change, flirting with making its high for the day, well, high so far today, which was 92.65. It's 92.19 right now. Gold off of its highs, trade up to 45.71. Gold been going sideways, decent IV rank of 33. You sold it nicely this morning. Here comes your opening bell.
Ding, 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 ding.
There is.
And we're off.
And we're off is right. Some of the stocks that have been making a big move this morning, while we get the rest of them to open, HPE for earnings up $16. Trading and opening right around $62. Marvell, MRVL, was up around $40-ish pre-market, up around $35-ish right now. Traded as high on the opening at $259 and change. Now trading $258 and change. Google was down around $10 on the other side of the coin. Still is down around $11, issuing some stock here. Palo Alto Network, PANW, for earnings tonight, down $6 so far. But you can see here, been on a monster run to the upside. And I believe Ulta, which does not have great market, neither does Palo Alto Networks, to be honest with you, flirting with $500, down just about $1 or so. Let's see what's moving this market. We just click on, I have high option volume list here. You can click on that. You just, what did you do? You just, CRDO.
It was another earnings trade. I took like $200 out of it.
Oh, very nice. Up just about $6 or so, trading now up $8. Sorry, I misspoke. Let's see what's moving the market here. SanDisk down $30. That's not allowed to happen. Google down 13. Snow down 13. Crowd down around 11. MSTR selling some of its Bitcoin down around $8.50. DDOG, which was on the list from yesterday to the upside, is now on the list to the downside. Come back to that in a second. OKTA down 7 and change. Let's see what's going on to the upside. MRVL up $40. AVGO has earnings tomorrow after the close, up $24. BE up $16. There's your CRDO, now up $13.
Damn, should have held it.
NBIS had
those markets were so bad.
Yeah.
I was looking at it. I was like, just get me out of this thing. The stock was at 200 earlier this morning, after the announcement yesterday, and
yeah, it's so hard to
missed a couple $100 there.
Right. I mean,
ouchie.
Yeah, I mean, you did it at $5. Man, you could have had
7, 10.
Yeah, you could have been somebody.
Yeah.
I mean, $9.50 right now. Man, stink. NBIS up $10 after a big day yesterday. I hope you bought the dip. Russell's up 13. That's a 0.5 percentage point move. And the Dow up 18, which was down 200 and something just a moment ago. Man, markets move so quick. NASDAQ's the weakest of the group, down 75. Even the S&P is down 11. Got a little tug of war going on here between the E-mini S&Ps and the NASDAQ versus the Russell and the Dow. Volatility right now helping the Russell and the Dow down 20 cents or so. Irene, I-R-E-N, what's that? You know, my old landlord's name was Irene growing up.
Me, myself, and Irene, a classic, an absolute classic.
66.45 up $1, which is a 5/8% move. Well, now it's 1.5.
Yeah. We did a diagonal spread there. It took a couple $100.
Beautiful. And you did a spread in, you just took off something in Amazon.
I just took off some upside calls. The stock's down like $10.
What gives there?
More. It's gone from 270 to 250. I have some call diagonal spreads, so I just legged out of the calls.
Beautiful.
Leaning long.
Good job out of you.
What else do I have to do here? HPE, let's look at that. What is that at? 62 and change.
Mm-hmm.
Okay, we're gonna close some of these. Those calls, remember I quoted them at 175 this morning?
Yes.
They're at $2.
Wow.
The stock's up $15. So those calls moved 25 cents.
Oh,
I was long the 50s. That whole position, that was a 2x4, so you're naked 2 extra calls. But I did that at $1.50 and closed them at $8.75.
What can't you do?
I got another one too, further out in time.
I got another one coming at you.
I forgot. I got a little slap happy with this one.
That was HPE. You just did 2 different times. Good job out of you.
Yeah. What else do we have here?
Beautiful. Those were earnings plays. 543 and 875. I think you. Let's see, HPE. You bought those. You bought those under $2, $1.60 ish. Sold them at $8 and change and $5 and change.
How much more do you want? How much more do you want?
I've just the clinic that you're putting on here is just amazing.
No.
Sometimes I'm just amazed that I get to sit.
Yeah,
here
I have
with you
short delta in BE. The stock's up $50 every single day.
Not 50, but 18, which is enough.
Some of the government portfolio stocks working nicely today. MP close out of that diagonal spread too.
The hits keep coming.
MU down. Wow.
MU, is that allowed?
It's shocking to see. I mean,
down just about $12.
Well, everybody
just
survived.
off of all-time highs. Same as it ever was.
Let's see if I can get filled on this.
Russell and Dow still higher. The S&P's down 11, NASDAQ down 108, and VIX in by 24 cents. You are right. Big day in some of these high flyers like AVGO up $25, NVIDIA up another $2 or so. Even the Goldman Sachs of the world are up today, up $11 or so. That VRT is up $20. I don't know.
Why not? Why not?
I don't know if you have anything in there. Apple up $3 and change. Microsoft down 11. Dell down 4.
Ooh.
Yeah, you got that going for you. Yes. Talk to me, Goose.
Let's see if I can get filled on this. I did a very short-term butterfly in Micron.
MU?
Yeah, around 1,000.
It's sitting there at 1,022. So this move lower actually helps that position.
Yeah. You got to play for the nice round number too, right?
Is that what it is?
Yeah.
Okie dokie.
Got to squeeze them, squoze them.
I've been squozed many times in my career. It happens. Sometimes I've asked for it. Most of the times I didn't.
Oh, there's the MU.
Oh, beautiful. $20 on a $100 wide spread.
I did.
Three days to go. This move had to have helped you.
I did it yesterday at $17.95.
Nice trade.
Yeah. I don't know. The stock was this. How else are you supposed to trade?
You had a feeling. So you're scalping. Now you're scalping.
Scalping butterflies. That's the freaking.
So you're
market
scalping
we are
a position, a trade that moves the slowest typically, but you have such high implied volatility here. You get any kind of move.
Yeah, there's just so much vol there that they trade on the put side a little more expensive than the call side because of the upside volatility, but they move. I mean, those things move.
Right. Call spreads are going to trade cheap in the put spread because the wings that you're buying are a bit more. $80 expected move for 3 days. So you could theoretically, sitting at your remember your mid strike was 900.
John Deere,
what'd you do there?
I mean, the stock's up like what,
$21. Just a quick little 4% move there.
I had the 600 strike call that I did into earnings. The stock fell out of bed. I just sold the 610 in the June monthly against it, turned it into a small little diagonal spread that I have on for like $8. But
these individual stocks, even when you've got like John Deere moving the way it is, have taken over the market compared to the ETFs.
Oh, there's no point in trading the ETFs.
You seem seem to be right. I mean, if you're looking for the big payout play, it's definitely in these individual stocks. Yeah. Especially with volatility so low now. But you look at SPY and you look at the Ivy rank and they're 29. It's not bad.
No.
But that's all the upside call skew.
Oh, this stinks.
Okie dokie.
God, I was looking at closing the Carvana position, but that markets are horrific.
In Carvana, they always are.
Even after the split. Mm-hmm. Thought they would get a little bit better.
They'll tighten up, hopefully, but not the SMH up $13, NVIDIA up $2.
FCX going nuts today?
Say again?
FCX going nuts today?
FCX, the copper play? Yeah, copper's
been going nuts.
Catching a bid. Yeah, FCX up $3.
Lighten up some of this, too.
Flirting with its highs up 4.5%. Buy everything, son.
Well, I'm closing everything now.
Because you bought it.
Yeah.
I mean, it's been just basically a day trade here. Yes, all the trades that you've put on so far have been closing trades.
Yeah. Big move in Google. $16.
To the downside.
Market don't care.
No, market doesn't care. Some of the other ones to the upside, Goldman Sachs now up 22. I think last time I quoted was up 13. Marvell still up 46. There's your BE up 20. GLW up 15. AAOI up $14.
Well, now you got to get a couple shares of that. Buy some light.
It was
lights up $150.
It was 150, 60, 24 hours ago. I hear you.
It's crazy.
There's your
I mean, have fun with it while it lasts. If this keeps going,
even Bob is up $6.
Yeah,
Come on, there's a 5% move in a Chinese stock.
Everybody's a genius. It's amazing.
It really is.
It's the greatest thing ever.
Yeah, why trade futures when you can get the movement of 5-6% in just about every stock?
Yeah, it's nuts. It's nuts.
All right, my friend. Even the S&P is down 15. Volatility down by 22 cents. We're going to take a quick 90-second break. We're going to come back. We got my friend Craig coming in. Futures in Focus. We'll be back in 90 seconds. Tasty Live.
Cool.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son. And as the crow flies, Craig, his train didn't make it this morning.
Okay, we miss him.
He'll
be back.
I know.
Back.
Even the S&Ps are down 12. NASDAQ is down 60. Russell is up almost 16. That's your leader in the clubhouse by half a percentage point. And the Dow up almost 100. Volatility in by 22 cents.
Buy the dip. Got to buy the dip.
I mean,
buy that dip.
It's definitely become more of a buy the dip in the individual stocks
every day
than anything.
Every day, forever.
Than anything else, yeah.
Forever.
Yeah.
Can't stop, won't stop.
Yeah, if you're more ETF inclined with your delta, you're not getting paid like the rest of the market, which is a little bit.
That's how all the smarty pants blew up.
Yeah,
because they were short.
Yeah, I guess that's the
short single name equities.
Yep,
and either long in some capacity the ETFs.
Right.
You know, and that trade has not played out for months.
No. It reminds me of the whole nat gas debacle, which happened a lot quicker.
Which one?
Nat gas went through the roof to the upside, and a lot of funds were getting short.
Oh yeah, I remember seeing that video of the guy that was like with his like $100,000 Rolex.
Yes.
It was like, I'm so sorry, but I blew up your entire nest egg. It's all gone.
Too big.
What was that guy's name?
I don't remember those yokels. Bonds up 15 ticks here. But really, this whole market is the equity names, the Marvels, up 24%, $53. AVGO up 23. I mean, even Goldman Sachs is up 2% from lofty heights. I mean, this is not like any kind of downtick here. Crazy market.
Yeah.
Maybe we go to the chat. Maybe they've got a couple of trade threads, because today's a type of day where we don't have any segments where we do, what's your assumption or anything else like that.
Yeah, if you got some trade ideas, post them in the chat for us.
Love to hear from you. Maybe we can do something there. On the, which you were going to look at, on the FX front here, you do have the yen down small, as it is every day, /6B, which is the British pound, is up small. And the euro is also.
Do I roll into more of the government portfolio and put another MP position on?
MP.
Or do I just sell the puts? I mean, the stock has rallied
up another $4 after trading under $70, opening right there on its lows.
I just closed the 65.70 diagonals for $5 and change. Should I just roll it into a wider, further out diagonal
with bullish delta to it?
Yeah. You don't like that?
I mean, I don't hate it. I mean, everything goes up. I mean, sure.
You sell the puts?
My friend wants you to buy Shaq. Down $6 to 56 and change, a 10% move on top of.
It's a good burger.
It's a great burger. Stock was 100 back in May. Now, the markets in Shaq, if you go all the way out to July, are not the best. They're dollar wide. But that's my first one you do.
Shaq.
Is there any diagonal or
something? You want to do a diagonal or you want to sell the puts?
You could do June, July, because there's 2 vol points between July and June, but markets aren't going to be great. You're going to be getting beaten up.
Look at these bid-ask spreads. Oh, no, I'm looking at the weeklies. Sorry.
Yeah, I think you just sell the 55 puts, probably try to go in at 380, 385 as the stock is down, 390 even try and walk it down. Let's see what the low is. Sometimes I'll look at this and say, all right, let's take a look at what the low is. 310. So it hasn't traded a lot of them.
There we go. Saw the put by the diagonal spread, 88 cents. YOLO, baby. Upside.
Sell the put.
I did it at an 88-cent debit.
In Shack. Oh, so you sold the 55 put in July.
And financing.
You bought the September 60.
Yep.
And you
because there's no, that was the next expiration.
Understood.
Because there's no August.
Understood. So you're looking
like almost like our discussion on covered calls.
Yes, almost like our discussion.
Almost like a
covered call.
Covered strangle.
Yeah. Mm-hmm.
You are right. A sort of covered strangle.
Yeah, you've got about 65 deltas in that. I mean, it's definitely a covered call type strategy. Look at it, it's already upticked for you. You're so good.
Oh, I'm so good. How does Daddy do it?
You really are. Sometimes it's amazing.
Yeah.
I want to know who your mentor was. Dow down 27.
Can we hit the Micron butterfly twice? Stock's up $9 now. Just moved 20 handles.
Yeah, and your mid strike was 900 with 3 days to go, so it was probably a great sale. Let's take a look at.
It's at 14 now. I sold it at 20. It's at 14.
Yeah, so you're buying it back now, 1474. Man, you don't even work it. You just put it in.
Bang it out. Why wait for 10 cents? I mean, these markets are moving $4 a clip. Why wait for 10 cents? You're gonna miss it.
You remind me of the guys in AOL when AOL was going into the S&P 500. It didn't matter what price you paid for it, and they were right until they weren't.
Yeah.
Mm-hmm.
But you stay
now
small.
AOL's gone, but sure.
Yeah, you're okay. You're fine.
I understand.
Don't be scared, okay?
I'm not. Hold me. 1780 on volatility in by 27 cents.
Yeah, if you got some trade ideas, I am willing and able. Let's see what we got here. So we got Shaq in the chat.
Shaq down $6.
They got people are calling for Marvell, a call ratio spread.
MRVL.
How much do you want to
call ratio spread?
Yeah, do you want to lose?
So no, I don't feel like doing a call ratio spread in Marvell.
It's unbelievable because in any other time frame, if I told you that 16 days out in time, you could do the 275, 325, or 320, which is the highest strike. It's a $50, $45 call ratio spread. You can do that for like basically even. 16 days to go, you'd be like, oh, that's free money.
Yeah. No question.
The 275, 300 for $6. It expires in 2 weeks.
275, 320.
Yeah, that's why for $1.
Yeah, $1.30 something right now, mid price. Yeah, sure.
Oh God.
I
can feel the gravitational pull.
Yeah.
Yeah, I'm not gonna mess with that.
Yeah. You could do some sort of broken wing butterfly. You just don't have enough strikes yet up there.
I did something. Do I mess around with Oracle?
Do I mess around with Oracle? ORC.
I did a diagonal spread there. I left it on and missed out.
Oracle down $5 to 240. Well, 243 now. Earnings are June 10th. Why don't you just wait till earnings?
Yeah.
We had a week to go before the earnings announcement.
Let's see. I'm already in JP Morgan McDonald's. You want?
Sure.
What are you doing, McDonald's? What does a new subscriber do? I have a small diagonal spread here.
In McDonald's you're looking at?
I'm on a couple
where good traders go to die? Man, you really are trying to buy the junk here, right?
Do you do like
market's stinking here?
I know they do stink.
I wouldn't do anything.
$3 wide here. NASDAQ up 10. Thank God.
Saved by the bell. Saved by the bell.
Netflix? Anything in Netflix? Stock cannot get out of its own way. I've been trying to bottom tick this, and it just keeps going.
Yeah, Netflix down.
It never goes up.
$2.27. Ivy rank of 61. Looked like it was going to catch a bid yesterday, right? Probably something to do here. Yeah. Okay.
What about something like August, July? Give yourself a lot of time here.
Yeah, August 41 vol to 44 vol, 3 vol points. I like it. Earnings coming July 16th,
Yeah,
so
you
your
play
July
into the
options
earnings.
are gonna catch a bid.
All right.
But you have a lot of time. How are August options? They're about
Not
20
great.
cents wide.
I mean, they're okay. I did the 85.95, so it's $10 wide, $4 debit. Going back to the question on like a diagonal spread, the home run would be $10 on this trade. If the stock goes to 100, you're synthetically long the 85.95 call spread that can go to $10 plus whatever extrinsic value difference between your long option and your short option. Your long option will likely have more extrinsic value unless there's some tail type event where they both go to zero, where that spread will trade for $10. So $10, the width of the spread is roughly your max value on something like that.
And you could put the kibosh on the NASDAQ. It's now down 9.
Oh, God.
Volatility in by 32 cents.
Hey, it's up only. Okay, so we got that one on. McDonald's, we're going to pass on. People looking at CoreWeave here,
CRWV. Let's take a look.
It's had a nice rally.
CoreWeave up $1. Yeah, it certainly has from 100 to 125, 25% in no time.
Mm-hmm.
Basically unchanged here. CoreWeave, 100% implied volatility.
Let's do.
Okay, markets 20 cents wide. Not the,
I'm going
not
to
the
try and do a
worst.
put ratio spread here.
Wow, no fear to the downside.
110, 100.
110, 100. You bought one of the 110s, sold two of the 100s.
Break even down in 90.
You look at this, a small 9-10 long
Yeah.
deltas on the trade. No, I'm just quoting. You did it for $1.79. So watch your mid price going above your mid price, and then watch the order, see if it gets filled.
Do we get along our boys at the CBOE? The CBO? Look at this stock.
It's been hammered as of late, down $20 to $2.80. Maybe that's why Craig is in here. He's holding up the fort there. Traded as low as
176% implied volatility.
Yeah, but
or IV rank. I'm sorry.
IV rank. Yeah, look at the markets here.
Markets
though.
stink.
$3, $6.
Let's see if we can do something here.
What happened to those boys?
I don't know.
Mm-hmm. Trying to put in an order in there.
Yeah, I'm trying to get along.
Lots of luck in that one.
It's going to be tough. I'm looking at September, July because they don't have the August options there. But maybe if I can get into this diagonal for like $10.
Okay.
Yeah. All right.
Okay.
I'm in.
Did the 300, 320 SEP July.
What's CME looking like? CME
108,
down
108 days, 45 days. So you might even actually have a roll in there too.
Yeah. What are you doing CME? I mean, like, look at this. Like the 230 puts, 45 days out in time. Don't look. Oh, you look?
I just looked.
At $1. Like
Yeah.
there, I mean, it's $1 at 3. So you're probably looking at like 220-ish
Sure.
maybe.
Sure.
That seems so like there's no, they're pricing in zero downside. Like they're saying this is it.
Yeah, you're $40 away. You go $40 away to the upside, and you're looking at $4, $3.50, $4. So you got a buck more.
We're gonna
Nasdaq up 3.
Oh God!
Cancel crash.
Missed it.
Cancel crash.
We're gonna do the same thing in CME.
Oh, look at you.
We're supporting our team. Okay.
Yeah. I hear you. I hear you.
You come for the crown. You gotta be ready.
Mess with the bull.
Yeah.
You get the horns.
You get the horns here, okay? Don't mess with me here. Selling my boys down. Ooh.
Ooh, that was too easy.
That was 11. I put it in at 11.20, which was like 80 cents below the mid price. And I got price improved at 11.12. This thing going to zero. CME. Oh my God. Okay, what else we got?
Let's see. Your last trade that you did here was in again another one. The CME got filled at $11.12. $11.12.
Let's see. Okay, so we got the CME in there. SMCI. We got some SMCI people trying to
Dude,
pump
you just
this
made a bunch
one.
of quick trades. SMCI up $2 to 48.
Yeah, I mean, These people should go to jail, but I guess I'll. I mean, they're Chinese spies. Talk about the short seller making 20 million. You got a company that we're all buying in our 401ks that, supplies information to the CCP. Like, give me a freaking break.
Up $2, 4.5% move. NASDAQ up 20. Volatility in by 27 cents. Weird market today.
Yeah. What do you do here?
You don't?
Let's short this thing.
Decent market, 10-cent wide.
I will stick to my principles.
You will stick to your principles? You will die on this mountain?
I will die on this mountain.
Traded as high as 51. It's trading down to 49 right now, up $2.
And do the 50-45. Put diagonal spread.
Okey-dokey.
Small one.
Small, tiny.
There we go. August, July. It's a lot of time left there. Sorry, guys, I can't pump your.
Can't pump what?
Your SPY stock.
All right, you ready to take a quick 90-second break?
Sure.
Even the S&P is down 11. Dow down 170. NASDAQ up 24. Russell.
Oh, we got to put something on VSexy. It's not VSexy yet. VSCO. Got some people calling it out. Blowout earnings. What's the stock doing?
Is it VSXY, right?
VSCO is the ticker right now, but it will be VSexy. VSXY.
Yeah, I don't.
What do you do?
I don't think you can do anything in there at the moment.
Yeah. Okay.
No, can't. Let's take a quick 90-second break and come back. We got more Tasty Live. You know what comes up next?
We got market measure.
We sure do. We'll be back in 90 seconds. Tasty Live.
Cool.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right, with a market measure sponsored by our friends at the SIBO. Go.
Beautiful.
Beautiful.
I just got a long little Palantir.
You're getting long Palantir?
I did a little diagonal spread there.
PLTR. That's the one everybody loves to hate and always comes back to life, although it only is down 7 today. Doesn't tell you the whole story. Just about 3 days ago, it was down at 133. I don't hate the play.
Yeah.
Well, until he's 37, Ivy rank is good.
A little something.
Sure.
Cool.
You go. Paid did a $20 wide. I had a diagonal spread in PLTR, upside diagonal spread, never went up until it went up, and it made $5 on it.
In one day.
You lose. It slowly ate away 50 cents, 30 cents, 40 cents. I got the emails, what are you going to do with this trade? I'm like, it's a defined risk trade. It sucks.
Yeah.
You know, I got $4 worth of risk. It's trading at $2.50. I don't know what to do with it more than you know what to do with it, hoping for an up move. And within 2 days, it was up $15 or something like that. And you're able to get out, you make multiple.
The way this market is moving, you got to be nimble and quick. You got to take stuff when it comes. It's been nutty.
Yep.
All right,
let's go.
Let's do it. Market measure.
Yep.
All right, so we are talking all about probabilities and the importance of number of occurrences. How important is number of occurrences in the list of important trading things? What is this number of occurrences?
I don't know. If you're going to say that number of occurrences goes down to position sizing, it's paramount. So I mean, I know for the math to work, anybody can get lucky on a trade. Anybody can get lucky on a strategy. But to be consistent, you need number of occurrences. So I think it's paramount. You have to have it, have to do it. And you know what? We talk about it and I know we do a lot of 0-day information, and you look at it when Kai comes in here. If you don't do it every day, the numbers don't play out. We did it sparingly last month. We haven't done it at all so far this month, but you have to do it all the time. Paramount.
I agree, and I think the number one.
A little bit rough when you're doing a show, but when you're consistent in your approach, it works.
And speaking of 0-day,
yes, sir. 9:07. You still got plenty of time to do it.
We're going to do a little upside butterfly because how could we not pin 7,600 on it?
There you go.
I will say the aspect of number of occurrences that comes into play the most is people trading and doing their thing and it's working and everything's great, and then they go all in on one trade.
That's usually the problem.
Usually what happens is everybody's a genius, and then they're like, why am I taking dollars when I can take $10, $50, $100 out of these trades? And then you put it all in one trade, and then it goes away. So I think number of occurrences, the sizing component of it is a huge thing for people to keep consistent. I think you have to.
Yep.
So when we talk about probabilities, according to the law of large numbers, the average of the results obtained from a large number of trials should be close to the expected value and will tend to become closer as more trials are performed. So, the 90 pop trade is not necessarily going to play out like that in a sample of 10 trades. You have to get a lot of trades under your belt for these probabilities to get in line with what you would expect. In casinos, they usually have a max bet. This is to prevent you from placing too large a bet and getting lucky. So the whole idea with a casino is that, if you're doing little, trades all the time and they have the house edge, over time, it's going to play out for them. Similarly to trade small and trade often, as a trader has higher number of occurrences with a higher probability of success, you're going to naturally get closer to that probability. In short periods of time, the 70 pop doesn't always play out, but over a number of occurrences, you do tend to get to that point. And so between April 1st and April 15th of this year, SPY never had a down day. That's amazing.
Crazy if you think about it.
Yeah. So meaning that if you were bullish, we would be correct every single day. So the total percentage change in the market was just under 7%. You had a 100% win rate if you were just long the market in whatever way you wanted. Put spreads, shares, diagonal spreads, whatever. However, this does not mean that a SPY position will go up every single time. Obviously, these things are not going to play out that way every single time. And so how do we kind of measure this and use this to our advantage? So when we talk about winning and losing trades, to explain the deviations, we consider the following portfolio with a majority of winners. It's highly possible that in a sample of three trades, they can all be losers. So if you take, thousands of trades and you just pull 3 or 4 of them out, even if it's a 70% pop, it's very likely that you can pull a sample of a couple trades that are all losing trades. They could all be winning trades too. This is how probabilities work. It doesn't mean that, your smaller sample of a larger sample is always going to be the same as what you're looking at. It's like when you're flipping coins, you can flip three heads in a row. That's not crazy.
That's not hard.
Yeah. However, with more occurrences, the results tend to be closer to what the expectations are. So if you're looking at a probability of 70%, it probably is going to take you 1,000 occurrences to get to that number. And so when you look at, we just talked about that string of SPY, and frankly, we could extend that to this entire month because basically we've been up only the whole time. When you look at small little sets of time, you say, oh, this is easy. It goes up every day. Why not? When you look at a larger set here, and this goes back to 2000, this graphic looks just about the same, right? You look at this, and I couldn't tell you if there was more up or down out of this data set. Some of these down moves are bigger than the up moves. Some of the up moves are bigger than the down moves. I mean, this looks totally normally distributed in terms of big moves in both directions, with most of the moves inside that 5% range and pretty equal across the board. So when you zoom out a little bit, everything does tend to line up here.
It tends to line up, but again, it becomes number of occurrences, and you've got to consistently do the same thing. Like you just did a broken wing butterfly in SPX.
Yeah.
We usually do, or the research is done with an iron condor. 2 different strategies. You can't say I have the number of occurrences if I'm looking at 2 different strategies, right? That's not the same thing.
Not the same trade, sure.
Right.
They're different. But but I think of it like from
trading.
Yes, but we're taking all these sort of trades that are all 50 to 80% pop trades. Whether it's a short put, a diagonal spread, a strangle, you take them all together and they're all in that range. Over a period of time, you take all those trades, and we did what, 50 trades today?
Yeah. Almost. Well, less than that.
Only did 21 trades today? I feel like
if you restart, it'll be better.
So we did a lot of trades today. You take them all together, and the probabilities are pretty much in line. What I would expect.
Yeah, with the strategy that starts out with. Yes, 100%.
So the market experiences large changes when sampling a small number of days. So when you take a when you take a larger data set, we experience a mean reversion in terms of your probability. So if you place a trade and it's a 70% pop and you're hitting at a 90 or 95% hit rate, you should expect some mean reversion in probability. You hit a lot of winners, and then you should say to yourself, okay, you know what? I should expect something to not go right for me
That's true.
In the near future. The average percentage change in SPY and the standard deviation of the percentage change is lower than what we experienced in that 15 day data set that we used. It's not, I shouldn't say not normal. It's not, I don't know. It's not probabilistic that
that's a good way of putting it. Not probabilistic.
Yeah,
it does not compute
that you have 15 straight up days. Like that's not what you usually play for. When you take a big sampling, you say it's basically 50-50. So the average percentage change in the SPY on a 10-day time frame is 0.21%. This is your positive drift number. Over 100 days, you could see 0.16%, and this is just the average percentage change day to day. This is not the total cumulative. It's just kind of telling you that over a large sample, it's basically zero, right? So you have one up day and one down day. It's basically a 50-50 split. When we talk about positive drift, which is what you see, markets go up or have gone up over time, and that is your positive drift. So it's a net positive over time, and the probability ends up being like 53-50 in terms of your up versus down days, but it's basically, it's exactly what you would think. It's coin flip. The standard deviation percentage change in the SPY also, as you get more data, the bigger data set is going to get way, way tighter. So you look at 10 days in time and you could have this wide distribution. It's the same thing with your number of occurrences. You look at 10 trades and you could have a huge distribution of P&L. You look at 1,000 trades and your distribution of P&L gets much closer to what you would expect over all those trades.
That is correct.
So here, when we talk about number of occurrences, less than 100 occurrences, your win rate is going to have a lot of variance. So here you could see, again, this is the wider distribution of your P&Ls and your win rate here. So you can see your win rate, fluctuates from 50% to 100% for the first 100 trades. As you get closer to those higher numbers, your 500, your 400, 300 trades, you're getting to that, 70, 80% pop that you would expect. You're not getting it on the 100 trades sample.
That's correct. I mean, listen, again, they're looking at number of occurrences different ways.
Yes. So we need to remember that we are trading in a random environment, despite what it feels like in the current moment of just up only. There's no randomness to this. It's just the same way every day. And even though we have expected probabilities, it's going to take some time to realize those results. You have to have number of occurrences to have your probabilities play out. You cannot just do this once or twice or 3 times and think that the probabilities are going to always play out that way. Trading small and eventually obtaining a large number of occurrences are 2 ways we can combat the random acts of the market and ensure we maintain a proper amount of capital in our account. It's always about size. Size, number of occurrences, changing and having different strategies, different directional exposures. It's a huge piece of the puzzle here.
Huge piece of puzzle, and the number of occurrences doesn't mean anything right now in the market, as even the S&Ps are basically unchanged, down 4. You still got Marvell up 25%, at $54. MU up $21. AVGO up $20. BE up $20. Glow.
You are speechless.
I am
literally
speechless. NBIS up $12. This is a stock that's just been...
I should have bought the dip in Google. Oh my God.
Google, was it down $7 now, something like that? Yeah. Down $8. Yeah, I just saw Google was down around $3.58, $10 lower than that. What you did buy was Shack, is silly boy, down $6.50.
Oh, of course, you guys make me bag holders here. What is this?
Hasn't moved.
Yeah, we're gonna buy Google.
We're gonna buy Google.
I might miss it. It might be unched in the next 30 minutes.
That was going to be my option trades today, but it sure did. It sure did move.
$13 on a 20-point wide diagonal spread.
Apple up $3 doesn't even mean anything anymore. Nvidia up $5 and change, was up a little bit more just a moment ago. Traded over 230 to 232. It's 229 and change right now.
Okay.
Bonds are up 13. Oil, nobody cares anymore. $92, basically unchanged.
I took off some of my NVIDIA.
Oh, good for you.
I'm keeping some of them on, but we put these on 10 days ago at $7.70, and I closed them at $10.80.
You are correct on the 22nd.
Yeah.
$7.70.
But I'm still long. I still have some left. Some runners, as you would say.
as I would say. No, it's been some great trades, some great opportunity. Certainly seems like the buy high, sell higher crowd is in control right now.
Do it until it doesn't work. I mean, right?
Doing it well. Bitcoin can't catch itself a bid 68.4. I got emails. Why is Bitcoin so weak? Because why would you put money there right now when you've
seriously? I think if anything is apparent from the last 5 years is that markets are an attention mechanism.
Span of a child.
Well, it's just wherever the attention is, the money is going.
Sure.
It's momentum. And
people have been talking about the breadth of the market being so weak. It means absolutely nothing. Obviously, it means absolutely nothing anymore, right?
Yeah, but if we ever go down again,
and that'll
you'll
be the
have
headline.
people call for it. But
sure.
Right now, why you could have whatever you think about. I don't know, McDonald's. You could say McDonald's is cheap right now. It's not moving.
Yeah.
So if you want to buy McDonald's, go for it. It's cheap. It looks cheap to me too.
It's cheap on price, cheaper than it's been yesterday, the day before, the month before, the 6 months before.
Yeah,
sure.
But nobody's out there, no fund managers out there saying, "Oh, I need."
You got to get yourself some.
You got to get some
They're
McDonald's.
coming out with a new Happy Meal. It's going to be unbelievable.
Just wait till they pay that $1 dividend when you got Marvell going up 45% in 3 sessions. That's where thank you. That's where the attention is going, and that's it's momentum.
That's definitely where the eyes are. You had the Russell and the Dow going in tandem with each other. You now have the NASDAQ and the Russell, which is kind of odd, up, and even the S&P is unchanged, the Dow down 100 and change. Volatility hanging in there, down 22 cents, 17.85, really hasn't moved all that much. I got nothing else to say, son. I am.
Oil is like moving around. Oil was up like 30 cents at one point.
Yeah, 92 and change. Nobody even cares about oil. Who's got eyes on oil when, like you just said a moment ago, you got Marvell up $55 and BE and AVGO and the rest of them, AAOI, even Victoria's Secret. I mean,
we missed that.
SVXY.
No, that one, VSCO. What do we do?
I'm sorry. VS. Yes, sorry.
Wait, no. Oh, is it done now?
VSXY is now $79 and change, up $25.
VSXY. Okay. All right.
All right. You ready to take a quick 90-second break?
Sure.
We'll take a quick 90-second break. We'll see if the guys, we're a little early. We'll see if the guys from Tasty Trade are available. If not, we'll kill some time with some more trades, see what's going on with this market. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Wow, Nikki, we are back, son. You just closed your MU butterfly. These butterflies, I know it's a short-dated butterfly, so it's going to move, but it shouldn't move $3 in 30 minutes, which it did. So good job out of you.
What do you?
Some would say you were
want
gifted.
you want me to give you the money? You want me to give you the money?
Or maybe it's in your bloodline.
Thank you. Thank you for giving that to me.
Can't even compliment.
I mean, you did give me a whole other host of stuff that's not so good in the bloodline, but that is good. That was a good thing that you gave me. That's
you got to take the good with the bad, son.
I know.
My mom used to say that.
Tainted
Yeah,
bloodline.
it builds character.
A little bit of everything in there.
It makes you who you are today.
Yeah.
You know what else is going to make us who we are today? This man, Q. What's up, brother?
Fellas, how's it going?
I thought you were going to be the kibosh on the market here as the NASDAQ was just down around 22 handles, but it's back up 4.
The
You're not
has
doing
been
anything.
bought.
Yeah, as far as I'm aware, red bars are outlawed. You know,
can't
market
have
only
them.
goes up.
Can't have it. Can't have it.
Sure feels that way.
It's America. You buy every day.
It does feel like every time it turns red that, you miss the high for not only for the day, for the year, for your lifetime, only for it to come back. It really is a kind of a messed up little market. Volatility down 19 cents really hasn't moved anywhere here at all. The high flyers are still high flying.
Yeah,
You get yourself some V-Sexy? No?
That's been one of the symbols being floated around the desk today.
Oh, I
the
bet.
VSXY. Wait, what even is that?
It's
Victoria's Secret.
Okay, okay.
They're so back.
Yeah,
Okay.
so back. We are so back. America's back.
We are so
When
back.
Victoria's Secret's up 40%.
Yes,
we are back.
Yeah. Oh, yeah. I mean,
they do have options.
I would say like the talk
Yeah,
around the
but they're
desk
on-
right now is
Okay.
like, when is this like gonna stop?
Oh,
You
so
know?
this-
like this rip up in some of these symbols,
Never.
like the Microns, Nvidia's, Marvell.
Forever.
Don't
as
say
well.
that. You get people to do weird
I
stuff.
know.
It's eventually going to stop. The big thing
Yeah.
is don't get in front of it. Like, let's miss the tops. Don't get in front
And
of it.
the bottom.
Play it and the bottoms, as we always do.
Trade it. Things are moving. Make some trades. Stay size appropriate. And
Keep
do
your number of
thing.
occurrences.
And don't, like the naked risk, you don't have to do this. You don't have to do it like that. I won't sell calls. I won't sell calls here. You want to be short stuff? Do
Naked,
some
you
put diagonals. Do some calendar spreads. Put calendar spreads. Stuff like that.
And call spreads if you don't want to be naked.
Call spreads, wide call spreads. Do something like that. I just, things are moving, and you gotta trade it. You can't.
Yeah.
We laugh about it, but we're also participating in the debauchery.
Yeah.
Wouldn't you say? I mean, we're doing 3-day butterflies.
Yeah.
I mean, like,
Wait, how wide was that butterfly that came in $3?
$100.
$100 wide on
Yeah.
Micron. It's 10% of the stock. Like,
Yeah.
it's a $10 wide on a $100 stock.
That's right. I mean,
But
that's the
the
way you
stock's
have to look
moving
at it.
$40 a day. We did those at HP trades. We're doing 1x2s. The HP. We were talking about it. The 65 strike calls 3 days ago were $1.75. It was 50% out of the money with 3 days to go. I mean, the stock
Wait,
is
has
up 11.
HPE been moving?
Yeah, it's up like $12.
Yeah.
Why?
Why?
That's a stock I used to use for like the demos a lot because it wouldn't really move much.
Yeah. Well, it moves now.
I mean,
gone from-
it's kind of like, I mean, I'm a little, baffled by some of the stuff going on in the market right now. Like everything moves. We
It's
got
good.
We got Ford. Like Ford with 100+ IV rank. Whenever that was.
But it's opportunity.
Yeah.
That's the other thing,
Yes.
it is opportunity, and I'm trying to take it.
Well, we would think opportunities were like, 45 days. That's the way we look at it. And right now, you've got opportunities minute by minute in some of these stocks. You've got stocks that are up 45% in a day that are, for lack of a better word, $1 trillion company, figuratively speaking.
200, 300, 500 billion. I mean,
Yeah. I mean,
it's unbelievable.
it's different world right now, and one that's not sustainable.
It's not that different though.
You really don't think so?
I mean, right now it is obviously very wild, but we've watched markets for the past 5 years and they've been nuts. the last 5 years
Large markets for the last.
I don't know if there's. I know it
years.
hasn't been the doom and gloom bear market, but it's been a wild freaking market in both directions for the past 5 years.
Yeah.
I mean, like, can you?
Hey, listen.
You want to
I
talk
think,
number of occurrences? Could you pick a 5-year period in time that was this crazy? I mean, maybe 2000. I don't know. I wasn't there for it.
Right. I don't know. I don't think this is, and we've gotten that. Those emails. Is this like the 2000.com kind of bubble?
But
I don't
it's
think
like all the
anything
big
like
symbols are moving. It's not like these like random companies.
That's correct.
It's all like
not
big
pets.com.
Yeah.
Although VSexy is close. It's close. I mean, we may be close there. Yeah, you're right. It's not the pet.com just because somebody had .com or books.com. All of a sudden the stock, tripled in price, overnight. But it does seem like these individual stocks have certainly taken away the oomph of the ETFs and the market itself, which I think is actually a good thing for the NASDAQ, the E-mini S&Ps, to take some of the kind of spotlight off of them and onto these individual names, which will eventually make the ETFs more valuable as you look for the number of occurrences on the market itself, as opposed to these cyclical stocks. Mm-hmm. It's an interesting market. Let's get to your list and see what the world is doing out there.
Alrighty. Top 20 symbols going through the system and their IVR. At number 1, NVIDIA with a 48, Marvell 90, Micron 93, HPE 55, Google 38, Tesla 30, Microsoft 69, Amazon 28, Palantir 35, Meta 47, TQQQ 56, Broadcom 86, Intel 73, iBit 31, MSTR 41, Google without the L 36, Netflix 61, SMH 107, so expanding throughout the day, SPCE 59, and CoreWeave 37. Are you guys excited to trade on SpaceX whenever it becomes public?
Oof.
I'm hesitant.
Say again?
I'm hesitant. I mean, I've been hesitant of all the big IPOs. I mean, of course I want some, but I'm scared that it's a lot of liquidity that needs to be filled. That's what I'm scared of. I don't know if it's, if it comes out and it's flat, but SMH is down $50, because you're taking money from other places to buy these massive IPOs.
That's been his story for a few days now. That's the picture you've been painting. I mean, it's logical. It just seems too simple. It really does seem too simple to me to come to fruition. I think the market just absorbs it, and I think
no big deal.
Yeah, maybe a month or two later, coming into the summer. I mean, this is, in an equity world, forget about these movements in some of these stocks. This is summer action. Mm-hmm. You get the slow kind of grind, volatility contracts throughout the whole thing. The only issue that I have right now is we're at all-time highs on just about everything. It really is a hard pull to stay long delta here. I just think you just can't get in the way of being short delta. That's the big problem.
Yeah, I would say that's the sentiment among a lot of our customers as well. Is like we're at all-time highs, despite whatever's going on in the world, and there's pretty low volatility now. It's not as high as it was, right?
Yeah,
and it's like how do you sort of stay long deltas as an active trader in this market?
And it's not moving. I mean, like volatility is not catching itself a bit here at all.
Yeah, I mean
It's an interesting market, to say the least.
And you have no skew, if not call skew. Like, you look at it, even in SPY, 45 days out, you go $10 out of the money, which is inside the expected move. You really have to go like $20. Let's go $20 out of the money.
Yeah.
The 778 is 650. The 738 is 790. You got like $1 of difference there. Like, there is not a lot of put skew. Like, puts are cheap.
You're 100% correct. You're 100% correct. All right, my friend, I'm going to let you go. Get back to work, back to the salt mines for you. I got to bring this guy in. You'll know him. Ryan, I've been waiting for you.
Hello.
Bitcoin, 68,300.
Sad, isn't it?
Very, very sad. Very sad.
There you go.
Per
Diagonal
K.
spread in SPY. Put diagonal.
720,
Yeah, there you go.
755 for $13.
That's August, July, $13. It's 20, what is it, $30 wide? $35 wide.
It's $35 wide.
There's a lot of time.
Yeah. It's about 20 deltas per contract. Yeah. Okay.
Yeah.
A lot of
I
time.
do that in the queues too. Do I put the kibosh on it?
Why not? Why not?
This is because if we go up another $50 in SPY, you lose $3 on this trade.
Yeah. Right.
Like that is the sort of I'm not,
especially if you couple it with a Delta long portfolio.
yeah,
Sure.
which we have.
Yep.
So it's like this goes to zero. God bless it.
You mean the rest of the market will be so much higher? Sure.
Yeah.
Sure. Hey, it's never going to go to zero because time's going to have value too. So
Yeah, we're gonna do
It's always
it.
going to be worth
We're
$5 or $6.
All right. Sorry, I interrupted.
Okay.
All good.
I'm back. I'll go with my original statement.
I'm on fire a little bit.
Bitcoin traded.
I've been hot.
He has been hot. It's obnoxious.
I know.
Bitcoin under 68,000, 67,005. Now on an uptick at 68,000. What happened?
You know, I think really it's a simple
MSTR sold $3 million worth of Bitcoin. Does that mean anything?
Paper hand. Are they gonna call them the paper hands now?
I think they
used
sold
to be diamond hands.
They sold some in 2022. Did pretty well after.
Oh, did
that.
they?
Yeah. I think I've got a simple explanation for you, Tony.
I'm dying to hear it.
There are just other places to go. And if you are a large institutional manager, you have to chase a benchmark. You got to chase this stuff. Right or wrong, it's how you have to position it. So when you look at ETF flows, which we get all excited about that when it's $1 billion week over week. Well, it was a little bit over $3 billion to the downside. It's seen outflows in terms of the ETF complex for the last 11 or 12 sessions.
Mm-hmm.
So where's it going? Well, we know exactly where it's going.
Yeah.
It's chasing semis. It's in the AI trade. It's really anywhere else with equities at all-time highs other than Bitcoin. And this is historically an environment in which crypto tends to do well. We've got an economy that's holding up. It's actually accelerating. You look at some PMI data recently. It's well above 50. You're in expansionary territory. So I just think that there are other opportunities. That changes at some point. I mean, this is something that's, of course, volatile. We've talked about the range being kind of 60 to 85, 65, 85. If you're in the camp that thinks this is going to go to $1 million by 2030, well, you can buy some more here on sale. If you think it's going to go to zero, I guess press your shorts after the drawdown.
Mm-hmm.
When you look at what this has kind of done technically, if you just look at the longer term moving averages in there, every single cycle, you've traded down into that 200-week moving average. It's about 62,000 right now. The low from February was 60,500 after the liquidity blow up. So those are some levels that I'd look at. I think buying it under 70, I'm active again now. Wasn't buying 80, back to trying to add a little.
Yeah, I'll give you that. You were not buying 80. You really were like, okay, this is good, but
wasn't really selling 80 either.
Yeah, wasn't. Yeah, no. I get that point. Yeah. Okay. All right.
Yeah.
Well, you've convinced me to feel less worse about myself in my Bitcoin position, which is right around here is about a break even. But like you said, I didn't sell 80 either. So money spent. You make $1 million, lose $1 million, you're down $1 million.
And volatility hasn't really been there either.
No volatility.
It's been a stair step.
And that's another thing. There hasn't been capitulation in it either. I think today is the first day where you've kind of seen a little bit capitulation, down 5% in Bitcoin. Decent sized move on top of.
I've actually been thinking because, like, you know, the micro strategy has been the consistent bid at all times. You know, micro strategy buys 250 Bitcoin over the last 7 days, whatever. You get this headline of they have 800,000 Bitcoin and they sold 40 of them or 30 of them.
Yeah.
You know what I mean? It's like a microscopic, amount. It almost feels like, okay, is that that's the indicator that this is the bottom? They're not doing that when it's going up 10K every day. You know what I mean? You don't get that headline of the diamond-handed, institution, the buyer every day is now selling. Okay, that's usually a spot. But I agree with you. There's no attention toward it.
Yeah,
I don't know
this has been forgotten for now.
Yeah.
It's a technology, right? I think, look, you're probably not going out there and trying to pick meme coins.
No.
But if you stick to things like Bitcoin, ETH, Solana, those three to start with, you look out a little bit beyond just the next week or so. Look at what's happening in the space. I mean, I think you want some of these things in small percentages in your portfolio. We've done the research around it. Nobody's saying put 50% of your portfolio in it. But 1% to 2%, maybe 5% is a decent allocation. You want the value transfer protocol. You want the hedge to the currency debasement long term, right? If your time frame is 2030, well, if I look back, in 2024, this was closer to 30,000. It's 67,000 right now. It got up to 120. We have this recency bias, of course. I think you want ETH. If you believe that the AI agents are going to transact with one another, it's likely to be on a blockchain network. Well, which one secures the most value? Well, that's ETH. Now, it doesn't mean that it's the fastest or the best for all use cases, but Solana does a decent job there as well. There will be other technologies, and maybe something replaces this, but I think you want the technology in your portfolio. When I look at actual fundamental drivers, again, with that long-term perspective, stablecoin market cap continues to grow. Every time I look around anywhere, tokenization this, tokenization that. So I think you have to, I say this now because it's lower. When it's going up, we say have fun staying poor. But you have to look at this long-term. You always had to look at this long-term. And so for me, back under 70 here, I'm starting to get a little bit more active. I'm buying Solana under 80. Could it go to 50? Of course.
Sure.
But, things look a lot better right now from, I think, the perspective of a buyer, a long-term buyer.
Is there any, do they have a Solana ETF?
There are some Solana ETFs.
I think there is one.
I don't.
FSOL? Is it FSOL?
You know what? We'll have to put something together and just break down. There have been a handful of, it's just been ignored. It was like, you got the Bitcoin and ETH launched. You even got staked ETH. And all of that has kind of just been ignored. There have been a ton of other launches. I think with the current administration, seen a ton of things have gone through. So I'll do an update on everything that's out there because there are a lot of other ways to get access to this. But I think for a lot of people, if you can buy spot, great. If you want to lever up, there are new futures to trade. You can trade Solana futures. You can trade XRP futures. You can trade, of course, Bitcoin and ETH. And I think you're going to see the major exchanges launch even more product because they're having to compete with the hyperliquids of the world. And that said, while we've had this large drawdown, there have been some very interesting bright spots. Not all of these available to trade today through tastytrade, but keep an eye on it, right? Hype is at $72. It's been going up every single day. Derive, which is an options trading protocol, it's been around for years. We've talked about this first when it was called Lyra here on Tasty Trade or Tasty Live. That's moving higher, up 7% today. We've talked about Zcash. That's been trading higher. And so there are some spots where, it's this narrative shift and flow, but I don't look at this as like, crypto is dead or something happened. Again, Micron goes up like $50 a day. Right. So you have to chase it. Right?
That's
if
normal.
you have a benchmark, you can't underperform that benchmark. Why didn't you own these things? Why were you in Bitcoin? No reason to be in Bitcoin right now.
You make good sense. I don't know if it's logical, but it makes good sense. Let's get to some of your slides you got here.
I was looking at this FSOL. It's a Fidelity Solana ETF.
FSOL?
Yeah. And you get the staking rewards.
Okay.
$9, hard to borrow, plenty of volume on the stock side. July options are non-tradable.
You can't trade the options. You just buy the. Let's see if I can buy some.
Yeah, there's no open interest on the options. If you can do anything, it's a stock play.
I mean, you had mentioned earlier when you were talking to Q here about how there's no skew on the put side.
No.
Puts are very, very cheap. They can stay cheap, of course. They can get a lot cheaper. But nobody's hedging right now. Nobody cares. And maybe it is the summer months and we just kind of grind higher. But these are the points where you want to probably own a little bit on the upside with Bitcoin and ETH. They've got liquid options, ETH or IBIT, maybe some call spreads.
Yeah.
Maybe you want to own some calls in the VIX or some puts in the S&P. I don't know. Maybe it never goes down again.
Yeah.
But nobody wants it when when they don't need it, of course. And so maybe there's a slight contrarian trade there, maybe on the Bitcoin side. What I find interesting there is you can go out knowing that this thing I think presumably will still exhibit the volatility that it has historically, you can go out and buy some stuff that gives you a few months here, gives you to maybe get to that end of the cycle, gives you a little bit of time for almost nothing. I'm buying spreads for 2 to 3 cents.
Yeah.
And maybe they go out worthless. Fine. But what
are you
if
looking
they
at?
don't?
How high?
Right. And
How high?
How high? Because you're not doing the downside.
No. You could have done the downside a little while ago.
Yeah.
Nobody wanted that in Bitcoin or ETH.
How far out do you go? You go like
I'm going out into. Let me tell you for a second here. In ETH, I'm buying call spreads in the September expiration. So give yourself about 100 days, 108 days or so right now.
at the money, or are you doing?
No. Way out there.
Oh, you're doing them for
beyond what's priced in, given this vol at a 1 standard deviation move. It's just a bet that volatility doesn't stay at these levels.
Yeah, you're long upside volatility.
Yeah.
You get a big, a $2, $3, $4 move, and the call spread
It's
goes
the same
from-
way he's looking at your butterfly, like you were looking at your butterfly.
Yeah, exactly. But with a little bit more duration, it's like a play where, you're instead of buying, and I've actually talked about this in regards to just these single name equities that have gone to prices that I don't think a lot of people thought they would be at.
Sure.
And at this point, to buy a share of Micron for $1,000 is very hard for a lot of people. Buy 100 shares and do a covered call, it's a massive position. Stuff like this where you're doing an out of the money butterfly or an out of the money call spread where it's a long vol play. You play kind of this, tail upside sort of, right tail kind of trade where that spread goes from a couple dollars to, $10. That's the same sort of trade here. You do this for a nickel and it goes to 25 cents.
Yeah.
20 cents.
You're not trying to get the whole $5 spread.
It's a convexity play. It's a play on upside volatility to continue in something. This is cheap, but when you relate it into something like a Micron, where it's really hard to put $20,000 into shares and have all the downside. You do the butterfly for a couple dollars, you lose a couple dollars, no big deal. You buy, a handful of shares and the stock trades at 800 and now you're out, a comma.
Yeah.
And that's kind of, I think, how the market is trading right now. Sorry. Long-winded.
Let's take a look at a couple slides here.
Yeah, let's do it.
Actually, let's just go to the second slide. I mean, everybody gets it's blood red out there right now. But when we look at the expected moves here, we've got very low expected move, of course, as prices come down, volatility has come down. So we're underneath 4,000 on our Bitcoin move, but we'll call it about 4 there. Takes you to 65 and about 73 on your 1 week, 1 standard deviation. ETH, 137 down to 1838, 2100 on the upside. Solana really hasn't moved, just leaked lower here, 75 to 83. We've got Doge, which is actually outperforming Bitcoin, and you'll see that even though it looks terrible, ETH is outperforming ETH BTC. That ratio is trading higher. XRP, I mean, man, has that been quiet? 6 cent move in something that we were used to moving 40 cents at a time. 120, 132. We get down to 120. I'll probably get into just a small future to start with there.
Yeah.
Because I do think that this stuff, like anything else, gets just down to a certain price. It's just prone to a pop. And it could be a tweet from Trump. It could be some headline or something. But I don't think any of this is going to zero.
Doesn't matter where it comes from anymore, right?
We need eyes on the Trump wallets. Remember when we were looking at those, like he was like buying, what was his token? World Liberty
Financial.
Yeah.
They got great names, don't they?
They have like ETH, like he bought.
So creative.
Yeah, they have like stuff. So like we need somebody tweet me and let me know what crypto Trump's buying. We'll get some.
Right.
Some dog in me or something,
Yeah, the theme that I would keep an eye on, though, is the just kind of maybe the reemergence of the AI agent theme on chain. I do think that will be the commerce layer for agentic activity, and that's only going to continue.
Yeah.
All right, my friend.
What a wild.
One more slide, right? Do we have
Just a quick look at, a quick look at relative performance here. As I mentioned, ETH BTC starting to trade a little bit higher short term, just as Bitcoin's been dumped here recently. Doge has outperformed, but I mean, everything looks bad. We saw the first slide. Price momentum is as bearish as it typically gets.
Well, I'm completely perplexed by Bitcoin move without catching a bid for the last 2 weeks or so. The market grinding higher, volatility doing absolutely nothing.
Volatility is actually at the highs of the session right now.
Yeah, down 7 cents at 18. How low can volatility go? Even the S&Ps are up 9, trading at the high of their session. NASDAQ just off its highs, up 55. Russell up almost 1% at its highs. Dow up 37. Dow was the leader in the clubhouse. It's actually the weakest in the clubhouse right now. We're going to take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Are they on the floor?
Oh, it's always electric when the ladies are alive.
Peace. Thank you, Ryan, for coming in. I appreciate your time.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
gotta keep it smooth. You gonna want it right. They gonna bring it down. I gotta feel good. You wanna see my moves? Let's party all night. We gonna build it up and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way. I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing, this body totally bussin'. chegou. Não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, madrugada chegou. Madrugada, madrugada, madrugada chegou. Madrugada, madrugada, madrugada chegou. Não quero mais, não quero mais, não quero mais. Não quero mais acordar, não quero mais. Não quero mais. Madrugada chegou.
Hello, everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking, and it is, I would love to say Crazy Tuesday, but it's kind of quiet down here on the floor.
It's very quiet. We've talked to a bunch of traders right before the show, and they were saying it's very, very, very slow. You can kind of hear the lull down here, but that's okay. I mean, dare we say summer doldrums?
I was going to say that quiet before the storm on Thursday when the zero DTEs, when the PDT gets lifted and the zero DTEs go wild.
And it's going to be bonkers. Like I said, I think it's going to be the biggest rise of the retail trader, take two.
And we've been talking about this rise of the retail trader since we were in Germany. That was just last October.
Yeah, last October.
Last October, rise of the retail trader. And once PDT is lifted,
can't stop, won't stop. They can't stop us. And honestly, they can't stop Tasty Nation because we can close anything we want. Like my son right now sitting on he's waiting.
Oh yeah, he's waiting. He's waiting. Speaking of those SPX zero DTEs, let's jump into the platform. Why don't you what do you have it pulled up?
I do not. I have the platform pulled up. Yes.
Okay. So SPX zero DTEs. We're going to talk about that today. We're going to answer some emails we've gotten. This is going to actually be. We're going to push this out to YouTube so everyone can take a look at this. It's going to be our market movers for today.
Hey, we're in the SPX pit. We love trading the SPX. We like 0 days. We like 1 days. We're going to take a look at a broken wing butterfly in SPX 0 or 1.
We have lots of emails that have come in on this downside broken wing butterfly. Honestly, you could do it either side. Downside broken wing butterfly, upside broken wing butterfly. But people are using these 0 days to place these directional bets and put on a broken wing butterfly. So let's walk through a couple examples.
In the zeros, I personally have never put an upside on.
I have, well, I don't know. I don't know if I could say never.
And I never put one on, and I know, like, I stole this trade from Mike Butler, and Mike Butler does the downside in the 1 DTE. So this was a trade that I stole from him, and it's been pretty good. Like I said, I know our viewers have done it. They said 3 does not make a pattern. I've done it for maybe a month or 2.
Now, usually you're putting on the 1 day downside broken wing butterfly. This viewer question that we've gotten that I do want to answer today. He was talking about the 0 day. So let's look at the 0 day. We'll look at the 1 day. Being 10:13 and the market's been open for almost 2 hours, it's not going to look as good. That 0 day might not look as good. So we might put this on and we might put on a 1 day just because it's a couple hours past the open. Premium starts coming out of these options.
So what all that happens is that your expected move for the cycle starts to shrink and shrink and shrink. So I'm in the 0 day right now. We're going to look at 0 and 1 day in SPX.
Okay.
So if I'm in the 0 day, I'm going to, the mechanics of this are you buy one at the expected move to the downside, so the 7,600.
Got it.
Buy one 7,600, sell two 75.95s. Now, I'm using those numbers because those are the numbers. All it is at the expected move. So if you open it up at 8:30 and your expected move is the 75.85, 75.80, so be it. Right?
You can make these as wide as you want. We're not taking too much risk, so we're putting on just a $5 wide, and then we have to break that wing. So if we go 5 by 10 or 5 by 15 or 5 by 20, the wider you make that second leg, the more risk you take, the more credit you'll take.
At this time, you cannot do the $5 wide because you're getting 20 cents. That's not a collection you would want. So at this juncture, you have to break it by 2. So you're going to get about 60 cents for the $10 wide.
Now, 60 cents for a $10 wide. I don't know. A question we get is, what is management to this? If I'm putting this trade on for 25 cents, 60 cents, I don't know if I'm playing for the credit. You might be playing for hoping to think the market might meander down and end up in that spread. And so with these types of trades, I don't think there's management. I think if you're putting on a broken wing butterfly for very little credit, you're hoping that the SPX might end up in the middle of this butterfly, and there isn't management.
Well, and I think when I read the question, I heard what happens if there's an exit strategy to the downside. You actually want it to go down. You don't want it to go too far down. Now, I've had these on before multiple times where it goes down. You want it to end at your sweet spot. I don't manage them at all. This is nothing is a trade recommendation, but I don't manage them because there's so little credit. You're not playing with anything.
I feel like this is a trader question, a viewer question that we've been getting for years and years about ratio spreads and broken wing butterflies. People wanting to know a management for a ratio spread or a broken wing butterfly. So when you're putting on a ratio spread or a broken wing butterfly, I know it gets scary as the underlying mood is towards it because it starts to mark as a loss. But in the end, that's where you want it. So if someone is placing these and they get very nervous when the stock starts going down or the underlying starts going down and they're thinking, this is getting too close to my broken wing butterfly, I don't like the risk here, then change your strategy to just put spread. Because if you sell just a put spread and it goes down and you don't like that, you can roll it out in time. You can roll it out in time. But these broken wing butterflies, they're almost like you put them on and you leave them on.
I agree. And they are set it and forget it. And what's great about the SPX, these guys behind us, you want it to go down. So if I'm in SPY, I'm a little nervous because I have to manage it.
Yeah.
Because you have to take action or you're going to take ownership of a lot of stock. Here, it doesn't matter. If you're 1 strike in the money, if you're 2 strikes in the money, if it's blown through, it's all cash settled, which means you only have the cash at the exact print at the end of the day.
Why don't you pull up the curve view on the analysis so people can see what we're talking about? When we talk about, you want this to go down. If I'm putting on this trade that you have pulled up here, and we're only taking in a very small credit, what do you have? The 7,600?
I have the 7,600, I have the 100, 95, 85. I'm $10 wide for 25 cents.
Okay, can you shift it to... Well, it doesn't matter what you shift it to.
Here, do you want it less than that?
I was going to say at least taking 50 cents. So if you make it $15 wide.
So, I'm sorry, $10 wide for 55 cents or the $5 wide for 20 cents?
No, it was $10 wide for 20 cents or $15 wide for, right?
Here you go.
Because we got the 95.80, that's $15 wide.
No. Now I have the even 95.80.
Okay. So we're $15 wide on the downside for just about a 50-cent collection. If you go to the analysis page.
No, it's $10 wide.
95 to 80.
Anyway, you have the $5 in there, so it's $15 wide. You have the $5, so you're only risking $900.
You're only risking that
$945. So it's a broken wing by $10.
So I think there was confusion. Like I'm thinking we've got a 5 by 15, 5 by 15
but
butterfly.
You get the $5 in there, so there's only a $10
only
in risk.
$10 in risk. Only $10 in risk. So here you can see your peak of the most you can make is to the downside. So if the market goes up, you keep your $55. If the market goes down, you actually want that to happen. That's where you can make the most money. So if it's coming down and at the end of the day you're nervous about it, you want it to be there at the end of the day.
I agree.
If it blows through it, these are 0 days. They're not management.
It's risk defined, and even if so, I've had them before where I'm just making this up. But say it closes at 75.87. I'm out $30. I'm not like, it's not unless it blows completely through it, and it can, but it is defined at order entry. Let's place one in the 1 day because at this juncture we can only place. That's too little credit for us.
It's not enough credit. That at 8:30, it's a different story. At 10:15, it's not quite enough credit. So if you go to the 1 day and you pull one up, go to the expected move.
We're significantly down farther. If I'm going to the expected move, I'm buying one 75.85, selling two 75.80s. Okay.
Okay.
And then if I break it by only one strike, I'm collecting 55 cents. That's what it was when we broke it by 2 strikes. Or I'm going to break it by 2 strikes and I'm collecting 115. So I'm going to pull it in. So I've got the 85, 80, 70. Okay. 85, 80, 70. So it's broken only by $5 and we're collecting 55 cents.
So basically, if we throw this on, we don't worry about it. Tomorrow, if SPX is up or down a little bit, as long as it closes above 75.85, we just keep that 55 cents. I'm never closing this. I'm not going to close this trade to, take my profit. I'm going to leave this trade.
No.
So we keep that 55 cents. Otherwise, if it's down a little bit, it's possible we could end in that sweet spot of the center of the butterfly, or if it's through it, we took only $440 at risk. So I see why you like these. You're only breaking one wing because it's very little risk.
And I do like them in the 1 day. I don't do these in the 0 day. I do them in the 1 day.
But we've gotten emails about doing them in a 0 day. And
Yep.
I don't think 0 day or 1 day, as far as management goes,
they're the same.
I don't know what kind of management you
My
use for
only
this.
management is if it's a high class problem and you are collecting almost all your premium, I will buy back the 70 and shift it to 75, take all the risk off the table and leave it as a butterfly.
Oh. And that's management if it's winning.
If it's winning. It's a winning management style. But I'm going to ship this 55 cents on a $5 wide. I'll go to the analysis page and take a look at this too.
Now, I have not, we haven't really looked lately at the call side, but we know if we've done a lot of these durationally, and if you do the downside and the upside, whatever you collect on the other side, it's riskier taking off of the side you already have on. So someone could do both sides if they wanted to.
If they wanted to, sure.
Yeah,
If
they
wanted
could.
to, sure.
They could.
Okay, so I'm going to press the button on this. You can see here's the visual representation. We've got about 55 cents on it. We're risking $445 on it.
All
Shipped
right.
and sent.
And we're going to give credit to Mike Butler for that downside broken wing butterfly in the 1 day.
I think he takes a little bit more risk than we do. But
Makes sense.
Hey, you can bring a horse to water. We pick our risk profile, right?
All right, so that is the SPX 0 day trade of the day. We will have a new SPX study tomorrow from Jacob.
Did you read the? I know. I'm gonna. This is a fictitious question. Did you read what it is?
No,
because he puts it in. The research is done a week in advance.
Yeah,
it's short-term jade lizards putting it all together.
Oh, so we've had a few weeks of looking at short-term jade lizards. Yeah. Tomorrow we'll be putting it all together.
Tomorrow is the culmination of them, and I'm glad because he took a different route with it than we originally anticipated, and then maybe we'll start the series again with a different setup of them.
Yeah, can't wait to see what Jacob's going to bring tomorrow.
It's the culmination of everything. Now, Jenny, I do want to do this. So let's pop back in the platform.
I don't know what you're going to pull up first, but I'm going to guess it's HPE.
HPE.
Have you ever ridden on the Jungle Cruise in Disney World?
Have I ever ridden on the Jungle Cruise in Disney World?
O2H. O2H.
Never heard them stand that.
Yes. Every time you go behind the waterfall, every time you're in Disney World on the Jungle Cruise, you go behind the waterfall and you're behind water. You're on the backside of water. Everyone on the boat chants, O2H,
okay.
O2H.
And now it's all coming back to me now. Yeah.
All right. So HP, here we are. We put on a bullish diagonal. We said, thank God for Monday. We got this $9 wide diagonal on for $250.
Which means you get the inverse of that. If you look, it's marking $8.42 right now. It should be worth $9. But guess what? We've got 4 days left. That's why it still has that little bit to go. I'm closing it.
Hey, we're 50 cents away from full profit on this diagonal. And 232% on a 250 wide 250 $2.50 diagonal, we'll take it.
Heck yeah, we will.
Take it.
I'm going to make sure
So
we get
that's good. That's good because we have some bad. We'd love to have all good, but we usually have some bad with the good. And the bad today is crypto. Crypto continues its fall. We've got Bitcoin at 67,000 now. Ooh, that hurts. That hurts.
I'm going to need Shelly. I'm going to have to speed dial Shelly and find out what's going on.
Oh, yeah, it hurts. I mean, I heard.
You know what? I'm going to the office today with Annabelle. I'm going to shake Shelly down.
I heard MSTR was selling some of their Bitcoin. Take a look at MSTR. What's that doing?
Down 10%. That makes sense. That tracks.
And if you go to the chart, I mean, look at this MSTR. It's gone from 460 down to the low price of 135.
It's crazy. I mean, but it's a tale of two cities out there, and that's why the SPOOs are up, because these are down, but there's other things that are up.
Yeah, it's a mixed bag.
It is a mixed bag. It's kind of crazy. So MSTR is down, Coinbase is down, IBIT's down. What do we have in IBIT? I'm going to take a look at that real quick.
Oh, in IBIT, we probably added. So we have a short put on top of a zebra. Bullish, bullish, bullish. Now, our zebra, we talk about this. When a zebra becomes completely out of the money.
When your longs become the at the monies, as you can see.
So we need, let's clean this mess up. So IBIT, we have the 43 put, which is totally in the money. That becomes like synthetic stock. So that 43 put,
it's in the 3 days. So I'm going to buy that back, and we are going to get rid of it or shift it super far out in time.
Or I say we double up on our zebras.
I'm fine with that because we have a synthetic stock position right now.
So let's pretend we don't have that 2x1 zebra, which is the stock.
So I'm getting rid of it.
And we just have that put. Sometimes when a put becomes in the money, we will say, okay, that we essentially have stock. We could continue to roll that put, but that's getting pretty deep in the money where we're not going to get much for the roll. So when when something becomes pretty deep in the money and we're not going to get much for the roll, we transition that into a zebra.
We have a zebra already. Now, there's nothing wrong with not doubling up your position, but what I think when I look at this zebra is I would rather adjust the zebra and sell a call, because basically what we had was a very deep in the money. No, it doesn't matter.
I would, so me, if this is my position, I'm just going to close that short in the money put, close the existing zebra, and put on a 4x2, double down on the zebra.
Well, the zebra. So let's break the zebra down by itself first, without that other piece of stock. Okay, so if you have when your longs become the at the monies, which they did, they're at 39, is when you have to reestablish. Otherwise, IBIT has to go all the way up to 42 in order to just start to make money. Okay.
I can take over the show if you've got a priority notification coming through.
She said she's leaving. My daughter's driving all the way down to the Tasty Studios, and she just said she's leaving.
Priority notification. She's getting ready. She is getting ready for the new show that's starting Thursday. So
it won't debut Thursday. I believe it's going to be aired on the weekends, but we're filming every Thursday. So yeah. Okay. So what you do with the zebra, and I will actually show this as well, but so you close your original and then you open another with the exact same mechanics. So I'm going to buy 138, and I can see we have about $2. Sell 138, and you can see we have about $2 extrinsic value. So then I buy 2 with $1 in extrinsic value. So the 35s. Sell 138 by 235s. This is going to put an additional $345 into this existing one.
Right. So we're adding money to this, but this is if Bitcoin turns around and starts going up, we'll pick up 1-for-1 to the upside.
Correct.
We'll pick up 1-for-1 to the upside. So we'll have this 100 shares synthetically that will make money 1-for-1 to the upside. If we just left the zebra, it would have to go up a little more for it to pick back up.
It has to go up a lot more. It has to go up $4.
If someone wants to put on a zebra, because if someone says, hey, I only want to put $500 into this position and I don't want to put any more money into it, and I'm going to put on a synthetic stock replacement with a zebra, fine, put it on, never touch it, leave it, that's your shot, and you have a limited amount of days for the stock to go up. If you don't manage it, it's okay if you don't want to put any more money into it. But if we want to keep
very like guys, like it's okay if you do this side. It's okay. If you do that side. Everything is okay. Yeah.
So because I feel like there can be if things go up and we keep ratcheting, and then it comes back down and we keep moving,
It's the same thing as stock.
There's no point in there. It's going to act the same as stock, and
but you're just using less capital. If you go ratchet up and then ratchet down, you're using less capital and you're just holding the stock. That's exactly true. Those are facts.
Right.
Yes.
The P&L is not going to be any better than if you just had the stock.
But it's not any better if you have the stock. If you have a zebra, you're going to make the same amount as if the stock went up. You'd make the same amount.
Some people look at the zebra and say, okay, well, my losses are capped. I'm only going to put this much money into it. If it goes down, my risk is capped. Well, your risk isn't capped if you keep putting it on.
I just try to use it as a stock replacement using less capital.
I think it depends. Like today I threw on Zebra in Costco. If Costco starts plummeting, I don't think I'm going to put any more money into it. I might just say
no, but you can't afford Costco. Like, I'm not saying. It's
one day, maybe one day I can afford.
It's $1,000 stock. Like if you want to shoot your shot. But it's the same thing. Like that's not something you're like, I want to hold this stock forever.
Right. So that was one of those situations where, oh, I'll put $5,000 into a zebra in Costco, but I don't want at the end of the day to say, oh, I've dumped $50,000 into Costco, continuing to adjust my zebra. That's a one-time shot, Costco.
No, but you would have lost $50,000 if you would have adjusted it with this stock. Like if you would have bought the stock for it, yes.
Yeah, but again, it's like a one.
And she can afford Costco, and she has a membership.
You can put on a zebra if you want as a one-time shot with. This is all the money I'm willing to put into it.
100%.
But this is our IBIT is a long-term trade that we're going to keep forever.
Unfortunately.
You're going to watch us move the zebra around forever.
Unfortunately, it is. So we put an additional $300. Now, if we wanted to add the other one, we'd have to double it up. So I just want to show the price of it by itself.
We don't have to double. I
don't mind doubling. Honestly, I thought about buying back our shorts, which is going rogue in the
We don't have to double down. We could go back to like weekly put.
That other one was doing nothing for us. Okay, so I did put one in, the exact same one on top of it. So when you put it in together, we put in another $300 in. When you're putting this in solo, it's $637.
Yeah.
I'm fine with it. I say we do it.
Well, that's what I would do.
I'm doing it. You can't stop me.
If I had a long stock position, whether it be stock, zebra, whatever, if I had a long stock position and I sold puts against it to collect some premium, and then that put got so far in the money, I have to be willing to take that stock, or I shouldn't have sold that put to begin with.
And you know what's fun about IBIT? When I bought back that put, we got back $1,500. When I placed this zebra, we used $6.
Yeah. Now we've got 2 zebras. Maybe we could get crazy and sell one call against it if we feel like it, but I would just leave those for now.
I want to see if I have this up. I don't. Hold on. I'm going to go to, this is amazing internet connection, but tasty. There we go.
Oh, here. So, do you want me to keep that up?
Here, you can leave it up. So shows, people know I went to the internet. It's not a surprise. That's how I went to it. I typed in Tasty Live. But if you go to shows and then you go to Liz and Jenny Strategy Series, here is the zebra. Now, what we did was a losing zebra. We closed and reestablished. But if you go down there, here is the zebra. The zero extrinsic fact ratio.
What did we get filled on? The second zebra?
That must have been second
zebra. All right, I am gonna get to work and start pushing our trades out on the follow page.
So that's the 2 things that we wanted to make sure we managed in there today. I'm going to take a look at P&L percentage of everything else. HPE, we are not filled yet.
No, we're not filled.
And it's going to 810. I'm fine with that. I'm actually okay.
Well, because it's a winner.
810. Okay. So, and it's because we put it on a Monday. It's a Tuesday. There's still juice left in some of those things.
So we're filled in HPE. We're filled in our SPX. Downside Brooklyn Butterfly in tomorrow's day, the one day, and we're filled in our IBIT adjustments. So that's all going out to the follow page right now.
Take a look at this, Jenny Andrews. Wait, no, hold on.
You're very excited. I have no idea
what. I think I'd
although I have a surprise trade for you. I hope you're not finding the same thing.
No, I'm not. I wanted to look at our natural gas. Natural gas, we have it all butterflied off. We have the 285, 280, 275. That's fine. It's all butterflied off. Is that what you were going to put on?
That was my surprise trade for you. That was my surprise trade. That our natural gas was all butterflied off, and I was going to show you a brand new one. Add it above it. That was my surprise.
We're starting to share a brain. Starting to scare me. Okay, so let's do that now, and then we are taking live tweets with the hashtag LAZJNY.
Okay. All right, so let's go to natural gas, show what we have now in the curve view, and then show how our trade will change when we add to it.
Okay, so what we have now is a straight up butterfly position. So
I feel very busy today. I don't know why.
Dizzy?
Busy. Very busy. Very busy pushing out these trades.
Don't worry about it. I'll push them out later because you're hard. You don't multitask.
I don't. I'm not. There is a woman we used to go to that would do our hair, and if she talked, if she would tell a story, she would stop doing your hair. So you could be in this chair for 4 hours.
It was insane.
She couldn't multitask.
She
I'm
couldn't talk.
I'm a little better than that.
Okay, so this is what we've got right now. You can see this little flag is where the natural gas position is currently trading. We have a peak that is lower. So we put on a downside broken wing butterfly and then wound up buying back one of the longs and moving it up. So it's creating a specific butterfly. We have locked in $260.
Yeah, how about the side? We could see our activity. So you could see in natural gas, if you pop up the side, you can take a look at our activity and see that we put this original broken wing butterfly on for 0.018, so it's $180. And we paid only a dime to complete the butterfly.
So we locked in $80.
Oh, a dime. I was thinking a dime, $10. No, $100.
Yes.
That's not as good. That's not as good as I was thinking.
We locked in an $80 win, but great because we've got an $80 win and a shot at that butterfly. But what I know Jenny's going to do now is this is very exciting. You're going to put another one on top of it because we have that protection.
I already pulled it up on the train. We were on the train. I was secretly pulling this up.
She's going like this. I didn't know what she was doing on her platform like this.
So this is the way my mind works. If we have this broken wing butterfly, I would go 2 strikes above and buy the 2.95 put. Okay. Sell 2.9s because I don't want to cross and mix with any of the.
Oh, and then you're going to buy the
and then you go way down. You go way down to a strike we don't have, and you buy the 2.7.
We're getting $210 for that credit.
Ow!
$210 for that credit. Or $200. I'm going to go back to the curve view.
And let's see what changes.
We've locked in to the upside a very significant amount of credit. Your peak is then $910 at the peak.
Yeah.
And then at about 282, you can lose $1,000. Not bad.
No, wait. What do you have? I have at 2. We wouldn't start losing until 280. 2.8. Let me look at it.
Yeah, it's exactly the same thing. Wait, what do you have?
Yours is different than mine. A little bit. 2.7, 2.9, 2.95. I have it all. I don't know.
Who's to say?
Looks a little bit different.
But it's close enough. We know we have that butterfly protecting it. Meaning, so if we go down a little bit, there should be a second peak. You've got a wide range. Even after the peak to the downside, it moves it. I'm cool with this.
I do like it. Now, what I would look at is what is our max loss? If we go to hit our max loss by adding that second one, max loss is $1,000. I can handle that.
Yeah, we hit 800 in the original.
Yeah, right. Just throw that on, Liz.
So,
and then another $200 in credit. Great.
When we get filled.
Not if. When.
When we get filled, I'm going to take that. I'll put the order in to create the second butterfly.
Oh, sure.
Yeah.
Or just leave it and keep that $200.
Yeah,
but we can't. We can't put the order into. We can't like we did the last time. But we gave up $100. So it was a big give up.
I like your secret trade. But now we've got it. We'll see. We'll see. Okay.
See, I have secret. Now that we're wearing blazers, I have secret trades up my sleeves.
Yes, she does, ladies and gentlemen.
I've got another secret trade coming up for us.
Okay, so let's. Do you want to pop into Twitter real quick? I'm keeping an eye on the time.
Sure.
Let's go to Twitter and just kind of take a look around. We've got Ajit coming in, and I'm going to refresh, which I love this. Names with elevated IVR, IVP, IV, and historical volatility this morning. And take a look at all these names. And I'm going to retweet this because that is a PSA for everyone, Ajit.
That's great, Ajit.
Yes, I appreciate that.
Ajit is amazing. He does all this work, so we don't have to. So we appreciate it.
Yeah.
And Fabio says, I forgot, do we still have the Walmart strangle running?
I believe so.
Do we?
Yeah, unfortunately, let me flip our things upside down. So I flipped Walmart to the top, and yes, we do. So we've got the 115, 120 strangle in Walmart.
120?
I'm sorry, 129.
Oh, I was like, I need new glasses. 129.
Yes.
All right. I don't say unfortunately. It's trading 113. It's not terrible. We can roll that call down.
Well, it's not winning. That's what I'm saying, unfortunately.
I mean, it's roll that call down and take in more credit. It's at our put.
So we could roll it to, I could roll it to the 19 and take in 86 more cents. Oh, I'm selling it. And take in 60 more cents.
I don't know how crazy you want to get because that does seem a little aggressive.
It seems nuts. I say we take it out. I say we take everything out in time.
We could take everything out in time, but I like to get trades off sooner than later.
How much did we collect? Thank you, Fabio, for bringing this to our attention. We collected $218.
No, but Walmart was, I think it first started as, I'm going to look. It started as a diagonal, an earnings diagonal, full loss. So we lost $300 on the earnings diagonal. Then we sold this strangle.
For Filled and Butterfly.
We sold this strangle for $218. So we need to really.
Did you get the ammonia smell yet?
The what?
The ammonia smell?
Yeah, cleaning time. Instead of Green Day singing closing time,
It's cleaning time.
The lady's going by with her rag singing cleaning time, and the ammonia is coming through the vents.
So in putting a Band-Aid over a bullet hole, I'm taking it from the 129 to the 120, and I'm going to collect.
Hold on.
$50.
You're only going to get 50 cents?
Yeah.
Don't get that aggressive for 50 cents. Maybe.
Where do you want to go?
Okay, none of that looks good.
I know,
None
that's
of
what
it
I'm
looks
saying.
good.
Where would you like to go?
None of it looks good. Then just buy that. Then leave it as is. Maybe buy that 129 call back.
Well, whatever. We can use the 10 cents. Honestly, we're going to keep an eye on this. We appreciate it. It's at the long right now.
Sure, leave that 115 put. It's
at the
kind of
long
an
right now.
aggressive put. We could roll it, but I'd rather get out of this in 16 days.
We're still playing for a bounce in Walmart.
But to answer Fabio, yes, we still have it. We still have
Take a look at what Ajit did for us. Take a look at Ajit. Butterflies are one of the most adaptable option structures ever created. They can be structured for, and then look down here. He gives you every form of butterfly, what it is.
Okay, so for anyone who's emailed us about these butterflies or broken wing butterflies, hopefully this answers your questions.
That's Ajit.
Ajit.
On Twitter. I love it.
All right, Shredder Builder, RSB Ratio Super Bowl or Bob on Fire for a big win in Marvell. Yes, I mean, Marvell is on fire today.
I rubbed my eyes 4 times as I looked at my phone when I woke up this morning.
We're not going to talk about it today. We're not going to talk about it.
I'm happy, but I'm not happy. It's like I'm a little bit happy and I'm a little bit sad because yesterday I covered half my position.
With sold some calls against her Marvell stock.
Half. So I'm happy. I'm half happy, half mad.
I thought I saw Marvell. I thought you'd be very happy. Saw her at the train, and she.
Well, because up until yesterday, I was, in the words of Chris Vecchio, all tech, no brakes. I had no brakes on in Marvell. And I'm happy. I'm very happy, but I'm not as happy.
Go to the platform and show Marvell. It's up like $52. Last I looked, $52. Where is it now at Marvell?
64. No, this is good. It's good. I still have half of it. I'm very,
it's
very
insane.
happy. Very, very happy. But what I did is I had the 230. Here, the 230 and the 16-day. That's what I had. That's my call
The
against
short
it.
call. The short call.
And I pulled that up. So I wound up buying that back, and I rolled it all the way out to August.
You went like 80 days. Yeah.
I went to August, and I actually sold the 280s.
Great.
Now, I did not pay a debit for it at the time because it's now up higher than it was. I did not pay a debit, so I have it on for even. So it is what it is. Now I just have to wait for that move.
It's fine. Who could have predicted that Marvell would be up $65 today?
I don't know, but it's crazy, and I'm very happy for your Super Bowl.
Yeah, Shredder Builder, we're happy for you. And Liz, you can't be mad. You've got half of
No, I said I'm like half happy, half mad, and it depends on which side of my personality you get. Because
one minute she's we're cheersing to her half of her Marvell stock,
and then the next
other half. Gosh. All right, let's move on to Mikey. Happy Tuesday, ladies. I've done 14 to 30 DTE broken wing butterfly, 14 to 30 DTE broken wing butterfly.
So 14 to 30 days till expiration.
When there are big up or down days, playing for a reversal. The downside is better since if you put them on the upside to fly them off for a net credit is harder because vol increases on a down move.
Agreed.
So great point, Mikey.
So Mikey, thank you for articulating why I just said, as like a Neanderthal, I don't do them to the upside.
Mikey is explaining it to everyone.
And Mikey, I might need you to step in for me at some point when I do this to my daughter, when I was like, I don't know, we just don't do it. Mikey, I'm going to need your help.
We're going to need some guest instructors.
We're going to need some guest instructors for Annabelle.
So Ajit, more info from Ajit. Amazing.
Okay. And then Bob on Fire, we appreciate your list, but I'm going to give you a little heads up today. This lady, raise your hand, is going to be on last call with a talented other brunette named Tony Batista. He better be on his best behavior.
He brunette?
Yeah.
Silver fox.
Former brunette.
Yes, Tony will be joining me this afternoon on Last Call. So I'm looking forward to it because honestly, I don't think I've been on air with Tony in a while. eager to catch up. I've been getting lots and lots of texts from Tony over the last week because he saw that my boat is for sale. And Annie, I love you. I posted on Facebook my boat.
Is Annie buying your boat?
And no, and Annie said just that I thought you sold your boat.
Yeah, because it's like a saga on here. She sells the boat, she gets
It fell through. It fell through. The sale fell through. The guy was really trying to like bargain us down. Yeah. So I still have it posted on Facebook.
The boat is back. Mikey, the boat is back. We still have a shot this summer.
And if people are confused, because on Facebook, people were asking me like, oh, are you selling this because you're buying another one? But I'm trying to sell the boat, so I didn't want to say, no, I'm selling it because I never use it. Lake Michigan's a beast. But I didn't want to rattle off the list of why I'm selling it. So I was like, yeah, sure. I didn't buy a new one yet, but I'm going to. But anyway, Tony, I'm looking forward to seeing him because he's been texting me since his wife saw on Facebook I'm selling the boat.
Maybe he'd buy it.
You could buy it for Vinny.
It would be perfect for his Florida house because they have the channels.
Well, they already have 2 boats down there.
If you have 2, why not add a 3rd?
I don't know. Maybe he'll start boating in Chicago.
Okay, let's go back into Twitter because I want to get to Fabio.
Oh, yeah. Liz, what does Fabio have to say?
At the Apple Worldwide Digital Conference, will start in a few days with some great innovations. Would you consider a ratio spread bowl, which is the Bob on Fire, or a buffer, which is almost the same thing? Oh, I like this.
Yeah.
Ratio Super Bowl for 380 days or a buffer for 8 days.
If you're playing that conference, maybe the 8-day. Let's compare it. Let's compare the 2.
Okay, Apple.
Buffer, 8-day buffer, AAPL. It's 1043. I don't know that we're ever going to get to my other trade idea.
I know. Well, we could put a pin in that.
Yeah.
Okay. And then so the buffer, the 8-day buffer, you're buying a put spread to just underneath where it's trading, and then you sell one at the expected move. So you're
$10 wide, right?
Yeah, it's the 312.302, and you are paying $3.19 for it.
Ooh, so this is not good. This is a no bueno buffer. I don't think your short put then is the 317. You're not getting that much for the risk.
Well, okay, hold on.
It's not terrible.
I was just going to say, you can the most you can make is 456, right?
Yeah.
So you can basically just sell the 312, but that will bring your break even to 307. So it's giving you an extra $5 in room versus just selling that at the money. So I mean, I'm giving you the pros and cons of it.
Right.
So it's not one of those, wow, look at my room.
With a $300 product, I would expect a little more bang for my buck. Like if I'm going to take the risk of a naked put at 302, which is just $10 down, I thought I would get a little more profit potential.
Yes, you would think so. I do like them short term like this. And it does have a high implied volatility too. But
so here you're capped out. The most you can make is 468. But you're not capped out on risk. You have a short put at 302. So you'll lose like 1 for 1 to the downside below 302. But this is only on for 8 days. So it's a very short-term trade.
Short-term trade. And I was going to say, the comparison that I usually make would be just the at the money. So here you're using, actually more capital, and your break even is 307. So the same profit potential in just one put will bring your break even to 307. So if you want that buffer to the 302 with that same profit potential, not a bad trade.
Not a bad trade, no. Now let's compare the buffer. So we went to the 380 day, which is June, 380 day. And when you set up a Bob on Fire or a ratio Super Bowl, you buy the at the money. So buy the 310.
Okay.
Sell a call that's half the price. So sell the
360.
360. So you've got a $50 wide. That's $5,000 in profit potential. And you have to sell 2 puts to pay for this. So it's going to be the 260 puts. You're going to have to sell 260 puts.
So in an ironic turn of events, because you're so far down with the puts you're selling, even though you're selling 2, the
buying power is not that much.
The near term was $6,000. This farther out one is
$7,000. Because you have 2 short puts instead of 1, but you have 2 short puts at 260 instead of 1 short put at 302. But this has $5,000 in profit potential.
You won't get that until the very end, though.
But if Apple goes up $10, you'll make $500.
You'll make $5. Yeah.
If Apple goes up $10, you'll make $500.
Correct.
Where that other trade, you'll make $450 if Apple goes up $5.
Yeah.
Yeah. So I don't mind either, I think I would pick the buffer.
I don't mind either. Now, we're not going to pick either of these because $6,000 is a lot.
It's too much for us.
But I would probably lean towards. But like I said, this is. I like that they asked us this question because I think this is a matter of personality, right? So, do you want it to be off? very quickly? Or are you only playing for $500?
If you're only playing for next week's news coming out of the WWD, what is it?
The Worldwide Digital Conference,
WWDC. If you want it just for that period, do the 8-day buffer. Or if I'm going to play something for us, I think we could play like a diagonal. We could do a short-term diagonal. That won't cost too much. If we sell the 8-day at the expected move.
Yeah, let's do the 22 and a half, 322. Okay.
And then
let's buy the 16-day. Let's give it 1 week.
Buy the 16-day 312. So we're paying $525. We're paying that, but then we have no more risk than that.
But it's the same profit potential.
For the 500. Yeah, it's half the... Yes. Right. So we only have $500 in risk, but we have $500 in profit potential. We're buying a $10 wide diagonal for half the price.
I like this. So of these three options, I would probably go like this because the profit potential. You could also sell the 300, 395.
Yeah. We only did the... Hold on. It jumped. I was going to see how cheap we can make it, but the strikes jumped. So if we did the 10-day, 8-day, it's still $4. I'd rather do the weekly.
I would rather do the weekly too.
Maybe we do that. Put it on that diagonal apple.
Just for the Western Digital, let's do the 8-day.
Yeah.
Fine, let's do it. We're going to sell the 322. I'm going to buy let's take it in a little bit. Want to go to the 13-day to make it cheaper?
I looked. It doesn't make it that much cheaper.
No, it doesn't.
It doesn't matter.
If you vetted it, I trust you. Let's go to the 312. We're paying $522. We've got $5 in profit potential. Same thing. Thank you for bringing it to our attention. This account is much smaller. I kind of think I might go with the Apple buffer in mind.
I think I like the Apple buffer because if you look at where you would get in on a pullback, it's at 260.
Oh, no.
With the buffer.
I like the buffer. You're talking about the Bob on Fire.
Oh, I'm talking about the Bob on Fire.
See, that's what
I'm going with Bob on Fire.
I think I'm going to go with the buffer.
I'm going with Bob on Fire.
Yeah.
I'm going to put on the diagonal for the short term, but then if I wanted a longer term trade, I'm going to put on the Bob on Fire. Yeah. And I don't mind coupling
but
that.
You know what just happened right here between the two of us? And we misspeak all the time, so it's not at the end of the world. But I know what she means when she says Bob on Fire.
When I said the 260 break even.
I was like, that's not the buffer because that's why we name these things something like I know Bob on Fire.
Right.
Because I know it's going to be long term. It's not like you would put a Bob on Fire in the 8-day. You'll put a buffer on in the 8-day.
The 8-day, I think I just like the diagonal. I like the defined risk, $500 in risk.
Yeah.
Versus...
I don't mind being long in a 302.
I don't like my naked put at 302.
I don't mind the 302. But once again, the world is your oyster when you're trading options.
Sure.
Yeah.
Sure is.
It sure is.
Although I don't know about the buffer going all the way out to June. But
No,
I guess.
an 8-day.
No, not the buffer, the Bob on Fire. Going all the way out to June.
Yeah, that's
Don't
far.
you see that? That's far. 380 days. That's more than a year. If something happens to me, I hope you could log into my account and take care of that trade.
That's funny. Okay. Let me let's take this off. Do you want to go back to Twitter?
Oh,
what do you want to do next?
We have 5 minutes. And I told on LinkedIn, so we have a friend, Victor Viner, who posts some great information on LinkedIn. He's got a pretty cool project that he has.
We met him in Germany. I met him in Germany. I don't know if you met him.
We met him in Germany. We've talked to him here. We've talked to him via Zoom. And he, this morning on LinkedIn, or it might have been yesterday, he posted about Costco after earnings, and his post was from looking at some studies after, and I could actually read it to you because I don't want to misspeak.
Here, I'll pop in here so you can read. So you can.
I will read you. It says after earnings, studying 40 earnings cycles. In the next 7 days, the mean return in Costco was 0.5% positive, 59% of the time, and after 28 days, a 3% positive mean return. 77% of the time. So I thought, you know what? I'm going to go out into at least 28 days and put on a bullish trade in Costco.
So what I love about this is, I know you were reading it and you're giving those numbers. Those numbers mean nothing to me.
I hear bullish Costco in 28 days.
Bullish Costco 28 days. Yes.
Bullish Costco 28 days.
So then let's go, we can go to regular July, or I can go a little bit nearer term. So we're going to put on and we have about 4 minutes. We're going to sell a put spread to buy a call spread.
Let's just stick with the 45-day.
Okay, 45 days. So if I'm selling a put spread, I'm probably going to do a $10 wide. So I'm going to go the 900, 890 for 222. This is going to be perfect.
Then you have 222. You can do $5 wide call spread. So you can do the 950, 955. So you're getting a small debit.
Small debit. Now I can pull it down, can't I?
You're going to pay more.
Oh yeah, you do pay more. I'm okay with a small debit.
A small
Do you know what I could do
debit.
though too?
Or pull the put spread up.
I'm going to pull the put spread up one. So yeah, there you go to a credit.
Okay.
Now I have the 905, 895. Okay.
And I'm okay with the 905 because take a look at the chart. Costco has done nothing but go straight down.
Yeah, it has.
Go straight down. Now today, where did it open? Opened at 942, 946. It got as high as 950. We had a little run. We had a little run at,
and it came right back down.
Because I threw that zebra on in Costco, and then it started running up. On the train. We joked about taking it off.
Yeah.
Too bad we didn't take it off.
That's all right.
This is a 28-day trade.
Okay, so that's exactly what we're going to take a look at in Costco. We're going to put a bullish trade on. We're selling the 905 and 895 put spread, and we're buying the 950, 955 call spread. We're taking in a credit. So you can see what we did. I just didn't want to pay a small debit for it
Because you could go to the curve view if you want people to see it on the curve view.
So this is what it looks like. This little, here's your flag. That's where the stock is trading right now. We have room to 905 before we start losing any money. That small little credit is still built in there. And then above that, we get to keep $518.
Great. Perfect.
Yeah, I don't mind
it. Ship it, and I will get it sent out to the follow page. So far, I've got everything out. So if you want to see the trades we did, if you feel like we went too quickly and you want to take a look at the trade, all you have to do is click on the
I
little
want to make
people.
sure we get filled. I brought it down to 10 cents. We're not getting filled.
Well, that's fine. We don't need to chase it. Costco can be tricky, but you go to the little people here.
Because it's $1,000. I did yell, you can't afford Costco. She can't afford it.
So they go to Liz and Jenny, and you can see our trades right there.
Yep. So everything, we've got the natural gas, we've got 2 IBITs, we traded 1 SPX trade, we closed our HPE, and then everything else was done yesterday. Let's see what we're working.
We got to all the tweets, then we got to everyone's tweets.
We're working Costco.
And this was the fastest hour of the day, but we started a little late, so.
You also get 30 minutes with Tony Batista. Are you excited?
Usually you remind me that I have last call. Without you to remind me, I don't know. Tony might be on his own today.
I'm going to be at the Tasty Studios. I'll post some pictures.
Yeah,
I'll post some pictures from
Send us something. I'll put it on Twitter.
I will.
Okay. Thank you for everybody. Thank you for watching. Have a wonderful day.
Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow. I'll see you at last call.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade. We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. And of course, Thomas, as it is Thomas Tuesday.
Thomas Tuesday.
Oh, yeah.
How you doing?
Doing good. I feel like I need a taller desk, you know?
Yeah. I can see it. Yeah. You are a tall guy.
A little tall.
That desk does not represent situation.
Jack it up a little bit, but it's going good. It's nice and hot outside the way I like it. I was gonna go see the back rooms this weekend, but
I saw it.
Did you see it? How was it?
I saw it last weekend. Yeah. It was. I liked it. It's interesting. It's different. You know what I mean?
Yeah.
Did you see? What is it called? Obsessed.
Obsession, I think.
Obsession.
I've heard about it. I haven't seen that. No.
I've seen a lot of clips on Twitter. Yeah.
It's a trip that those are the two movies that a lot of people are talking about.
Yeah, I mean, horror's coming back like the past couple of years. It's it's making a comeback.
Yeah.
I like it.
Well, Obsession's crazy because it's like it was made with less than $1 million and it is like #1 at the box office right now.
Yeah, it's wild.
So.
I feel like I don't think it was $1 million, but they did not spend a lot of money on backrooms. There's no way they did.
Yeah.
It is. Yeah, you see this. I don't want to give anything away. You see the sets. It's like they didn't spend a ton of money on this.
I'm trying to stay away from the spoilers online because it's like hard not to see them now. But yeah, we'll see. I always watch the YouTube, the found footage. It was called. I think the same director. He made it when he was like a teenager.
Yeah.
And that's just crazy. It's got like almost 100 million views.
Yeah, that was like the original.
Backrooms, right?
Yeah.
Yeah.
Yeah. Isn't there's some connection to like Oshkosh, Wisconsin or something? Have you guys seen this? I heard about this. My wife's from Wisconsin, so anytime anything happens in Wisconsin, she's going to talk about it. This is what happened. This is what they do. So I did remember seeing something like that, but yeah.
Yeah, there's a handful of movies that were like Sundance Film Festival, like short films that they made into like actual films.
Mm-hmm.
So I wonder if that's the same sort of thing where it's like you have this little short that you make and then gets a lot of traction and then finally you just blast it off into a full
The budget is $10 million for Backrooms, and I bet of their budget, a quarter or a half of that might be for the actors.
Yeah. Because there's some actual there's some well-known actors there.
But still, $10 million for a movie? I don't know. What's the average
it's
budget?
pretty low. I mean, yeah, $10 million is nothing for a movie.
Right?
Yeah. Nothing. But yeah. Hewlett-Packard, if you bought a printer 20 years ago, is still worthless. But the company itself, the stock itself, up 20% after the earnings announcement yesterday. And it's just been kind of an insane little whirlwind here of these stocks just ripping higher. This is another one that was trading at 20 and now it's at 55, got as high as almost 65 earlier today, selling off a bit. But the 90s stocks are flying around. Hewlett-Packard, Dell, Intel, IBM. What else am I missing?
Well, even better, and I just had to look it up to remember, this one is a spinoff. Like, this was part of the Hewlett-Packard business, and they spun this off. And I don't think this company was it wasn't doing anything for years. And now, boom. So,
insane.
Just to add even crazierness to it.
Yeah.
Dell, came back to the market, right? Like, I think
it
Dell
was
had
public, went private, came back a couple years ago.
Came back to the market, boom. I mean, there's something happening here, bro. Like, it's crazy.
You think HP would have already been making a ton of money with how much their cartridges are? Every time you got to refill your printer, it's like $60 for some ink.
Yeah, that was one of the things that we there was this documentary recently on Netflix and talking about like waste and things. I think I mentioned this before, like how things like clothes, they just wind up in like West Africa's crazy amount of clothes, but just the amount of waste and how things are created so that they don't last forever. To that point about cartridges, like you ever notice like there's no printer that lasts probably more than 2 years.
Yeah. Or like your cell phone, one of these, there's always an update that's like, we're installing security, and it's really just a sabotage for your phone. So it's to kill your phone, so you have to get a new one.
And they got sued for that, I think.
Yeah.
Eventually they had to
I always knew that was the case, because you download something, and all of a sudden your phone, your battery wouldn't hold. And I'm like, wonder what happened here.
Right.
The old sabotage. But yeah, interesting market today. Bitcoin selling off aggressively here. Picking up steam to the downside, down to 67.5. ETH down as well. But yeah, I think when it comes down to the futures market, Bitcoin, ETH leading the way. You've got wheat, corn, soybeans. I saw that they were halted this morning. Was that because of a news print or a number coming out? Do you know, Thomas?
I'm not really sure on that. I haven't looked at soybeans too much today.
Yeah, they're all down 1% around there. And then to the upside, copper, silver, gold, and of course the energy products, crude up a little bit, but you've got gasoline futures and natty gas is somewhere around here, chopping around here. Where is that?
Do you have anything on an ETH?
Yes.
You do?
I just have this short put at 18.
Yeah.
It's down a little bit, but just selling premium, 45 days out. Could get assigned, we'll see, but there's only 13 cents of extrinsic here, but I'm already at the 45-day cycle. So if I take the shares, I'll just take the shares and hold them.
I might buy shares here.
Yeah.
It's actually cheaper than doing the short put.
Yeah. It's been a sliding little sell-off here.
Okay, it's the same. I saw something wrong. Never mind.
But yeah, I haven't done anything. Actually, that's a lie. I did close my NVIDIA position I was filled on. So the NVIDIA call diagonal spread, put that on a couple of weeks ago, and that was almost a $300 winner from May 21st. So that was just bought the 220 July, sold the 230 June, closed it this morning for $300. I'll post that to the follow page since I was filled just a little bit ago. But yeah, NVIDIA was up big earlier today, and it sold off quite a bit from the high.
Yeah, last 2 days, strong move.
Is this the end? Is everything fizzling out? It feels like it might be a little fizzle session. Microsoft down 16 points, almost 4%.
It does feel like that. And I don't want to say like Bitcoin is a tell, because obviously, I mean, Bitcoin's been following the market, but I find it interesting that the last 2 days has kind of gotten sold off. And then today, along with it, the software names sold off. You could easily see a situation where a day or two later, not only is Bitcoin selling off, but software names, but some of the high flyer tech kind of selling off. So yeah, I'm trying to like peel back a little bit of exposure.
Yeah. And this has been accelerating to the downside in Bitcoin, which is interesting. We got as low as 57.5-ish beginning of February. We haven't been as low as we are now since the war, really. So kind of ominous, that is for sure. But all the while, volatility is down. And you've got 2.5 points of contango between the M and the N contract, and almost 5 points between the M and the V. So still, even though we're seeing a lot of selling in some of these single name stocks, volatility is still telling us that the market will just continue to drift up and to the right on average if we stay at this level of volatility contango and low in the VIX here at 16.
Yeah, man. I mean, like you said, the vol is low, is particularly in the index, but in the individual names, it is high. And we talked about that yesterday. I think that's something to pay attention to, especially since not only is VIX low, but historical volatility is really low right now. It's like 10. So I think we're getting to a point where we could see somewhat of a 1% pullback at some point, pop things up just a little bit. Just because I don't think that phenomenon lasts long, where we have implied vol so low and then also historical vol so low, but yet individual vol is high as hell. I mean, look at Marvell today, bro. Like, holy cow. That is a big move. And we've seen more of them from Micron and the rest. I mean, it's the same conversation where I probably sound like I'm beating on a drum here, but I don't know. At least that's what I'm preparing myself for, because it just seems like something's going to give it a little bit at some point.
Crazy. Just straight up every single day. And we have, what's the other earnings announcement that feels like it's in line with the rest of this? Oh, yeah. Oracle and Broadcom. That's the one I was thinking of. Broadcom. And Broadcom is tomorrow after the close. And I feel like Broadcom, if it's going to move the way that these others have, I think it could be interesting here to see where that goes. But yeah, all these have just been vertical bars to the upside, super concentrated in these tech names, and that's just been the story of the last couple months. Crazy.
Yeah, we get Palo Alto today, I think, after the close, and then CrowdStrike.
Yeah, Pandebia.
Pandubia.
This thing has also gone from 140 to 300. So it's just like craziness. Everything's up 100% or more in the last 2 months. And some of these haven't announced earnings yet. What do you do? What do we do with it? Other than just call calendar spreads. Like, that's all you can do.
That's all you can do. You don't want to get caught holding the bag too heavy on this.
No. But yeah, I'll probably do something like that in a little bit here. But if you have any trade ideas for Pan W or Lulu, CrowdStrike, Ulta, Broadcom, those are all still viable. But the tech stocks, I think, are going to be the big movers here, either to the upside or downside. But it seems like they're all just moving up. It's nuts.
It does.
But yeah, join us on the YouTube channel if you want to toss in your trade ideas, questions along the right-hand side chat. We're streaming live there. Just head over to Tasty Live. You'll see this video streaming live. But first, we do have some slides for you all. And when you thought the old screw worm was gone, it is coming back. You said that they're a day's flight away.
Yeah. I'm not sure how far they can actually fly in a day, but
with their shields and their goggles over their eyes,
yeah,
and ready for battle.
They're on a mission.
Wait, this is something that actually flies? I didn't know this part.
Yeah. It's like it's a fly. It's they lay their eggs in any kind of open wound in cattle, deer, any livestock, sheep, goats,
disgusting.
Pigs, I think.
Satanic little creatures.
Yeah, and then those eggs hatch, and all the little larvae or whatever they are have a hook in their mouth, and they can dig in the flesh, and then the wound festers, and it just likely untreated, it kills the livestock. So it's this big economic threat, especially to Texas right now. Texas is the largest cattle producer. But if we go to the first slide, I'll just show some of the headlines that have been generated since Friday. So, New World screwworm found 31 miles from U.S. border, Foreign Policy News. Flushing screwworm that infests humans and pets. That's a little more of a hysterical headline because it's really cattle. It's not really found commonly in humans. But the story is the same. Just like last year we were talking about this, it is now back. The U.S. has taken a lot of steps over the past year to kind of combat this. Number one, we've halted imports of cattle from Mexico. I think some other livestock too, to try to prevent this. And they're setting up these sterilization facilities. So what they do is they produce sterile screwworms, and then they release them. And this makes the population go down because the screwworms that are native are breeding with sterile ones, and they're not producing offspring. It's the same thing we do. I think they do that for mosquitoes.
Yeah, Google. Google mosquitoes.
Mm-hmm. Yeah. So sterile mosquitoes, just these ones that are released. They release them. They say, "Go have fun," But anyways, it's back. I mean, it's moving north. The warmer weather is facilitating that. It's the summer. There's a lot of industry groups like cattle herders and things sounding the alarm bells over this. They definitely don't want it in the U.S. herd. It's been eradicated or eliminated for quite a while now. I don't know when, but it's been a long time. And so the theory is, if this thing gets up here, it will damage the head counts for the cattle, especially the calves and things like that. And we'll have less cattle, less supply, higher prices, all else equal. This is at a time when the U.S. herd is already at, I think, record lows. And, even though it's at a record low, beef production has kept up because ranchers are breeding these cows to be much bigger. So today they are, cattle, the cow is 1,500 pounds. I think they used to be like 1,000 pounds. So they're breeding these, behemoth cattle that are just huge. And that's kind of been the saving grace. But another thing, a chart I didn't bring up, I wanted to, is the seasonality here for live cattle. Seasonality in the summer is strongest in late June. So late June, prices start to spike, and that's because of the 4th of July holiday. Everyone's having parties, cookouts, barbecues. You're ordering those nice cuts of meat. You go to Costco, you get a lot of steaks for the family for 4th of July. You have a party. So the demand is going up at a time when the supply is potentially under threat. And if we see headlines in the next coming weeks, like the screwworm's 15 miles away, 10 miles away, 5 miles away, it's going to become more ingrained as a threat, and speculators are, likely or presumed to drive the price higher on that. So let's go to the second slide. And so, this is the COT positioning, the CFTC's commitments of traders reports, and the green line is longs, the orange dotted line is shorts. These are speculators. They haven't really reacted yet, right? So we see the green line, it took a big drop at the turn of the year. We haven't really recovered, or longs haven't recovered. In fact, shorts recently, the most recent week, have gone up. It's not at an elevated level, it's still within that range. Nothing spectacular to look at here. I just kind of wanted to show that speculators haven't really responded yet. But this data did come out Friday, and it only goes up to the previous Tuesday. So it is lagging data. It's not too up to date. It's not bad though. You pretty much get a 1 week look back of what's going on. But this cutoff was Tuesday, so the news headline is that the screwworm is 30 miles away, isn't priced into the data we're seeing here right now. So come Friday, this report can be released again, and you can see, shorts backing off, on this news, longs building a position, and, we'll have to wait for Friday to see how that works. But it's going to be, this story is going to be headline driven as we move forward. So, again, 10, 15 miles, whatever it is, the closer they get, the more ingrained the fear becomes. And that's a tailwind to prices. I mean, in theory, at least, anything can happen. But, we also got that seasonality. It's June 2nd. Seasonality really starts picking up in the last 2 weeks of June as you get, people start buying those cuts of meat for the July 4th holiday. Let's go to the third slide. And I put on a position here. I put on a short put spread in the 66-day out, so that's the Q6 contract, and did that 233 and sold the put at 235. And we see this prior level of resistance from February. We've come back and retested that several times. So where this yellow horizontal line is, we've tested it twice. We've tested it again today, and again we've seen some buying right at that point, right about 236.8. So putting this on at 235, I feel like you have a clearly defined level of technical support that you could trade off of. You have the story of the screwworm, if you want to take that perspective. And then you also have the seasonality, which is also going to start factoring in here soon. So I'm planning on holding this trade through the July 4th holiday, and then, hopefully taking profit on it in mid-July when this contract's more like 40-something days out or 30-something days out. That's my trade that I'm making. Screwworm story, it's pretty simple. It's a pest, gets in the livestock, damages the livestock, supply goes down, coming up on 4th of July, demand goes up. So, you got those two factors that are both offering this potential tailwind to prices, and also a pretty clearly defined technical level. Now we're trading under the EMAs, the trend's been down for the past few weeks. It is what it is. I'm still not going to trade off that alone, so I feel pretty comfortable taking a position here. It's somewhere around a 2-to-1, 66% POP. The buying power is about your max loss, so not a horrible trade with what it's giving you, and we'll have to keep our eyes on this. I'll update us next week and see where these things are.
I like it. The nice thing about LE right now too is if you look at the organization of the futures contracts, the Q contract has a 30-day cycle and a 60-day cycle that both settle to the Q. So you can do diagonal calendar spreads in here. I really like this setup. So like the LEQ, we got as high as 250 and we kind of chopped around there before selling off. But you could buy the 250 66-day and sell the 250 30-day for a debit of like $500. And this risk graph, the Theo risk graph, is pushed 10 days out. So Friday, June 12th. And if we get a rally up to 250, this could be a $700 winner with no change to IV and some time passing and a $500 debit. So I kind of like this too. If you want to keep risk super defined, sell a bunch of premium in the near term, buy some premium in the long term that's got lower IV. And this one expires July 2nd. So assuming that you've got your supply and demand situation ironed out before that, and you get a rally up here, you could get all this premium out of the short call and then make money on that long call. So I think this is what I'm going to do here. Just play the calendar spread here, which we've done before a handful of times for the same reason.
Mm-hmm.
Yeah. Yeah, so if you want to help the trade out, go buy some ribeyes.
Yeah.
Go buy some
ribeyes. We just might. We just might. All right, I was filled at $500 flat, 1250. So we're in. We're ready. We are ready for the screw worm. Beautiful. Crude oil. What do you think about crude? Trading it still?
I still have a position on CLQ6. I have a short put spread at 80. I feel pretty decent about leaving it there. The market's in this weird place, right? Supply, we're draining these reserves. Ships are still sitting there. Now there's this story of barnacles growing on the propellers of all these ships sitting there. And I guess if they grow on the hull, that's fine. It reduces efficiency. There's more drag through the water as these ships move. But I guess if too many barnacles are on the propellers, it could pretty much, what's it called when a ship gets stuck? Maroon the ship.
Mm-hmm.
And that's really not good, I guess, obviously. So this story is starting to come out, and there's some funny memes on Twitter like barnacles are going to kill the global economy. Who would have thought? So it's just like it's one of these third order effects from the war. When it first kicked off, no one was. You wouldn't go to barnacles on propellers.
Yeah.
And in these ships,
It's no longer the butterfly effect; it's the barnacle effect.
Yes.
Yeah.
Exactly.
And I guess it's extremely intensive, labor intensive, and expensive to. Usually they scrape the barnacles off. I guess when the ships are docked, it's a lot easier. But if you have to do it out there in the ocean, you need specialized divers. They got to go down there and. Manual labor scraping these things off.
Yeah.
These propellers are huge. It's just, I guess it could be a huge problem the more they sit there in these warm waters just idling.
Yeah.
So it's kind of a funny story. Not funny, but I mean, it's interesting.
It's crazy.
Yeah. But we'll get more inventory reports this week. I think the API data comes out today. We'll get EIA data tomorrow. Crude, a month ago, 6 weeks ago, there was people calling for 200 crude. That's kind of out of the realm of things right now, but it's still a stalemate. I mean, we're hearing negotiations, we're getting these headlines. It looks like Iran, and both the U.S. are having trouble, and it wasn't supposed to be easy. Who thought it would be easy to pen a deal? We're getting less sensitive to headlines, but the headlines are also becoming less, sensational. And right now, I just see oil pretty much staying in this 80 to 100 range right now. I don't really see it moving too much out of there, So,
yeah,
exactly why I have a strangle on, and it's been probably one of my better trades of the year between that and SLV and the year-long MNQ trade. That trade has worked. That strangle and MCL.
Yeah.
It's been nice.
Yeah, this short premium in here is really nice, especially with these near-term contracts, because the near-term contracts have way more implied volatility than these back months. Mm-hmm. But to the point of elevated crude, all the way to the back of this curve here, we've got 75, 76 here. So the curve is telling us we shouldn't expect prices to come down really at all, which I think plays right into that, ceasefire, crude drops, and then the next day it just pops. It's just like, it's just chopping around. Like there's nothing that's sending this lower significantly, and you still have backwardation in here, although it's way less than it was. But this premium here with the 3-day, 10-day, 14-day, like right now I've got the 92 short put here. And I made one roll. I've collected $360. But if I wanted to just move this to the 10-day, the premium here is astronomical. I can pick up another almost $2 just by rolling it out every single week. And that's just on the put side. So I think that's what I'll do. I'll just keep rolling this put and collect as much extrinsic as I can before I make the rolls, and just keep piling on the credits and see where we end up. But right now, basis sub 90 with over $300 collected on the 92 strike, and I'll just keep doing that until I have to roll to the next contract.
Yeah, why not? I mean,
it's been okay.
Yeah, it's worked out well. High vol, man.
Yeah.
What have you looking at any of the grains recently? I'm noticing obviously those have pulled back as oil has pulled back.
Yeah, I mean, they've definitely pulled back. Wheat has been a lot weaker than I've expected after last month's WASDE report, the smallest wheat crop in a long time. And yeah, I have short put spreads in ZW, ZS. I've been obviously taking some pain on those. Corn, it's treated me a little bit better, but all of these have been, getting hit a little bit. And, I haven't seen like a really good fundamental story. I guess crop conditions are okay for them, but not great. They're not terrible. Wheat's actually kind of bad, but it just might be, some speculators clearing out, some funds clearing out recently. But I'm not happy with the positions I'm really in. I'm going to hold them because I got time on them. We'll see if they come back. But I'm not putting on any new trades right now. Corn, if I didn't have a position in corn right now, I'd be interested in, trading off of this January swing low. Because that's the next level we have there, around 433. There's good IVR in corn, and that's the only trade I'd be looking to put on if I wasn't in a position right now.
I know it's funny you mentioned that because I'm looking at it, and I would obviously the idea of a bounce is the interesting trade, but it's like, how would you really do it? I mean, like you said, IVR is up there, but when we talk about IVR in the sense of what we're looking at, it's pretty low implied vol. It's 23, it's 26. Yeah. Like, that's pretty low. It's kind of interesting in this time period how it just kind of your brain shifts. I mean, when you're looking at 100 vol in micron and, the vol in here, it's kind of you could make an argument for buying a call spread in here instead of selling a put.
Yeah.
Yeah, and this premium is not that expensive. Like,
no.
Even the at the money 450 in the end contract 80 days out is only $1,000, and you can sell something like this. Is what I'm looking at doing, just like setting up this like a diagonal spread.
I'm saying.
And if you get a rip higher, like you can make a ton of money on this one because this net debit's only $600. This is a nice thing about the Taste Trade platform is it gets rid of the
450,
ticks.
470.
450, 480.
480.
Yeah. And this is a $600 debit, just trying to buy the dip here. And then this same analysis, like if you push this to the end of June, let's say it takes us that long to get up here, like this can be a $600 winner on a $600 debit, all else equal. So yeah, I kind of like this type of setup, and you can get much more cheap if you do a calendar spread. Bless you.
Thank you.
I saw someone in the YouTube chat, like, how do you set up calendar spreads so you don't get overrun? There's no way to not get overrun if the market just rips higher. Like we had that happen in, I forget what tech stock. We had a calendar spread and it just like blew through the upside, and mine was a loser. But that's it. You just got to reduce your basis. The more you reduce your basis, the wider this profit curve gets. So like $3 or 3-point calendar spread here, you have a really wide range because your risk is only $150. But if you had a 10-point where your risk is $500, like now you can't even make money on this trade.
Yep.
But like that's the whole key. The whole key is reducing your cost basis as much as possible so that you widen out how your long option can maintain value. That's what it is. So here, this is a $150 debit trade. This is such a wide range because all I need to happen is my 480 call to maintain $150 or more. And this is a profitable trade. So you have a really wide range, the lower your basis is. So I like this kind of setup. I think I'm just going to do this 450, 480 diagonal spread.
I like that too.
To the upside. We'll let it go. And yeah, why not?
Why not?
I mean, this thing's falling like a rock. Maybe we can catch the falling knife here with our bare hands.
Mm-hmm. You got plenty of time on that too.
Mm-hmm. So yeah, Pan W. Just real quick to elaborate on that same calendar spread thought. So Pan W has earnings after the close. If you look at the expected move, that's basically what we're doing. We just go to the expected move or around there.
That's what I was gonna say. That's what's so funny. Like we're going we're going just past the expected move. I mean,
yeah,
you get overrun. Like it's not much else you can do.
Yeah. And yeah, this analysis, if we go to Friday and we look at this Theo analysis, you can see like you have a decently wide range to be successful here because again, if you do a long 10-day, short 3-day where you're collecting $700 against a 950 option, like you're reducing basis so much here that the stock can actually drop a little bit and you could still make money on this because by Friday, you keep all the $700 and you just need your long option to have $1.60 of value. It's trading at $1,000 right now. So this is why you have such a wide range. But if I kick this up to $4 or something else, like now you see my range is much more narrow. And the higher my cost is, the more narrow my range is because now I need my long option to maintain $600 and it's trading for $950 instead of $1.60. So calendar spreads, near-term calendar spreads is a cheap way to play for earnings announcements and also a way to give yourself a wide range to be successful, especially in a situation like Pan W where you're reducing cost basis by like 70% on the long option you're buying, and it still has high implied volatility in the 10-day. So yeah, that's basically it. Go to the expected move or near it and make sure your risk is super low or you're collecting as much as you can on the short option.
And I actually give these a stamp of approval because like at the expected move, what you would like, in this case, we're at 330, like you would like them to be under $2. And in those situations, that's where you just, again, it takes the gap up to get there. That's when you start looking at the next strike up, whether it's 335 or 340, like that's when you just kind of are able to do a couple. If you get 3 of these on with less than $500, because I don't think you want to spend too much on earnings, right? Like that's kind of usually my number, somewhere around there. Maybe a little more depending on how excited I am about it, the idea. But yeah, I mean, I think if you can do a couple, 330, 340, then you kind of are able to play along with the gap risk.
Yeah. And this one here is I crushed implied volatility in the 10-day 25%. So it's still a big vol collapse and then pushed it to June 5th. So you get all the value of the short. So even with that vol collapse, you're still looking at a $400 or $500 winner if you're near 330 to the upside. And even if you go beyond it, you're still profitable because, again, your long call just has to maintain $1.80 of extrinsic and you collect all this value in the short. So I'm just gonna route this one right now. Might have to kick it up a little bit. The bid-ask spread's a little bit wide, but again, if I'm paying $1.90, I just need my long option to maintain $1.90 of value, extrinsic value specifically, since calendars are pure extrinsic value trades. But we'll see if we can get there.
CrowdStrike and Pan W, if you just put them on a screen and you don't put any numbers on the side, you can't tell the difference between them. They look at the charts looks exactly the same.
Yeah. And what's interesting is you make more money to the upside if you're right compared to the downside. And because these things have already ripped to the upside, there's so much call skew here that you're collecting way more against the trade. So if you just do the 10-day, 3-day, you can see paying $950, collecting $680. That's literally 75% of the value right there, or 67% of the value. It's basically 2/3. But when you look at the downside, the equidistant option, 260 or 265, you're collecting $4 or $3, and then to the downside, you're paying $7 or $5. So you're not collecting as much on the ratio. If you look at the 265, like you're paying $725 and you're collecting $490 to the downside. To the upside, you're paying $950, collecting $680, $690. So you have a little bit more cost basis reduction to the upside, and you can make more to the upside if you're right. So I like these calendars, the near-term calendars, and we'll see what happens. But
yeah,
it's insane that we're just placing bullish trades in a chart like this.
I know.
That's where we're at.
I know, but again, I mean, we're not using a ton of premium, and again, these are actually fairly cheap. I mean, what was it? I don't remember the name, but like last week we were looking at something for, it might have been Marvell for earnings, and I think they were like $3 for the calendars, like for a single calendar. Like, no thanks, like that's too much.
Yeah.
I mean, it worked out seemingly. Stock is doing what's doing today, but I just, we don't know that ahead of time, and so it's all about how much risk you're taking heading into the earnings.
Yeah, NVIDIA was another one that was nice. It was the 230, what was it? The 230, 235, and 240 calendars.
Mm-hmm.
The 6-day, 2-day, and they were all like, all three calendars were less than $200 total.
Mm-hmm.
Like they were 82 cents for these two, and then 35 cents for this one, and then just wrapped it all around an iron condor. So that was a nice little earnings trade with an upside kicker. But yeah, these trades, the near term, long 10-day, short 3-day, as long as you're collecting a ton of value against the long option you're buying, that is what sets you up for a really wide range of potential outcomes where you can make money.
Mm-hmm.
All right. I'm going to pop over to the YouTube chat, see what the people have for us today. Palantir, August, July crab call, 160, 180, 200.
Speaking of crabs, I added a couple of crabs today. I put on an Oklo crab and I put on an Iron crab, and they're pretty wide, and I'm long September in them. So
there you go.
Yeah.
September, August, 70, 100, 130. Nice. 30 points wide.
Mm-hmm.
And then Oklo, 80, 120, 160, 40 points wide.
Mm-hmm.
Damn.
Mm-hmm.
Yeah,
they're under $6. I mean, they're under $7 for both of them. So
yeah. Long-term, wide crabs. Love it.
Yep.
Yeah, Palantir, let's see what we got here. August, July, 160, 180, 200. 160, 180, 200. Yeah, it's very similar setup to Jamal's. Going to August, he went to September. But yeah, 20 points wide, paying less than $1,000. It's a good setup for potential profit, just because your cost basis is reduced a lot. Like you look at your long call by itself, $1,500, but you're only paying $850 because of these cost basis reducing factors here at the crab. So yeah, I like this a lot.
Like that.
And if you push this like to the end of June, you can see your max profit goes up way higher, because you're just getting a lot more of this value out of the shorts. So I dig it. Do they have earnings coming up or no?
Not anytime soon. Don't even remember when they had earnings.
Get into this.
Yeah.
Down 5% today.
I mean, probably has earnings in August, I would imagine. Or end of August? I don't know.
Yeah, I don't know. We'll see if we get filled there. Less than $1,000, we'll take it.
Let's see.
Is a calendar in Dell too close for a calendar? A Delta 28 too close for a calendar 500 June, August? Let's just see.
Well, that sounds expensive.
500 June, August. I don't think it's too close. Again, I think it's just the cost basis. Like this, you're not reducing cost basis a lot here, which it doesn't give you the same sort of profitability potential, because you're only collecting a quarter of the value that you're buying. So like if you wanted to be more conservative with a trade like this, I think you got to go long July or short June. Like long July, short June gives you a lower debit and therefore a wider range. Like now your break even's at the current stock price without any changes in IV and just pushing it, a couple of days out, 10 days out. So the more you can reduce cost base, like the closer you get to 50% or 60 or 70%, like we did on the near term one, that's where you really can set up a nice situation where you have a wide range of possibilities. You got to reduce your long options cost as much as possible, but you still want to give yourself a decent amount of time between the long and the short option. So I think 1 month out is cool. The long August, short June worries me a little bit just because this run up in Dell has been so crazy that all at the money premium is so expensive now. Like you could see August just get decimated. Like this 500 strike for $4,500, this could go way back down to where it was. And where it was 3 days ago it was $3,000. So there's some risk there. So I kind of like the near term stuff. Have you been trading any of these tech stocks?
Dell? No. I mean, I think Trump said something about Dell earlier this year. I should have listened. He's become like,
Yeah, Nancy on crack.
Yeah.
It's been crazy because like that has been the case. But there's other stocks that he has, like Broadcom, I believe, Texas Instruments. There are some other stocks that he hasn't talked about yet, but it has been publicly announced that he owns it.
Yeah.
So we'll see. Maybe those are next.
It's crazy. I remember, the 90s, parents bought a computer. It was like a Dell,
Mm-hmm.
It's been around for quite a while.
Yeah.
Yeah.
That's what I'm saying. Like, I never thought we'd be talking about Dell.
Who knew?
Who'd have thought? Check out CMG. Oh no. What's going on?
It's tanking today, right?
Chipotle, why?
I don't know why people are so interested in this stock. I have no interest in this stock at all. Zero. Ooh. Pandub. $1.50 for one of them.
Pandub. Yeah, this stock is in the dumps. Crazy. Who'd have thought?
Yeah, people can't let it go. People still seem to think of the old CMG that was just every day up, and yeah, this is totally different. It's fascinating sometimes what happens to some stocks after splits. I mean, this one, Netflix, it's pretty crazy. I don't know what the rhyme or reason is, but I mean, for those who remember, this stock was crazy. I mean, this CMG, the way it used to move, like wow.
Yeah, it was a couple $1,000s. Used to fly around like crazy. But yeah, Lulu after the close today. I assume you want to do a downside diagonal. Gator skin.
Gator skin.
Earnings tonight, June 150, short July 140 for $4.
Where is this stock going?
If this isn't, we don't do inverted calendars like this. I don't know if you're doing like a long 150, short 140, but June 150 short, July 140. Maybe it's to the upside. I don't think I'm playing this to the upside anytime soon.
No.
This is just one of those stocks that just cannot catch a bid. I'll watch it'll finally do it today, but yeah, I don't.
There's good competition. I mean, their clothes are pretty high priced, honestly. And what's the other places I'm thinking of? I mean, there's that one Built place, BYLT.
Mm-hmm.
What's the other one? The main one, though, the main competitor.
Viore.
Yes, Viore. Arguably better. I mean, why should this thing be $127? That's really what I'm getting at.
Yeah, I do like. Kind of like this downside diagonal, 125, 115 for $5. But let's see what the value is in the weekly here. Oh yeah, 125, 115. This is another one. Like you could do a really cheap calendar here to the downside. It's like less than $1. you buy the 115 10-day and sell the 115 3-day, it's like 70 cents, 80 cents for that downside calendar.
Ooh.
That could be interesting.
Yeah, that's when you do like 2.
Just layer on like the 125, 120, 115.
I like that.
The triple threat calendar spread.
Yeah. Yep. 120, 125, 130. I like that.
Be something.
Oh, heck yeah.
Yeah, let's do like 120, 115. Double calendar to the downside, 10-day, 3-day. Oh, filled on corn.
And what I'll do sometimes too is in these type of situations, filled on corn, is go 125. Really depends on how you really feel. Like in this case, obviously we feel like if this thing falls, it could tumble even harder. And so a lot of times I'll do a 125, 115. Say you do a 110 and it's like, 50 cents. You do like 2 or 3 of those. I mean, because, why not? Again, so just thinking about it in terms of premium, and it's still not a whole lot of premium. And if it happens, it works out really well.
Yeah. I'm going to do that. I'm going to route the double calendar here. Long the 120, 10-day, long the 115, 10-day, and then short the 120 and 115 and the 3-day. Total package, $2. But you can make like $200-$300 pretty easily if you get a downside move to 120. In between 120 and 115 would be perfect.
Yep.
And you hold it till Friday to collect all the premium. I like it. Pan W. We did that near-term calendar. Someone else is looking at, Shark. Hello. Long the June 270 call, short the 300, and short the 170 call. So a disconnected call ratio, looks like. 270.
Good. 270.
Long 2 of the 270 calls in June. Short 1 of the 300 and short 1 August 270 call. Okay, so it's so this is like a zebra covered call type feel. So you got the June zebra 270 300 for $5,000, and then you're selling the 330. Oh no, short 1 August 270 call. Huh.
What are they doing over there?
Let's take a look. Okay, yeah. So you basically have a call spread here, diagonal spread 270 300, and then you've got the 270 synthetic stock position. Looks like
For $11,000.
$11,000 buying power.
Hell.
Because of the short call here. I thought you were doing maybe like this zebra here, and then you sell the August against position. But either way, that's gonna use more buying power too, a little bit more. Slinging. Whatever you feel is right. I kind of like it. But yeah, I like these near term. As long as you have a short premium component against an earnings announcement like this that has such high implied volatility, I think that's really the key to reduce basis. If I wanted to keep risk defined, would it make sense to do a calendar in micro crude, say long August or September, and short a near-term weekly and keep rolling that? What say you, Thomas? Are you trading these options in here?
I've pulled back on how much I'm trading crude. It's really heavy into it the past couple of months through the war, but I've stepped back. I still think it's very tradable right here, especially if you're trading on the range it's had. So I mean, 80 to 100.
Yeah, I think the key here is if you're trading micro crude, if you're not buying a straight up contract in micro crude, and either way, like you got to stay in the same contract because there's such a difference in price here. 93 at the end contract, 90 at the Q. So I think if you wanted to stay risk defined, you could buy the 14-day and then sell something against it in the 3-day and then roll your short into the 10-day. Like that could be something, especially if you're bullish. Yeah. If you're bullish, for example, you could buy the 93 14 days out. And in the 3-day, you could sell the 95 or the 96, 97 even. And then 3 days from now, you keep all this premium. Regardless of where crude is, you can roll that 3-day into the 10-day. And then you have a kind of a small diagonal spread here, but you're going to pick up some more premium. And then I think that's where I would end it. I don't think I would go into the 14-day and like do a vertical spread, but you could. So like your initial debit, if you did a 93 long, 96 short, your $3.20 debit is your upfront cost, but you can absolutely reduce basis by going from the 3-day to the 10-day, simply because the difference in price, the 96 call is $1 3 days out, the 96 call is $3 almost 10 days out. So this $3 debit could be reduced to $1 if you made one adjustment into a rally, something like that. So I kind of like that as a way to stay bullish on it and risk defined. Or bearish, you could do the same thing. But yeah, just make sure that your contracts are all settled to the same. So the 14, 10, and 3 all settled to the end contract. I think that's it.
Just added those Lulu calendars. They filled me pretty easily. Immediate fills, so I don't know.
Yeah. I was filled on Palantir, that 20-point wide crab trade to the upside. Filled on corn, the 480, 450 diagonal spread. Filled on PanW, the 330 calendar spread, 10-day, 3-day. And then the 250 calendar spread along the 66-day short the 30-day in live cattle. Magical day.
Love it.
A myriad of trades.
Yeah.
But yeah, that's it for us. Thanks for tuning in. If you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com.
What is going on, everybody? Welcome back to Risk and Reward. We got another insane rally today, all the way back to a new high. And as we're back for today and a new high, we're back with Brother Gus here from Poland. I'd seen a lot of videos going crazy. I think a lot of football celebrations going on. I'd seen clips. I had to ask you about it right away, but glad to have you back, brother. You got to let us know how it was.
Thank you. Yes, that's a great point, actually. I hadn't brought that up to anybody as they asked how my trip was yet. But yeah, I happened to be in Krakow on the night that Wisla Krakow won the it's Serie I or I Liga.
I forget exactly which league
is
it
the
was.
Polish league, but yes, they won the league the very first night that we were there. So we get in, we're jet lagged, a little confused about what's going on, and then suddenly we walk out in the main square, and it's just
it was
bunch
insane.
of people, red torches. It's just smoke fills the city. Yeah, it was a pretty cool experience being there, and yeah, I'm feeling refreshed. I leave for a week, and you get us the nice desks.
There we go. You know, I had to pull a couple strings.
Yeah, your solo performances
gotta get us right.
Were so good. They said these guys need the bigger desks. So yeah, we got all this room to sprawl out now. I'm feeling good.
Monitors are massive, huh? You can see everything.
They are. Yeah, actually,
like a spaceship,
too large. In fact, if I full screen my platform on this thing, I'm looking all the way with my head to see the both sides of it. But a welcome adjustment, I say.
Yeah, 100%. I gotta say, E&G is back. There we go. What's going on, Stan? What's going on, Big Deal? What's going on, Sergio? We'll get into the market here in a quick moment, but we're not going to let you slide past the Poland trip that fast, Gus. What was your favorite part about going on the trip?
I really liked the Titra National Park in the south of Poland. Zakopane is the city that we were in. It was awesome. Yeah, down there, did a lot of hiking. Yeah, I really enjoyed Krakow as well. Nice historic city. We stayed right in the old town, so that was a great experience. Lots of good food. I appreciate something. I'll tell you, I definitely appreciate about Poland is that they got all kinds of meat. Often when I go to Europe, I have a hard time finding any protein. It's all pastries and breads and just the occasional little bit of ham, and it's hard. Poland, not that way.
Not that way.
It's sausages, it's chicken.
You got your protein.
Yeah, there was plenty to choose from. All the restaurants have a meat section, which I like on the menu.
That makes a little bit of sense because after you had left, I remember going around in Chicago. I seen a few buildings that say, like, get your Polish sausages. So I was like, okay, that might be such a thing in Poland for there to be Polish sausages written on the side of establishments out here in Chicago. So it's kind of funny that you bring up all the meats. Like it's really a thing for the Poland culture.
Yeah, lots of pierogies as well. It's all just everything is meat based, and I appreciate that. It's often hard to find that kind of thing on that side of the pond. Thanks for the well wishes, everybody. Appreciate it. Jared, Gus is back. Congrats on not getting trafficked. I did do well, not get trafficked. And then, welcome back, Gus. Hope you had a great time. You were missed. Thank you, Sergio. Appreciate that. Did you meet any Polish dancers? I did not, but I will say in a very respectful way that the women over there are very beautiful.
Okay,
that was certainly an observation that I made. Is that the average is maybe a bit higher than it is.
There we go. We love quantitative analysis.
yes. That's my quant on the Poland trip.
No, I mean, with that being said, we can dive straight into the platform. Just do a quick tour of the market, see what's been going on. But anything top of mind for you?
Yeah, no, nothing super jumping out at me. I did very minimal management while I was over there. Just kind of everything continued to move the right direction. Came back, portfolio is up about 5% from when I left.
There we go.
Had the position.
You still have on Rivian?
Yes,
Rivian's been busting to the upside.
I do still have Rivian on. Yeah, that's toward the top of the portfolio for me today. All three of these still rocking. We're up at 17. Take a look at these charts. Look at that, guys. Danger zone. Once we get over 18, it's danger zone with Rivian. But yeah, Rivian just ripping here and doing the same thing that I say it does all the time. It loves these channels, and when it moves quick. We're stringing together, what is this, 3, 6, 9 green days in a row?
Yeah.
And that's just...
I don't think it's had a red day since.
The Rivian way.
Yeah,
we work straight to the upside, but I'll definitely start to be a little bit scared as we test this 18 level. I hope that we get a confirmed break and hold higher than that and can maybe establish a new higher channel up here somewhere. But if I were a betting man, I think we'll touch this 18, mid-18s range and then come back down to test these lows as Rivian so loves to do. But I'm a happy camper right now. I'm not looking to get any of these off just yet. We're like I said, I believe in the long-term thesis here, so willing to let these eat for a little bit longer, but we are getting close to inside 100 days on these 12s, so perhaps some management to be had there shortly. And then meta, I have had to capsize on my two middle meta positions here. I got out of the 710, 715 short put vertical that I had at 16 days to expiration. Still have a 600, 605 on the same expiration cycle that is just dancing around there, but that one's certainly one that I'm comfortable holding longer at these levels. But I decided the pipe dream of possibly getting to 715 before that had expired. So took those off this morning.
Yeah.
But yeah, that's really the only management that I've done. Not a whole lot of tracking. This trade that we both put on in bonds, I know you had one on as well, but you were shorter expiration, right? Your bonds position is done now, or
it was a zebra position. We took that one off fairly quickly after we got that pop to the upside, so we're not sitting in it anymore.
Yeah.
Now bonds are moving a little bit there too.
Yeah, we've come back through the 85 level that I needed here and seem to have some consolidation going on there. But as long as the consolidation happens above 85, I do not care. So hopefully we can continue to hold there. Faring nicely on the bonds. Resolute, Grumpy Mike. I know you're happy. Oh, I see it. It's the most recent comment, actually. You beat me to it. Yeah, Resolute has been ripping. We're up 16% today, 57 cents on this tiny little product. We have logged new highs since the lows, obviously. Not new highs. That's what we're looking for ultimately. But we do have new local highs since the big sell-off on Resolute, up at 418. Not sure what the reason for this move is. I'm sure that they had to have some kind of good lab result or something like that. That's what always happens with these pharma companies. But happy to see that jump. I still have my 50 shares. Well, it was previously 100 shares. I halved it at 100%, but leaving the other 50 shares as a runner from $1.29. So getting close to a 400% winner on those. Then I have these 10 calls as well, which I've also halved, but those continue to grow. I'm up 90, and the current mid price is what's that, like $1.20? So yeah, like 4x on those as well. Pretty much proportionate with the shares. So shout out to Resolute. Keep going, Resolute to 10, baby. That's what we're here for.
10. Why not 20? If Nasdaq can hit 30,600, we could go 10 on Resolute.
That's a good point. I'm wearing a Tasty Trade shirt today. You guys would be proud. I saved a dog like Gus.
What does he mean by that?
Good, Brandon.
Is that the commercial?
Yeah, the promo that we always run. That we shot over at One Tail at a Time. Shout out to them. If you're in the Chicago area and need to adopt a dog, I encourage you to go One Tail at a Time. But yeah, good. We're matching. It did occur to me today as I was editing some stuff that I shot before I left that this is the shirt that I wore the previous Friday.
Oh, was it?
So I'm actually 2 days in a row in this shirt, but they're 10 days apart.
Yeah.
Yeah. So I have a washing machine, people. That's what happened.
That's funny. Yeah, Colorado Springs is not known for its sausages. No, not really. When you hear Colorado or Colorado Springs from somebody that wasn't born and raised there, what's the first thing that comes to mind?
Weed.
Is it really?
I think so.
You know what? That's so funny because, again, when I was 15, when I was 15, we played this soccer team from Nebraska. And the first thing that they had mentioned was like, yo, it just got legalized here. So what's up? What's good with it? And I was just like, I don't know, bro. I just got into high school. I don't really know what's going on. So that brings back that memory.
Yeah, I mean, mountains is probably a more genuine answer.
Marijuana.
If we're playing a word association game, it's probably mountains.
Was it because Colorado was the first state to legalize it? Why it got such a brand with marijuana?
I think so.
That's what it was.
I think so. Yeah,
Okay.
Colorado, because California, I would sort of do that as well. It depends.
But Colorado, trees, forest. Yeah, got trees.
It's just pretty. Mountains probably first, but weed not far behind, right there. As far as food, I don't know.
I don't know what we have there either. To be honest,
I'm sure there's some good spots.
It's a little bit of a melting pot, to be honest, in terms of food. But sure, there's some good spots. Cracker Barrel, I don't know.
Something like that.
I don't know. But no, with that being said,
$20. Why not $1,100 like Lily? Sure, Grumpy Mike. Let's just Resolute to the moon. This is our Tesla IPO right here. We're in on the ground floor of Resolute, which shall become a company as big as Pfizer one day.
Book it. The Santa Claus theme at Pikes Peak near Colorado Springs. I'm gonna need to check that out.
That's pointed. Yeah, Pikes Peak. That's a good one as well.
Yeah.
Didn't notice, G. Wear it every day. It looks good on you. Thank you, Stan. I appreciate it. But anyway, yeah, that's pretty much all the action for me. Just getting back in and getting acquainted with the market and the news today. I was only able to passively keep up with things. There's some market hours that are late at night over there, and I was a little out of the loop. What have you been slinging in this time in my absence?
I got you. Not too much. We can jump over to the Tasty platform on this end. But I mean, honestly, you missed the week, but there really hasn't been a change of pace or a change of behavior in pretty much anything. So it's pretty much been the same story since you've been last really engaged with the market. So we've been looking at Meta. Meta was up a little bit more, and then yesterday Meta sold off very hard and pretty much gave back all the gains there. So that's kind of how the Meta position is panning out. And then QQQ, we sold an out of the money call spread. I really don't know if this train is going to stop. We haven't been throwing down these call spreads as often as we did prior to the beginning of this year when we started this insane bull rally. But we'll manage the position. 45 days left till expiration. And then we had a couple scalps this morning on the micro NASDAQ. So we'll get into that here in a moment. But there's really nothing else really standing out. Yesterday, we started a new watch list, which is called Spurs and Six. I was just rage baiting a little bit. I know we got a lot. I know we got a lot of New Yorkers that watch the stream. But anyways, it's just a short watch list. So I noticed so many of these names are so overextended. These aren't any names that I really want to step in front of. I will just preface that. But things like ARM, Riot, Micron, INTC, SNDK, AMD, Dell. So if anything comes to mind that is like absolutely in space right now, any underlyings, let us know. We'll throw this in this portfolio. We'll keep an eye to see when the momentum will crack in some of these, and then maybe we get some short delta on. But we had a little bit of fun with that yesterday.
Sure,
that's what's new. Yeah,
Spurs and Six watch list. I like. What's the tie-in? Is it that the Knicks are overextended? Is that?
I think the Knicks are a little overextended. And I was gonna say, Jalen Brunson is a dog, and I got to give him his credit. I got to give credit where credit is due. I didn't know Jalen was like that, but taking the team to the championship, I mean, got to give the guy more credit than I think he's gotten. And,
Yeah.
I mean, I guess I'm not doing that with the Spurs and Six here, but I do think the Knicks are a little bit overextended. I think that the Knicks come in a little bit as the underdog from the sentiment that I feel, and I think Wembanyama is really going to take this one home. But at the end of the day, I love the excitement, and I love that Knicks are actually in it because they are probably one of the most. They're a very fun fan base, I will say.
Sure.
So yeah,
Sure.
I think it's going to make it fun for everybody else.
Yeah, I'd agree with you there. Yeah, I don't think the Knicks match up well with the Spurs.
I don't
at
think
all.
so.
That's my line of logic as well. I think we saw the fits that Wembanyama just gave to Chet Holmgren. I think he can give the same fits to Karl Anthony Towns. It's Brunson, obviously elite, as you said, but I don't think that they can get it done. I don't know if it'll get to 6.
Yeah,
honestly, is kind of where I'm.
Yeah. But with that being said, that's what we had, the Spurs and Six portfolio there. So again, if you notice anything that is, off its rocker right now, I know even IBM put in a few good days to the upside here. We put that in the portfolio. Looks a little bit different. It's not like that parabolic type behavior that we've been seeing in IBM, but we got it in there too. And then Dell. Dell was another one that started going a little bit parabolic over the last few days. We had a massive gap up from 323 all the way to about 430. So we're talking about Dell, like the lollipop, the Dell commercial. So I mean, that commercial, it's paying its dividends 10, 15, 20 years later. Trading at 438 right now. 87 IB ranked, 2 million shares traded on the day. Not touching it yet. The momentum is seemingly slowing down, but we'll be patient, keep it in the watch list, see where these head. And then lastly, Apple. What a sleeper for me, at least this year. Not as aggressive to the upside like some of these other individual underlyings we've been looking at, but it's been a little bit of a slow melt up for Apple. A little bit surprised, caught me off guard.
Yeah, I would throw Nokia into the fold here.
Okay.
Yes, which
What is that, Noke?
And okay, yeah.
Okay.
I see this.
Oh, yeah,
This
that's a good one.
continues to rip.
Let's do it.
But yeah, we last year we're up, I don't know, 300, 400, 500%, depending on the exact starting point you want to choose there. But we're talking about things that are, moving quickly, maybe a little overextended. I think Nokia could definitely fall into that bucket as well.
No, I like it. You reminded me of BlackBerry real quick, so I'm just going to double check BlackBerry. It might be dead. I haven't looked at it. Oh, we'll throw BlackBerry in there too.
Look at that.
You said Nokia. If Nokia's up like that, BlackBerry might be
Get
too.
it in there.
We'll get it
BlackBerry in the big 2026. BlackBerry going $10.
There we go.
How about that?
BlackBerry was actually one of my first cell phones. Luckily enough, I remember my dad was getting rid of one of his old ones, so my sister and I got their hand-me-downs. And what an amazing hand-me-down as like being in middle school. It was a BlackBerry Curve with a little ball in the middle. Felt like the coolest guy ever. Felt like I was taking some business meetings. Didn't have any data on the phone. I was happy to have it.
That's a rare age gap thing between us because the BlackBerry, by the time I was getting a phone, the BlackBerry was certainly
was it?
memory by that point. Yeah.
It was a distant memory.
Yeah, I think iPhone 4 is what had just come out, but my first phone was I don't know, some kind of little Android Z something. I forget what they were called.
Was it like a Droid?
No, it was like a little compact. I don't remember what it was called. Something Z, Z Sharp or something like that. I don't.
It's probably in the ballpark of what you said.
Yeah, but it was just a random little smartphone, and then I got a hand-me-down from one of my cousins on the iPhone 4. Maybe 6 months after that.
Yeah.
Was the way that worked out.
Funny enough, I remember I saved up for an iPod 4. Around the same time. And I remember I used the iPod 4 connected to Wi-Fi using the Kick Messenger app.
Kick.
And that's where we got things done.
Yeah. That was. Kick and Snapchat is where
we got things
that was the place to be.
No, with that being said, though, that's what we got going in the portfolio. If anybody else has any other names that we want to put into this watch list, anything that's very overextended, we'll keep an eye on it over the next few months.
We are live, Rhett. I think that we have told the BlackBerry story before for sure.
Yeah. Probably.
No, this is real time. I hated the curve with the pearl, the BlackBerry ball.
My sister got the pearl. I got the curve.
I'm up 620% on Nokia January 2027 calls.
Oh, wow.
Hell yeah, Money Mike. Living up to your name right there.
Money Mike doesn't want to give any call outs. You know, he didn't want to give us the call out for whenever you put this position on. It would have been nice to be up 600% with you.
January 2027 Nokia calls. How about that? Yeah, that's a good look. I hope you've trimmed that at least a little bit if you have multiple. But if you just have the one lotto, I agree with the idea to keep holding and see what happens. You're in a situation there where even if all of a sudden there is some jolt back down to 15 or whatever, you could just still get out at 500% and be happy with it.
We got gold with the laughing emoji. Yeah, it's kind of crazy that even, jokingly you can say something like gold, like one of these commodities. It's kind of wild. Nothing has really happened in these metals, though, over the last week.
Yeah, I see iron being mentioned. Overextended. I don't know that I would necessarily call this overextended here. I mean, not even back at the all-time highs yet. This isn't a product that I typically touch. It's a slightly elevated, well, I should say pretty elevated IV rank of 52.8. I want to say sort of elevated because it seems like a 35 IVR is like just what we've become accustomed to. So I see 50 and I'm like, whatever. But obviously that is a significant IVR.
Yeah. We'll circle back to iron if we can start to bust through these all-time highs, get a little bit more overextended. We'll circle back around to it, and we'll.
Mike said I have trimmed. I called HPE and BlackBerry. Yeah, HPE, another one that's absolutely flying as of late.
Oh wow.
Yeah, crazy chart action that we got going here. But how about that? I take 1 week off, and Money Mike starts throwing around the 1,000%.
Yeah, I know, just like nobody's business. But with that being said, we can take the last couple of minutes. We can jump to the TradingView platform, take a look at a couple of the scalps that we were looking at today. And I mean, fortunately enough, we even got an opportunity today because these levels of value is what we were working for today. And
Rocket Lab for the Spurs and Six list as well. We'll get that
Rocket Lab?
Sure. Yeah, we don't
circle back
right now. But we'll make sure that happens before the next one.
No, we're gonna beef this list up. we're gonna beef it up. But no, we got a little bit of a pullback this morning once the market opened up. This value area high sitting at 30,438 was the edge of value from the 70% or the most trading activity that occurred last week. But with us already trading at or near all-time highs again, I really didn't have a positive outlook in terms of us even getting an opportunity because I thought we were just going to continue to float to another all-time high as we're kind of doing right now as we speak. But with that being said, we pulled back to our value area high. We got in with a few contracts initially. This little candle right here stopped us out just in case we were going to continue to sell off a little bit more. But once we recovered back above this value area high, we longed a few more contracts. And then as we continued to make higher highs, we scaled out all the way to about 30,510. It would have been nice to be able to hold back to the day highs, but it's one of those situations where you're like, can the market really do it again? It's like, I don't know. Let me sell out my full position. I like what we've already gotten from the market. And then that thing continues to rip another 100, 200 points. I mean, just being the most impressive bull rally I've ever seen in my life.
I think we got to stop asking that question. Can the market do it again? It's like we're at a point where it's just like, I'm surprised if the market doesn't do it again.
No.
We just continue.
No, completely.
It's just day after day. It's the same story, and it's quite incredible.
I mean, just leaving on one runner. Leaving on one runner, that's an extra $200-300 just leaving on one runner for the day. But good Lord, it can be really difficult to hold those. It's like, no, let me just take this profit off the table. Wait for another
hindsight's
pullback.
always 2020, of course.
No, but yeah, all-time highs. Again, guys, once I start leaving these longs on at the highs, and once you start seeing me get long at the highs, is going to be the indicator to finally get short, right? We're never really chasing these moves, and I've stayed disciplined and patient to not flip the cards. But once I flip the cards, I will let you know that is going to be the top signal. But with that being said, no, we're trading to another all-time high. And I know Bitcoin in some of the crypto markets is sliding a little bit right now. I don't know what's going on or how you kind of feel about the sentiment, the digital assets kind of crypto space right now.
I mean, bad because I'm long is the short answer. But yeah, I mean, just a real slide. As this continues in the crypto space, I just keep thinking that, I might have been right in the thesis that I proposed, a couple of months ago now that perhaps the fair price for Bitcoin just is somewhere down here at this time. Perhaps it was this hyped asset that did all this running, and now this rundown has just kind of put us into the point of fair price. Are the days of Bitcoin doing 500, 1,000% in a year behind us? I don't know, but it certainly feels more and more like that as time goes on here. And obviously, with every 500% year you have, it becomes even more difficult to do 500% again the following year. People selling crypto to buy equities, yeah, I think that's true, especially with the way that the equities market is ripping.
Is that not
the SPX looks like Bitcoin.
That's crazy though. Selling crypto to buy equities right now at 30,700.
Yeah.
It's crazy. So maybe 40,000 is around the corner on NASDAQ. I don't know.
Yeah.
But to load in after what NASDAQ has done, it does seem pretty aggressive.
Yeah, I was just looking at the broader market here. SPX took 9 months to go from 6,000 to 7,000, from the first time that 6,000 was broken to the first time that 7,000 was broken. And now it's like, are we going to go 7,000 to 8,000 in 2 months?
We might.
That's the trajectory that we're on here, which is just incredible. I say it all the time, but the S&P 500 is built to be a vehicle that grows like 3 to 5 to maybe 8% a year, and we do 1% a day, like twice a week. It's
crazy when you put it that way.
Yeah, it's incredible.
It's nuts. We'll see what the market. It is really interesting the type of bull run we're on right now. It doesn't really seem like anything is going to stop it unless it's like some very aggressive headline. Yeah. But unless something comes out, this thing might just continue to melt up the whole time until something changes the trajectory.
Yeah, and it's scary because at the same time, complacency is dangerous. You do want to make sure that you're set up for a situation where all of a sudden we do get the big down move. But at the same time, you don't want to just sit on your hands and miss out on the upside continuation if we do run all the way to 8,000. So
100%.
It's a tough line to walk, a tough fence to sit on, if you will. Ever tried sitting on a fence? It's not easy.
It's not easy. You got to keep your balance.
Yeah, need a wide fence. Sometimes they got those posts going on.
Yeah,
it's tricky.
It is. I got to ask, do you think, what kind of pullback in the market do you think will feel like, I don't want to say a market crash, but like a correction? Because at this point, we've rallied almost 4,000 to 5,000 points over the last 60 days. The way that I see it is if we pulled back 1,000, 2,000, it would kind of be like, oh, the sky is falling, but it's like we're still positive.
Oh, yeah.
Considering what we've done in the last 60 days. So like what type of pullback do you think, off a whim, you think that would get people a little bit uncomfortable?
Oh, well,
obviously it's just speculation.
It's two separate questions.
Yeah.
What do I think would make people uncomfortable?
Yeah.
Way too little. Like 1 or 2%, and suddenly people are going to be like, oh my gosh, because it's what I talk about all the time. The market has such a short memory. In these times when we just rip and rip and rip, it's like it's some kind of surprise when we come back down 2%, even though we're still up, 10% on the year, or whatever it may be. So that's my answer to that. Is not very much. I think 1-2% and people start to maybe get a little bit uncomfortable, especially with the momentum that we've had. But for me to start throwing around the word crash, I would need to see SPX like test 7,000 again, like get back below that, which would be 10% at this point, basically. But it would take something to that degree for me to start feeling like the bull run might actually be over. Because if we take a 5% hit right now back down to like 72.50, am I really perturbed by that? No. We're still so far up. We've run up with pretty much no looking back this entire time straight to 7,600. So if all of a sudden we get a pullback to like 7,300, I'm kind of just like, okay, whatever. It would take a lot more than that before I really start feeling like it's over.
Yeah, I hear you. Completely agree. Just thought that was interesting. We pulled back 2,000 points. We're still positive over the last couple months. So we are running out of time here. Anything else top of mind before we wrap for the day?
No, I don't think anything top of mind for me. GLP-1 index is popping, says Brandon. I can believe that.
I can imagine. Absolutely. I haven't looked at it, but I could absolutely.
Yeah, the GLP-1s. I don't think that those are going anywhere anytime soon. But yeah, no, that's it for me for the day. Just getting my feet back under me here, and might gradually over the next like month try to move from relative neutrality into relative short delta, but not anything to be done right now, in my opinion.
Yeah. Hey, look, you came back to a new all-time. It's crazy market we're in. But with that being said, guys, Chuck, Brandon, Jared, Ranch, Big Deal, Viggy, everybody else, Stan, everybody else, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in-the-money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We are back. It's still Tuesday, June 2nd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's back, and he's back to stay. We have you again, Jamal. Good to have you here.
Thanks, man. Appreciate it. It's nice. spent the day getting heckled by people. I mean, just for being out. Yeah.
Oh.
Bonetta walks by me and she's like, "Good to have you back in the office." Like, weren't you the first person to take time off? Seriously? From you? But it just means people miss you. That's what it means. I appreciate it. I'll take it.
It's friendly ribbing, brothers and sisters. Getting along. You know what's not getting along here today, Jamal?
What's that?
Crypto.
Yeah.
Going through it in the barrel, Jamal.
You know what? I've said this before, and I know you find it funny when I say it. I find it interesting when you talk about crypto. When you talk about crypto, there's definitely something going on in crypto land, for sure. You don't talk about it much.
Am I a contrarian indicator?
I don't know. I wouldn't necessarily say that. I'm not saying like it's time to buy crypto because you talked about it. It just means like there's actually something happening because you're talking about it, because you typically don't talk about it.
Listen, if you were saying I was a contrarian indicator, then I would have to buy some crypto. So I just wanted to make sure I'm not on the wrong side here. But no. Crypto being a canary in the coal mine of sorts is something to keep an eye on. For those folks who like to listen to Bloomberg radio, I had an interview today with Mike McGloin, their senior commodity strategist. It's going to be up on our
Not
YouTube
related
page
to John McGloin?
No, different one. We checked. And to that point, it's a little bit longer of an interview than we typically do, but he raised a good deal of concern around crypto here, which is why we're starting up today's show is Crypto the Canary. I bring that up because a new chart keeps popping up and floating around here. 11 straight days of outflows from IBIT, the BlackRock Bitcoin ETF. Jamal, there's large-scale liquidations going on at a pace that we really haven't seen to some degree at the depths of, previous major sell-offs over the past year in crypto or in equity markets right now. Do you think that this is a warning sign, or as some more intrepid and perhaps optimistic folks are suggesting, why would you bother speculating in crypto when you can buy semiconductor stocks?
I think that's exactly what's going on, honestly. I do find it interesting that this is happening at that time, but I think, you know what? I literally have a reminder to myself today. If crypto trades below 70K all day and it closes below there, I need to lighten up some exposure in some of the tech stuff that I have, because I think that at some point, if those don't start to work out, then you'll see some peel back overall, and you'll see even lower crypto, and then of course some lower stuff in tech. So oddly enough, I have thought about it. I'm paying attention to it because look, we can't just keep adding risk to the upside for so long. I just saw stuff today that's talking about 35% of the stocks in the S&P 100 index are showing signs of upside skew in the vol. So this is just kind of part of the norm here, and mostly that's been in tech and in oil names. So I think it's just a sign of broader risk, honestly, Chris. That said, I did put on some trades in IBIT today. I've been long stock in here from a short put that I had a while ago. I've had a short call against that, covered call for a while. I just put on what did I do? I think I did a strangle in IBIT in July, the July 31st expiration. Selling the 38 put. I chose the 38 put because it's basically trading $38, so that when it goes lower, which it probably will, I'll remember why I did it, because it was trading 38 at the time. And I'm short the 42 call against it, and both of those in July 1st expiration. And then I moved my short call that I had in July further out to September, and I'm short the 45. So the thing is like, I looked at this beforehand too. The vol has gone up in recent times, but it's really not as high as it has been in the past. So
no,
I still just decided to sell something in here. And I think it's because IBIT is fairly liquid. You can get a lot of trades out of it. And I don't expect this downtrend to last forever. But, you know, we've seen longer trends. But to your point, I think this is the sign of broader risk. And it's probably one of those situations where, why not speculate a little bit in tech? But I think if we start to see a pullback in tech, this is going to get uglier in crypto.
You know, we do have an interesting liquidity event coming up around the corner with the SpaceX IPO, June 12th. I have it here marked on my calendar. The official IPO roadshow begins
also on my birthday.
4th. Oh, now we put that on the Futures Power Hour calendar. Jamal's birthday.
Thanks, buddy.
And now we know that we have our 8-day window here. So 2 days from now, we have this kickoff beginning. June 11th, final price for the shares are set June 12th. The IPO expected to trade on the NASDAQ, Jamal. So Bitcoin selling off. Maybe people are raising capital for SpaceX, although Larry McDonald, who's been a guest on Our Trading Trends before, pointed out at Convert Bond, one of the Lehman Brothers guys, $2 trillion for an IPO is head and shoulders above basically all of their major IPOs: Amazon, Microsoft, Alphabet, Palantir, Tesla, Uber. Add them all up, put them together, Apple, and they're not even in the same league as this IPO that we're looking for. SpaceX right now.
Newsflash: money goes up over time. So, yeah.
Does it go up that much over time? That's the question.
It has.
Jamal, the stock, it's tried. Jamal, the stock market here, just go zooming in a little bit. It tried to swing up into a new high today and didn't quite get there. And maybe this is another episode of replaning in the market right now, as Ilya likes to call it, resloping, where after going up for a long stretch, it needs to take a breather before it can continue to rally. This is a week where we have non-farm payrolls at the end of the week as well. So we're going to get a check-in to see whether or not the AI data center boom is actually spilling over into at least a short-term bump in employment vis-a-vis construction jobs. If that's the case, Jamal, I actually think this is the week, like we've seen in recent months. We want good jobs data coming down the pipeline right now. The Fed being in this little bit of a quagmire where it's stuck with inflation, whether or not that inflation is transitory, if that's something that's going to lead to higher overall prices, a backdrop of them not having even achieved their 2% inflation goal in the post-COVID years. You don't want a Federal Reserve that is stuck between cuts and hikes. And so good data like last month, as we outlined, if you get good data from the jobs report, it's a green light for stocks to keep going because the Fed need not worry about having to cut rates just yet. And that is the good news. It can stay focused on inflation, and the market's good enough to handle it right now, at least in the short term. So I'm thinking about NFP in those terms Friday, Jamal. Do you care about this upcoming jobs report as we think about perhaps some shorter term trading opportunities the next few days?
I care about it in the sense that I'm curious on what it does to the current correlation between bonds and stocks. I mean, it's been very high. I think one of the higher, closer to one being one of the higher on records. And I think I find that part fascinating. So just in terms of trying to make sense of what's going on in the market, I care about it in that way. And obviously we know the jobs report typically will see some type of movement in bonds. So I just want to begin to make sense again of what bonds are. As of right now, I haven't traded bonds in a while. Anytime we've talked about it, I just can't see why to place a trade because I don't really understand what's fully going on there. I should say I can see what's happening. I don't understand how to make sense of it and make a trade out of it. So I think that for that reason, I want to see at some point or another the jobs report start to make sense out of the bond market.
Fair enough. S&P 500 here, 76.17 right now, up 0.05%, Jamal, as we take a look at this action today. A little bit of pinning here around similar levels that we closed out on Friday, but that's a high of 76.32 in today's session, just off of the 76.32 and a quarter high. We're still hugging this uptrend from the lows that we had back in March, although it's starting to get a little bit less enthusiasm here as time goes on. And there's just not a lot of volume in this market today, 741,000 contracts traded. I was taking a peek earlier to see if maybe some of that volume is leaking over into U6, and it's not. That's not the case. We're not ready to roll here just yet. So it's just a light volume day. It's not like there's activity elsewhere in the world. We had fantastic HP earnings yesterday, Jamal, which seemed to follow on from what we saw at Dell the other session. We're up still 16% today. We're up 30% or so after hours earlier. What's your take on all this? Does the AI rally still have room to run? Are you a dip buyer here as we look at the calendar this week? We have another bounce off of our 1 week moving average earlier today.
I think so. And I think quiet days like this do help. Like you mentioned before, like Ilya said, I think they do help if you want the rally to continue. I think you need kind of quiet days, especially when vol is low. And that gives people a chance to retool and sort of readjust. I mean, when I look around the landscape today, we're seeing a stronger pullback in the software names, which again is also coming on the heels of crypto being down. I don't know if they're related, but it is kind of interesting nonetheless. That being the case, you start to wonder if it's worth looking at some downside stuff. Let's pull up ES and let's look at a butterfly. And I've done this in exercise in recent days. I haven't really given myself reason to pull it because, again, just looking here, right? Like, where do you go? I mean, do you go to June 15th because maybe we fade on the other side of the SpaceX IPO? Do you go to June 18th because there is, I mean, yeah, seriously, like I'm curious. Like I look at all of these, and I'm like, where do you really want to put this thing? June 18 because it's expiration, or do you go to the other side of the month? Because we've seen some stuff happen at the end of the month, right? You don't want to do it on the end of the month day, so do you do it on the 1st? But then you're like, well, 4th of July is coming up. So then do you do it on the 6th? Well, we don't drop on a Monday. Seriously, this is what I've done. Finally, I settled on maybe the 10th. Nah, I still have yet to pull the trigger, right? But let's go to the 10th. And we look at something, let's say rather wide. Let's say we go $76.50. Let's go $200 wide each way. $76.50. We'll do 2 at the $74.50 and then 1 at the $72.50. So we'll put butterfly.
Yeah. Put butterfly.
Yeah.
All right. So we'll do 1 here, and then what do you say? 200
76.50. So let's just say right, kind of close to where we are now. 76.50 long that one. You're at the 78.50. Long the 76.50. Sorry.
Long the 76.50.
Yes, long the 76.50 and then 200 wide after that. You're at 78.50.
What am I looking at here? 76.50, 77.50, 78.50. Long the lower, higher end.
Sorry, no. I meant long the 76.50, short 2 of the 74.50.
My mistake.
And then long 1 of the 72.50. So I mean, I can't tell you how many times I've queued this up in the last like 3 days, and it's not bad, right? It's pretty good risk to reward, but is it worth doing it? You know what I mean? Like, I just don't know. I don't know if this is the expiration. I don't know if June expiration is the expiration to do it. June regular expiration, not quarterly expiration. If it's the 30th, I'm not sure where to do this, Chris, honestly. And then I look at days like today, and I'm like, and we're not going down. we're not gonna go down. Like, why would we go down enough for this to make sense? And so I hit the clear button, and it's gone. But like, I've queued this up several times, and I think this is the trade to eventually put on. I just don't know when or where to put it on.
So this is a way of, it's a cheap way of expressing a long volatility idea, right?
Well, and as you mentioned it, because historical vol currently in the S&P 500 is at 10. Implied vol is what, 16, which, jives with where the VIX is. But it's not so much about the S&P or NASDAQ, in some ways it is about the NASDAQ, but it's about the individual names. Just like I mentioned, these individual names have so much skew in them to the upside right now. When you look at a lot of them, Marvell is one of them, obviously making a big move to the upside today. Several of these software stocks. I mean, there's so much upside skew. Thank you. You know exactly what I'm talking about because you saw the same thing I did. And it's just, at some point or another, how long does that last? This upside skew in these individual names versus low historical vol in the index, particularly this index, not as much as NASDAQ, but how long does that last? And so that's why I keep eyeing this up and queuing it up. But I guess I need a crack in the system. I thought there was a little bit of a crack in the system last night. If you saw, EWY was getting smoked last night overnight. I don't know where it's trading today, but it was down overnight. EWY, the Korean one, South Korea.
High, sorry. South Korea.
That was, it's down a little bit today. But last night, I think it was like 209 or 208 in the post market. You know what I mean? Like, those are the type of things you know well as I do, especially being a currency guy. It's like usually when cracks in the system happen, it happens overnight. It happens in stuff like this that's really moving to the upside and in currencies at some point.
Yeah, you say it, you can look at that tail down here, got down onto 203 or so. And EWY is just basically semiconductor companies, which here in the United States, that's not SMH. SMH doesn't have SK Hynix or Samsung in it per se. You can go over to something, you have to go over to a different ETF to capture that international exposure, like DRAM, but DRAM's still up nearly 1% in today's session. I suppose that's why the NASDAQ's still up by a quarter here, Jamal. There's just a lot of paper shuffling going on around today because the leaders in this market are still leading. Is that fair to say right now? 2.78% higher here on SMH. It's why last week we were looking at this bottom left, top right, flag into a breakout, into a symmetrical triangle. I mean, that's just building blocks of technical analysis calling for a move to continue to the upside. So I'm quite content just kind of sitting here, playing the game as it were. I'd like NVIDIA to do a little bit more here off the lows, but SMH, NVIDIA, the S&P, this is a low volume day where there's nothing really changing. Do you think that SpaceX is going to be a problem? I know that you're, just back to markets. I know you talked about this with Josh earlier. You guys having just been on vacation for a bit, but there's creeping concern that the SpaceX IPO is going to be this big, liquidity-inducing event.
Yeah.
Yeah, no, you can look to something like SPCE, by the way, the Virgin Galactic. SPCE is one letter off of SPCX. So there are probably a bunch of people who are buying this stock over the past 2 weeks thinking that it was related to SpaceX. And today it's in by 35%. Today it's in by 35% to burst the Reddit crowd. I know Wall Street Bets was going nuts over this over the weekend.
Well, I mean, I think there may be some of that, but I think people were trying to buy this in anticipation of the whole space running higher. I mean, we saw ASTS running, Lunar, some of those other names. I think there's a possibility. Do I think there's a possibility it could be a liquidity event? I think it's a possibility. I mean, we've seen such things before on huge IPOs. We've definitely seen that in the past, and I think that's why people are sort of talking that into existence. Nobody ever really knows. There's no way you could forecast that. There's nothing that's saying it's going to be, but we've definitely seen that in the past in markets that were, kind of fever pitched or maybe kind of weak, and then you introduce a new IPO, and that becomes the event that, it's. I shouldn't say that becomes the event, but around that event, we end up seeing sort of this exodus out of the market. So, I mean, it's possible. I think. I think that kind of talk is happening, obviously, because we've just had such a strong run up. We just talked about this skew. I mean, realistically, those are the things. It's not the IPO. It's the things we just mentioned. Historical vol being so low, VIX being around 16. There's still this discussion around war, which, once again, I've decided not to read most of that news because you just can't make heads or tails of it. But that's still happening. Obviously, oil is still high. We do have an inflation thing. We actually probably have a wall of worry, and that's something we haven't said in a while, but there is somewhat of a wall of worry. I think just having a big event like an IPO could just be the icing on the cake, but it won't be the reason. There's plenty of other reasons.
Yeah, I mean, I'm trying to work out. I've seen a lot of people express this concern, Jamal. SpaceX is looking at what, a $75 billion float, I think, because they're looking at I think the number reported is a 4.3% float against a $1.75 trillion market cap. So if the S&P has a $65 trillion market cap, $70 trillion market cap, what's the implied S&P 500 weight? That's 0.1%. I don't know. Maybe all the lockups coming undone is going to be the bigger issue over time.
Yes.
Maybe that's going to be the problem, and that's going to be like an anchor around the market's neck. Okay, because then those are insiders who have the ability to use a company that's now public for raising cash elsewhere. Listen, if you're a longtime employee, the janitors are going to become multimillionaires in some cases, right? Good on Elon for spreading around the equity even to folks who are not like building the rockets themselves.
Yeah, it's dope.
But in that case, if you're someone who's been working at this company for 10 or 15 years and all of a sudden you're worth $30 million, are you going to keep that all in SpaceX stock, or are you going to take a healthy chunk of it out and diversify? Because that's what your typical financial advisor is going to tell you to do. And so folks are going to want to take money out, pay for college, pay off a house, do something else, start their own company, perhaps. So that's going to be those are liquidity events that could be coming down the pipeline. But at the get-go, $10 to $35 billion of forced selling in the S&P 500 once it's included at a 4.3% market, float rate. Maybe I'm approaching this wrong, Jamal. I'd perhaps like if someone else took a crack at this. Maybe someone in the comment or chat convince me that this is a big issue for the market next week on June 12th. And we should be really, really worried about it.
Yeah,
Jamal,
I mean, it's possible,
go ahead.
but I don't really see. Again, there's other things that are bigger. I would say, bigger problems, if you will, bigger tells in the market potentially.
What's a nice looking chart right now? This little old Russell 2000 here. It's had doesn't have the tech stocks like the NASDAQ does, but it's been quietly doing this little 2 steps forward, 1 steps back dance. It broke through the former highs that we had in January, new high back, broke out, new high. And well, here's another back where we fell to former swing highs. And now we've started to base around up here. It looks like it's getting a little bit of support at these levels. A lot of that's contingent what's happened with oil and yields, but Jamal, I don't think we want to ignore the fact that even the Russell 2000 is having a pretty good day and behaving in a technically sound manner that suggests the bulls still very much have some control, even if the S&P 500 and the NASDAQ haven't been able to capitalize on Hewlett-Packard's stellar earnings report.
Yeah, I've noticed the Russell here, and it's been surprisingly resilient over the last couple of months, given what was going on with yields, right? I mean, we remember 2022. This one was getting smacked, and it's been surprisingly resilient. But, do you remember like this Sprite commercial from like 20 plus years ago? It's like, what's my motivation? What's my motivation? What's my motivation for getting long the Russell right now? What's my real motivation? That yields are eventually going to fall? That there's going to eventually be, well, maybe a rate cut? I don't know.
No, please don't. We don't want more inflation, Fed. Fed Chair Warsh, don't do that. It would be terrible, Jamal. Yeah, I'm looking at the pricing here. There's a little, perhaps, wrinkle. You could see this 1 month, 50-day moving average. We'll call it the little envelope here, this cloud. It was support, and then it flips over, becomes resistance, and now it's back to serving as support. The market's caught itself when it's fallen into this area. So if I'm going to structure a trade, I want to be below 27.82 if I'm going to go out to 45 days because the markets are on highs and they're stretched, and so I'm going to have to go under like the trend level. If I do anything shorter term than that, I might have to eat something for a little bit, hoping for a rebound. So 27.50, 2,800, 4-1. 72% probability of profit's nice, but 4-1, I don't know. I don't feel like that's the way to play this. S&P, the other hand, Jamal, one of the things that's been working out very neatly here, outside of we'll call it a 3-day window here in May, buying dips into the 1 month moving average, or excuse me, the 1 week moving average, that little light blue line here on the chart. And that's where the market found support again today. The low is 75.76. We do have our 1 week moving average at 75.87 right now. So just a dip below it before we bounce back. Until things change on that basis, the market is probably in summer trading mode. Low volume, low volatility, positive technical drift. You're going to need a big catalyst to kick this thing off and incentivize people to adjust their pre-programmed trading styles that have carried us through June, July for so many years now, it feels like.
Yeah, the future's really up 9 days in a row. Am I just really realizing this? I thought there was like one little small red day. No? Wow.
Just floating on. Just floating on. You think of the NASDAQ here on May 27th when it opened 30,050 and closed at 30,047.25. It was a red day, Jamal.
That's what I thought. Yeah.
You were right.
Okay.
8 out of 9 still not that bad, I guess.
I mean, when I still look across the landscape, particularly some of these tech stocks, though, I still see, even if they're not, the ones that aren't doing what Marvell is doing today, upside is really not coming in. And I still think that's somewhat of an issue. That's why.
Did you see what Jensen said today?
I didn't really see the actual comment. No.
I think that's what kicked this off. He thinks that Marvell is
next $1 trillion company. Is that what it is?
Which means it's a 5x from when he gave his comments. So, hey, listen, Trump's doing a little bit of pumping. Jensen's doing a little bit of pumping. You guys are bearish?
Yeah. Oh, gosh.
Which is also like, okay, so it might soon time to be pretty bearish. Not for nothing. Remember when that picture was going around of Jensen signing autographs on people? That was pretty close to a short-term top. I think like that actually was the top for 3 months.
Yeah, on people. Yeah, that's one way of saying it.
This is a family show, Mr. Chandler. Oil is inching up again here on today's show. Jamal, I hope you bring that energy here for oil. We have some conflicting headlines over the weekend. Iran apparently turned off all of the communications between the U.S. and Iran. Trump's apparently yelling at Bibi Netanyahu, and then he's not yelling at Bibi Netanyahu, and who really cares? It's all gossip and noise. What I see here is oil volatility is still down, and in fact, over the past week, it's stabilized. So 35.3 IVR is one consideration. The second consideration is that week over week, it's up modestly. We're back to the 1 month moving average here, though. And we last discussed that there may be a floor under oil, given the fact that tank bottoms and inventory lows may soon be reached, which is delightfully horrific and ominous to assume the consequences of what could unfurl thereafter. But the purest way of satisfying those fears without totally losing your mind, hedge against that world. Get long some oil, Jamal. And so on the dip last week, we were back out here looking to sell puts, continuing to sell puts, put spreads where we can, peppering these in. Right now, it's not a market. When you dip below 90, you want to be selling the put spreads. It's not the time to sell the call spreads, but I think that's the way that we want to approach this. Likewise, Jamal, I am tempted to look a little bit further out in time maybe and think about what long calls would look like, but we decided to do, we'll call it a little bit of maybe the Jamal Chandler style of trading. We're looking for the spread to widen out. The backwardation here in this market has really compressed in recent sessions. 93, 91 down to 90, 59. That was $15 wide when we were really concerned about supplies a while back. So if those concerns were to appear again and we were to get steep backwardation again, it would likely mean we have a market that's worried that the front month contracts are going to be undersupplied in the back month. They're going to creep up a little bit slower. So got long the MCL Q6 contract, short the MCL Z6 contract at the end of last week. I'm content with my oil positioning for now on that basis, where if there is another, hey, it's been a month since Trump said that the war was about to end, as Zero Hedge tweeted out last night. It's been a month since we first were reported by Axios that the war is coming to an end. And if it doesn't, and we reach these tank bottoms, you're going to start to see that backwardation creep back into place. So while we're still being idiots with stocks and doing our dutiful job, playing up the bubble, whatever, this is the hedge against all that nonsense. If there is another supply disruption wave that spikes here across our screens one of these days.
Yeah, this is, I've just been short a strangle, and I've been short in that Q contract, that July 16 expiration. I have the 81 110. I was short the 123 at one point, but when it fell down so much to 85, you're right. We typically don't roll the calls down into a down move, but in this case, it worked. I mean, I felt like, well, if we're down to 85, we're going to have some work to do to get back above 100, let alone 110. And so I felt kind of comfortable doing it. Still feel pretty decent about it. But again, this has been one of the better trades. This and short strangle and SLV, which I just closed last week, those have been some of the better trades I've had this year.
Nice.
Because vol was just so elevated, and that's the case here. And so we're holding on to this for a while. Our sweet spot is in the 45-day window at this point, and being at 81 to 110, I got to tell you, I feel pretty decent about it. Because I don't know, I feel like 90 is definitely fair value for oil at this point. I don't know if above 100 is anymore. I mean, famously, as I said to you recently, I really have not, I don't know how you keep up with this soap opera that is this current war situation. It's hard to keep up with the news and the headlines because they can be conflicting. And so that's why I've just tried to pay attention to price action. And I don't know, it doesn't seem as though 100 is in the near-term future, but I just it feels like things have calmed down. You could just tell by the vol too. Again, I've made pretty good money on this in the last couple of weeks, and so I think for that reason, I feel comfortable being a upside of 110.
Can I tell you how I keep up with it? With the war?
Mm-hmm.
I have Ilya collect headlines for me overnight for the morning note. That way I don't have to do it myself.
It's nice having a friend on the West Coast when you're on the East Coast, isn't it?
Saves me a lot of sanity in the morning. I wake up, I pour my coffee, I went, God bless that man for enduring. What's that scene in Jurassic Park where they're sorting through the dinosaurs' crap? That's Ilya's job overnight around here. That's the only way to describe it.
That's funny.
He makes us look good in the morning. Jamal, this market, if it wants to keep paying us out, 44 days to expiration, the one standard deviation move is up near 113 right now. On the bottom side, it clicks in around 74. So to that point, if we wanted to go out, one standard deviation move, very typical tasty kind of trade, we could even clip this in some here to get a better risk to reward. But right to 3-1 at a 68% probability of profit. I'm hard pressed, though, to put another short vol trade on in oil right now, given the lay of the land of the sorting through of said crap that Ilya has presented to me in recent days. It does feel like there is a little bit more upside risk than downside risk right now. So I would rather operate on just doing short put spreads on these dips below 90, or people want it, sometimes you got to race. If this problem is going to materialize, and industry experts are conflicted here, but what does a cheap long call spread look like? 101, 102, maybe 101, 103. risking 3 to make 5, 6. If we do get that spike, if we do get this problem that arises, there are ways to construct a trade cheaply here, relatively cheap here, and get some upside convexity to protect against yourself. It doesn't need to be the long MCL Q6 versus the MCL Z6. You don't need to do the short put spread alone. I want to add a little bit more oil, actually, and now that I've talked myself into it over the course of today's show, but I just need to figure out how and what duration I want to do. We can't spend the next 30 minutes doing
Why
that.
not go with the N in that situation? Why wouldn't you go with the June 16?
June 16. No, I don't think that's enough time for these problems I think Iran is going to drag this out at least through the end of June. And Trump's going to continue to play this game of telling us that we're close. He's out there tweeting it. It's all going to work out in the end. Relax. Which is, I suppose, reassuring to some degree. On the other hand, it's been a month. The fact that Zero Hedge is tweeting out chatting remarks like, Trump's been saying this for a month, says enough to me, given their disposition, broadly speaking.
Well, I mean, I hope this does drag out. Honestly, I hope it drags out in the way that it's doing right now, whereas like oil is jumping back up, but not too crazily, given my positioning. Like I said, short the 81 and 110 in the July expiration. I don't mind it doing for chilling just like this for another 20 days without any huge upside move. I'll be good. I'll take the position off. I'll be done.
That would be nice if oil wants to chill here. Hey, fun fact though, Jamal, you know when oil futures start trading? 2007. You know what they first started trading at? I learned this today talking with Mike McGlowan over at Bloomberg Intelligence.
Wait, oil futures just started trading in 2007? I guess I didn't remember that. It was so new.
The CL contract as we know it.
Okay.
Yes. The CL contract as we know it in its current form, 2007. They were first started trading at $93, which is exactly where we are today. Since their inception, crude oil futures have gone nowhere.
Yeah, I would not have remembered that at all.
Yep. Fun fact. Absolute fun fact. Beyond that, though, bonds here are off the highs, Jamal. We spoke at the end of last week about the upcoming Treasury calendar. Worth a reminder here. There's nothing interesting coming up this week. It's all of the bills sales, and the bill sales really don't move the part of the Treasury curve that we care about the most, which is the long end. Z and ZB are the most tradable instruments in the Treasury futures market here. I'm looking at notes and bonds from a technical perspective. I can't get into the whole the Fed's going to cut rates and bonds are going to go up story right now, not with this inflation backdrop. Bonds go up if there's recession or oil prices collapse dramatically. But there's a corner that may be turned here. And we see that with ZB and ZN, where you have this swing low area that was defining the lows in March, in April going into May, formerly resistance. It's starting to break. The downtrend from the war swing highs starting to break, starting to put some footing above your 1 month moving averages here. The volatility leaves much lacking, though. Much to be desired. 13.4 IVR here, Jamal. That's not anything compared to what we're seeing in single stocks, especially right now, which is actually the chart that I shared earlier. We didn't really get into there. The spread between single stock vol and index vol surged to a record 29 points last week as measured between the VIX EQ index, which is the equal weighted VIX, compared to the broad VIX, which I guess market cap weighted VIX, we want to call it. Either way, VIX EQ versus VIX spread, the dispersion is nuts right now. So when you have that kind of dispersion, what's the incentive to trade bonds with these low IVRs?
Like I said earlier, there is none. I also love that we were basically looking at that around the same time. I popped it open yesterday, but I didn't get a chance to really get into it. And I looked at it today. It's pretty good. Pretty good. That thing always kind of delivers that volatility newsletter by SIBO. Shout out to SIBO on that. But there really isn't at the moment. I mean, honestly, I guess we kind of missed our window 2 weeks ago. And I don't know about you, but 2 weeks ago, I was not interested in trying to get short puts in there. I thought it was just going to go lower because it looked really ugly at the time. And all we kept seeing was yields rising. And in hindsight, it would have been a really good trade. It would have been probably the best trade of the year in bonds, at least up to this point. So I don't know, Chris. I don't really have any desire because I think it's just that picture is so muddy right now. What's going to happen? What the Fed is really going to end up doing ultimately? I can't make heads or tails of a trade out of here. And it is kind of surprising that vol has is so low in here, but truthfully, like we just said, it's kind of weird that it's mirroring the stock market right now. I mean, it's not obviously on highs, but it's gone back up, and vol is low. It's a very similar reason. So maybe at some point something changes. I guess we just wait until vol gets bid in here again.
The move index is at am I seeing that right? 73?
Wow, wasn't this thing like 160, 170 in 2022 or something like that, right?
It's up to 190.
Yeah, that's what I thought.
198. Where did you go, bond vol? Well, that's not really an ominous thing, Jamal.
I mean,
Do
if you
want your
didn't know
bond
any
market had a
better-
lot of volatility.
If you didn't know any better, like we do, you would have no clue that this single stock vol is so high. Like without knowing that, everything else vol across the board, I mean, is fairly low. Even Bitcoin, which is moving to the downside, like it's not really high vol right now, like we just said. I mean, same thing in equities, same thing in bonds. It's gold and silver vol fairly low. Vol is pretty darn low across the board.
Vol is low across the board. And when vol's low in gold and silver, that's usually a problem for gold and silver, Jamal. It's a 30 IVR right now in gold, and volatility continues to come down over recent weeks and months. That's been problematic. Why were we cheerleading gold in the fall, in the winter? Because vol was going up with price. That's the relationship in play. So until I get to see a little bit of a vol surge here, I'm not sure how much I buy what's happening in gold itself. I'd like to see the miners start to get a little bit of action. You know, they typically lead gold because they're a little bit more speculative. And so folks like to get their toes dipped in the water here first. And once the miners start going, then gold price tends to follow. They haven't done that yet, though. They're still kind of mired in this downtrend. They're not really making any headway. I don't see that appealing of a long situation for gold right now in the very short term. Its own downtrend from the highs that we had here, Jamal, like very much in the throes of that intact. Silver has obviously looked terrible. It's up a little bit here today, but like what we've seen in recent sessions, can we crack through this moving average envelope through the 1 week, the 1 month, the 50-day? No. And throughout that entirety, what's been happening to silver vol? Down. Not exactly giving us the tenets of what looks like to be a good long opportunity. However, copper's in a different ballpark and up at 665 here. This is doing exactly what we wanted it to do when we got long those 6.7, 6.8 call spread a few weeks back here on the follow account. And to that point, Jamal, the technical structure here is pretty crisp and clean. It looks like we may get another breakout opportunity here again soon. So we have this spike high in January, which I've considered nonsense because it's related to the platinum, palladium, silver, gold mix up and meltdown. 6.2 becomes your breakout point. You get the swing high into, well, the nonsense level where people are trapped. And so it's a nice liquidity event for some folks to exit their losing positions. But then we catch back at 6.2, former resistance becomes support, and we swing up. So copper is behaving technically in a very sound manner here. Taking a step back, this could be a much bigger range that we're talking about that's getting ready to break out. Copper is a building block for this AI world, is it not? How else are we going to electrify everything in order to build the energy grid to get the power transmitted to these data centers? That's a material part of the conversation right now. And oh yeah, copper. There's a lot of mining problems going on in Latin America still, in Chile, Peru, and Panama, because they can't get the fuel they need to operate their mines. So some supply constraints are coming home to roost in the very short term right now here. I have a range of 5.3 up to 6.7. That's $1.40. That gives you an $8.10 target. If you want to get spicy for summer copper sizzle here, looking at like $8, $8.50 as a call spread. Nah, it's too far. But risking $600, playing for a volatility expansion in copper, plus a more of a breakout. I am very close to executing that trade, Jamal. This thing looks like it's ready to go, and we should just put some eggs in a basket, give ourselves enough time. The technical pattern's there. The market is behaving very technically sound. Let's give credit where it's due, and let's just let it do its thing.
That's one that's right up your alley. But this is, this whole metal stuff, it's more of the macro nirvana for you. I mean, explain gold to me. I mean, are central banks not buying gold
Barely know
anymore?
her. Never heard of her. What's her, who?
How quickly we turn on those that we loved so much once upon a time. I mean,
yeah.
Is Are central banks just not buying gold anymore? I mean, why such the pullback is not surprising, but the fact that it's just so quiet now is really interesting, is it not?
It is. I mean, it's the same thing with silver. I should have done the Step Brothers bit. Did you say Pam? Is that Pan with an N? Yeah. Why? Look at Turkey, for example. They had to sell basically all their treasury holdings in order to raise capital to protect the lira, and they've had to jettison a whole bunch of gold along the way too. And there's a number of central banks in Southeast Asia, in the Middle East that have had to follow a similar path. They have to raise cash to pay for higher energy imports. And then you think about the fact that any excess money coming into the world moving forward, you turn back on the Strait of Hormuz today, Jamal, and let's just say oil pipelines, gas pipelines are operating at 100% immediately, which they won't be, but we're going to be generous here in this assumption. Where is the extra money now, the revenues, where are they going to go towards? They're not going to go into diversifying FX reserves. Why would they? You have to rebuild infrastructure in many of these Middle Eastern countries. You're probably going to have to pay for higher energy inputs for a little while longer as well. And then you're going to have to buy additional energy supplies, which is going to keep a floor under energy prices, in my opinion, because you're going to want to refill the strategic reserves that you just drained to prevent your economies from going into the tank during the war. So where is the marginal dollar, lira, real coming from for central banks or sovereigns to restock their gold reserves that they've drained to help cushion their economies from the war? When is that arriving? Where is it coming from in the sequencing of priorities at this present time?
It's deep. It's deep, given all the things that have happened in gold more recently. I mean, but what else? What else is the reason?
I have a hard time painting the picture right now to be a gold bull, which is why I'm not doing anything. No reason to do it. Copper's friendly. Copper's been fun. Copper's been working here. 665.
Yeah, I told you how I felt weeks ago about gold and silver. And again, a lot of it was based off of what we saw. Was that 2011? I lose track now of these bull markets, but we saw what happened after that one. I mean, there was a strong move, there was the fade, and then there was the follow-on fade, and after that it got quiet. And this is exactly the same thing.
Fade and quiet. Well, you played it much better than I have. That was a great trade you had at the start of the year, selling the silver ball. Whew.
Yeah, I don't think I've ever done that. I've never had it's definitely not personally. I've never sold vol in something and kind of rolled it and kept it going for months on end. So it's a new one for me.
Well done. Well done. Well done. Like that. Missed that trade myself. 6E here. Weaker on the day. British pound flat on the day. The yen is a bit softer. So your dollar index is basically asleep, doing nothing. Although it's starting to get back to a turning point here, Jamal. I've been thinking a lot about the Japanese yen lately here because would you know it? It's getting back to the intervention level. It's getting back to 160. Dollar yen right now is 159.97. Oh boy, will we get to see an intervention on today's show? Fun. We should just keep this open for the next 14 minutes. Jamal, we got a real problem here that's going on with dollar yen for Japanese officials. We are at the precipice of a major breaking point. 160 has been so clearly identified as a line in the sand by the BOJ, the Ministry of Finance. They have spent a good deal of ammunition over the years defending this line in the sand through releases of their reserves. They are doing it in the least advantageous and welcoming environment possible. And this was my commentary here after they intervened at the end of April and beginning of May. In an environment where yields are up and oil prices are elevated, you are throwing money into the wind because Japan imports more than 90% of its energy. So if oil prices stay elevated and treasury yields are staying up, then the yen continues to go down. You're converting more of that yen to dollars or other currencies to pay for the imported goods because you are an island nation. So it's like once the war ends, that's when they should intervene. But they also can't let it go past 160 because if you let it go past 160, then the market knows, well, they've given up on defending the weak yen. And does the government want a weak yen? Absolutely not. And that's political instability. That's more inflation for a country that's seen a little bit of political turnover in recent years at a time when they're having more frictions with China amidst a military buildup. Japan building up their military, that is. this is the most interesting thing. Forget the 731,000 contracts traded in the S today. You're looking for some action the next day or two. The yen is going to be the battleground, I think, for a lot of fascinating activity here. So first blush, what do? They probably try to defend it again, Jamal, right? They've got to defend it at least one more time. They can't just let it go through 160 because it goes through 160, it's 161, 162, and you're going to have to spend more and more and more and more and more money to just keep this thing down. But it's going to change all of our reaction functions. We're going to think that you tossed in the towel. We're right here on the line of the sand. If I'm trading currency, this is the only thing I should be trading right now. Only thing that you should be trading right now, Jamal, at least. I mean, what's your take on this? I know that you're not a yen intervention person.
I'm not. No.
We're here. We're here. We're here.
I mean, it's fascinating. It's such a spicy trade. I mean, I don't mind sitting on small little long dollar positions. Honestly, that's just the way I feel like it's interesting to play. I know there's been a whole de-dollarization going on, but I still just find that as one of those trades, particularly when I think when we talk about, related to the market, and there's still that correlation that the market, it's moved around a little bit in the past several months, but I guess really what I'm saying is what I would be playing for is if and when we do have that pullback, we will see the dollar run. And so that's one of the reasons. It allows me to continue to play upside in some of these names, although mostly it's been through, calendar call spreads, trying to offset some of the vol to the upside that we've seen in these individual names, or short volatility in a few of these names via strangles and things like that. But when it all changes and when it all turns, ultimately, I think one relationship that stays is that the dollar will move to the upside if the market falls down. And I don't mind sitting in some long dollar positions when that happens, because for the most part, I'm playing equities bullishly and bullishly and also short vol wise. And if that changes, then that means markets are falling. That means dollar goes higher. So that's the biggest thing that I can make sense of.
Well, if 3 days from expiration, we're at 160 right now. We're at 160 right now. If they're going to do something, look, the Knicks and the Spurs start tomorrow night. There's no action for me tonight. This is not a typical tasty trade, but we're for $6.25. That's less than a cup of coffee. What is buying a 65 strike cost? Right, 65.
Speaking of, did you know that I mean, you probably do, that the Spurs are favored in game one and favored in the series? Did you know that?
I did know that. That's fine.
It's fine. It's interesting.
Not as interesting as you think it is. Yeah, not that interesting. So, Jamal, the 64 strike. Last time we ran up here, we got through 64 for $50. For $50.
$50. In Philadelphia, it's $50.
If we do get another intervention, though, I mean, we think about the scope and the scale of some of the bounces in the end recently. Have they lasted when they've done these interventions? I mean, we're back here already, so the answer is obviously no. But over the years, when they've done these interventions, what's ultimately happened? It's the context of the environment where we find ourselves, when we're getting up towards the 160 level. The yen carry trade breaks down here. That's not happening again right now. The market is not levered long, unlevered short the yen the way it was back then, where we had this big pullback. We had attempts here in 2025. End of 2024, beginning of 25, the BOJ was out defending the currency. We had it again here at the start of last year, end of 25 into 26, defending the currency. They've taken a number of steps. The bond market looks like an absolute mess right now. Jamal, this is to me the most interesting topic here. So the yen, 159.98, 55. I mean, we're going to see a 160 print here any moment. That to me is the thing to watch. If you do get a BOJ intervention today, tomorrow, hopefully they do it before the Knicks game, because I'm not going to be paying attention to markets while the Knicks are playing. Believe it or not, like this is I don't think I have. How often do you think I've watched my team play basketball in the month of June, Jamal?
It hasn't been often at all.
Nah.
Matter of fact, they were showing replays of that 99 series last night, game 3.
Yeah, that was not a fun series. I remember that as a kid a lot. I remember in 94, everyone being so excited the Knicks were going to beat the Rockets when we were up 3-2. And I remember people being very upset after game 7. So Hopefully it doesn't work out that way. The dollar breaking higher here in DXY. Look, if there's a yen intervention, it's going to weaken the dollar versus a basket of currencies. That's the whole point of this. Prevent the dollar from going up against the yen. So I'm not really inclined right now with this as a risk in the background of getting short 6B, short 6A. I mean, 6A long still looks good. It's not a head and shoulders pattern yet.
Mm-hmm.
But the currency space needs to be watched. There's a lot of vol in here, Jamal. 56, 69, 51, 55, 45 IVRs. Higher than what you're seeing in the stock market, broadly speaking, or bonds.
Yeah, I mean, that says a lot, right? We've called those out other times where, and again, I think that it's literally, we're basically, as we're about to close, we're basically back at the top of the show. We were saying at the top of the show, this typically is something that happens. You'll typically see cracks first and things like we mentioned with the EWI and the move to the downside, but then also in currencies at some point in time. And there's a reason why. I mean, these are the largest markets in the world. And so the fact that you're seeing some interesting high vols in here, I think says a lot.
Jamal, we haven't talked about wheat or grains or anything else today, but not the greatest session here. I'm sitting short some puts around soybeans around the 1160, 1180 level. So I'd like for this to get a little bit of a bounce. Other than that, I think we can call it a session here. We don't really have much of a calendar coming up, by the way, in terms of the earnings calendar today. There's Palo Alto Networks, which I suppose is, it's a $250 billion market cap company. So you don't want to overlook it if you're trading earnings. Tomorrow you have Broadcom, though, after hours. And Broadcom is absolutely part of this AI build-out story.
For sure.
Who have they been working with? Alphabet. Alphabet just took $80 billion in an equity raise to help with its AI infrastructure build-out. Who would benefit from that? Probably Broadcom. Just a thought. Rest of the week, that's not really anything interesting. And then we have some PMIs and what have you, Jamal, going into our ultimate NFP on Friday. ISM services come out tomorrow. The manufacturing one was actually quite good given the AI data center build out, but that's really all the story is right now, folks. Tomorrow's Wednesday, June 3rd, and that's when we'll see as ISM services. Until then, though, you and I are done here. Who do we have on last call today? I think it's Jenny and Tony. Oh, okay. That's fun. Yeah. Before that, though, we're going to take a quick break. And then, according to my notes here, renowned vocal, a proud Knicks fan, Dr. Jim Schultz is coming up with From Theory to Practice.
The old PDT rules are going away, and tastylive is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the tastylive viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. tastytrade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join tastytrade today.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. right where you need it. Tasty Trade. Download today.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. I'm so glad that you guys are here because it is only because of you all that we can do what we do. So thank you guys so very much. If you are watching over on the Tasty Live network, that would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Man, for the 712th consecutive day, you can celebrate if you are a bull, and for the 936th day consecutively, you can commiserate if you are indeed a bear. But I can assure you, it will be a good time had by some. If you have a question for me, drop it in the chat box, and I'll try to get to as many as I can right around the midway part of the show or thereabouts. I typically get to, if you check the board, if you check the tapes, I typically get to somewhere between 0.007 and 0.0095 questions per show. So get them in earlier. That will increase the delta that I will get to your question. So Matt, go ahead and bring us into the market. Man, let's do it. Let me go ahead and let's click a little refresh over there. Let's get into the market over here. Even S&Ps. Up 6 on the day. You got the risk-free instrument, also known as the NASDAQ futures, which technically I am legally obligated to remind you that is an extraordinarily high-risk product in theory. But in practice, another day, another dollar. NASDAQ up 85. Got the boomers up 227. You got the Russell 3,000 up 23 on the day. You got the boomers up 10. The boomers, not up. The bonds. Well, bonds and boomers, is that not kind of like peanut butter and oatmeal? Is that not kind of like buys and tries on a Saturday morning? I think it might very well be. Bonds up 10, got notes up a few ticks, got oil up $1.77. I think we are blockading the blockade now. I think we got rid of the blockade of the blockade's blockade. And so now that we're down to just blockading the blockade, we are bullish on oil with oil up another $2. Got UB40 up ever so slightly. Then you got the shifties. I don't know if they can celebrate. They'll probably find a reason. If the shifties are still in it now, like if the shifties are still holding strong behind their boy Peter Schiff now, man, they should just simply celebrate the longevity of it all. Got gold up 11, got silver. Where are my Hunt brothers at? Yeah, silver up 23 cents. So a pretty muted day for the metals, somewhat muted for the market. I mean, again, just given the magnificence of this bull market, it's like, man, NASDAQ only up 78. Like, why did I put pants on? Like, NASDAQ only up 85. Like, why did you get me out of bed? Like, this is very much a nothing day if I've ever seen one. I need NASDAQ up 215 before I'm even interested. Like, I need NASDAQ up 275 before I even consider putting pants on. And so NASDAQ only up 81. That's a little bit of a letdown for sure. Got the VIX down, or VIX futures, I should say, down 33 cents. And then VIX spot volatility, the old VIX down 22 cents on the day. Down to just under 16 at about 15.80. So there's your market commentary. Is it going to make you a better trader? No. Is it going to help you place a trade today? Not at all. Not at all. But is it on par with anything you would find elsewhere when it comes to market commentary in a world where nobody knows a single thing? I think it is. And so if we take a look at the portfolio, man, I think we're just going to do this job today. So I was going to talk about all these positions. We got MES, we got MNQ, we got Micron, of course. We got Netflix, we got Starbucks, we got Snapchat. But I think we're just going to do this job right here. Because it's just more of the same, guys. It is just more of the same. P&L opens, forget about P&L opens. P&L open bros are like, Jim, where's your P&L open? I'm like, what P&L open? I don't know. What are you talking about? P&L day? Nah, don't matter. Don't worry about any of it. It's not even there. It's not even there. That gives us more time for B-minus humor. It gives us more time for me to hear what's going on in your neck of the woods. Again, questions, comments, stories, and jokes. Put them in the chat box because I want to know. The algo really wants to know so it can learn and get better and then kill us all in about 13 or 14. Well, I was going to say 13 or 14 years, but probably 13 or 14 months maybe. And so, so put it in the chat box so we can all get better. But yeah, it's been a little bit brutal today. Very similar to all the previous days prior to today. I don't know that's really any different. I think it's pretty similar indeed. But let's actually go through, all kidding aside, let's go through the positions in the portfolio because we are going to do a couple things, believe it or not. This is not going to be like, let's just wax poetic about the lamentations that we have to endure in the portfolio. We've got a whole book of lamentations that we can all check out whenever we so desire. So I kind of think, let's go ahead and let's talk about each one of these guys kind of one by one. Can we go ahead and can we bring these guys up? We can. We've only got 6 positions. Man, I remember, it was not that long ago. I remember when we had like 15 or 16 or 17 positions on in the portfolio. Like we had so many positions on in the portfolio that it was like, it was bursting at the seams, man. Like I remember like we were almost like falling off the first page. I don't know how Nick Batista does it. I don't know how Liz and Jenny do it, man. I'm only one man with an intern, and I can only handle like 12, 13. Once you get to 14, 15, 16, man, the wheels start rattling for sure. So being around 6, that's a little bit on the lower end, but it's certainly much easier to manage, I should say. So let's go through each one of these guys. I'm actually going to minimize them because it looks a little weird having them all kind of pulled out like that. Let's talk about MES. If you happen to have a banana natty on hand, I would pour a little bit out for this MES position. MES up another $5. Oh, I got to get off my black marker there. That's only for special circumstances, of course. MES is up $5. So you can see that, we've collected a total of 300 points on this short call. It is currently marking at a crisp 900 points. And so obviously the question is, okay, Jim, when is enough enough? When is it finally time to call it quits and just say, hey, you were wrong. You were wrong. Move on. Blah, 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 blah. Well, you guys know that I love to lean into the do nothing strategy. Like I love my default setting to simply be, just put it in the ground with me, right? Like I'll leave a note, like I'll leave a message for Penelope. I'll leave a message for Eli. I'll leave a tiny little sticky note for Amelia. Like, look, listen, I may have expired, but that doesn't mean this position has to. Like I may be gone. I may have lost in the game of life, but that doesn't mean that this position has to. Just keep rolling, keep the dream alive, and you should be able to scratch it any year now. So when it comes to this MES position, I actually think we're going to sit tight for right now because we are actually going to make a change to the MNQ position. So it is going to lighten up our downside directional bias at least a wee little bit. I want to wait until at least we get to 1,000 points in the money, because that's a crazy thing to say. It's a crazy thing to even think. It's an even crazier thing to say and have it out there. It's now on record. It's now out there in the public domain, much like my Knicks that I've been telling you guys about for many, many years now. You can go back and check the tapes on that guy whenever you so desire. But with MES, I'm like, let's go for 1,000 points. I mean, it's not too often you get to lose 1,000 points in even the S&Ps, in the S&P 500. I mean, that would typically take a year, 10 months, maybe. I mean, we're going to get this thing done and dusted in like 7 weeks. We're going to get this thing over and done with in like a couple months. I mean, that's pretty crazy if you really think about it. Not to mention, we get the big round numbers. Maybe the big round number bros can come in and help us out a little bit. But I do want to stay in this position. Again, this is the power of being small. This is the power of having your position size in check on entry. I have this luxury, right? If I want to stay in the trade, I can stay in the trade. When you're too big, you lose all the leverage, pun intended. Or maybe you have too much leverage. When you're too big, you don't have an opportunity to view this objectively. You don't have an opportunity to kind of do the things that you've set out to do. And so you kind of have to, you're kind of beholden to the size of the position and the emotional baggage that comes along with that. And then you end up doing things before you actually wanted to do them. And so, for my purposes here, of course, I wish we could go back 6, 7, 8 weeks ago. Again, hop in the hot tub time machine without John Cusack, of course, and go back in and not even do this trade to begin with. But sadly, we don't know what's going to happen. Nobody knows what's going to happen. And so for MES, we're going to sit tight for just a wee little bit longer. It should all be over pretty soon. Based on the current pace and trajectory of MES, if we're only looking for another, 125 points out of MES, I mean, that's Thursday on the close at the latest. Like Thursday on the close at the absolute latest, we will be done with this position. So MES, we're going to sit tight. We're going to do nothing. So MNQ is not too much less pain than, hold on a second. MNQ. Let's see here. Oh no. What happened? Hey Matt, is my platform still working? Because I got the spinny thing. You guys know the spinny thing? Oh no. Look at that. Oh no, we may be turning this into a Q&A session. That's brutal. Hey Matt, am I still live? I should be live. Can you guys see me? Can you guys hear me? It looks like I'm still coming through okay. But maybe we got the spinny thing. Oh man, that's brutal. But I do see you guys in the chat. I may be coming to you guys earlier than usual. Brian Rakitin's here. Paul Heyman's here. Man, look at BBB Fine is in the house. Man, I appreciate you guys so much. Let me see if give me 1 second. Hey Matt, can you let me know if I should still be live? I think I'm still live. Can you guys let me know? Sam. Oh yeah. Look at you guys in the chat, man. You guys are coming up clutch, man. I appreciate you guys. Yeah, I don't know what's going on with the. We see you and hear you fine, man. Look at you guys. I appreciate you guys. So I don't know what's up with the spinny thing. I don't know what's going on. I don't know what's going on with that. So let's go to you guys. I don't know. Let's go to you guys. We may be done with Tasty Trade today. Tasty Trade taking a little siesta, and so hey, sometimes that's the way it's got to be. But let me see. eMedia's here, man. Look at Debbie J. Man, I appreciate you guys so much. Look at Point B. Point B saying, Jim, you're looking handsome. I appreciate you, my friend. I'm going to send you that cash we talked about. I'll even send you the crypto that we talked about for you putting that comment in the stream at this very time. And so, man, I appreciate you very, very much. And so, yeah, the platform is, I don't know. Let me see. Can I? Yeah, we'll try to do that. We'll try to fire this up again. Oh no. Hold on a second. That's not good. And so, let's see here. Yeah, let's go ahead and do hey Matt, let's go ahead because I don't want to end the show and I'm not that far away from when I would typically go to questions anyway. So let's just go ahead and go to you guys are lighting me up in the chat. That's great. Let's just go ahead and go to the questions. Let's just go ahead and do I tried to do the restart, it won't work. I'm just gonna go to YouTube now and I want to see where my people are at. And so now that we're going to you guys, man. You guys got to pump that algo. Because now it's just me, you, and the algo now, right? We're all in the same room together. It's just you, me, and the algo. So pump the algo inside the chat. And I appreciate you guys. So let me see. Let me go all the way back. Let me see. Oh, I see Emmett Morrison is here. Here's a good surprise and delight. What's going on there, Emmett Morrison? Emmett Morrison's not even a new person. Emmett Morrison is an old, crusty person. And so Emmett Morrison in the house, man, I appreciate you, my friend. Emmett Morrison says, Dr. Jim, who you got winning the only championship that matters, the Canes or the Knights? Man, I'll tell you something. I've been talking about my Canes since I started on Tasty in 2016. And so obviously I'm not jumping ship now. Like obviously I'm sticking with the Canes now. Like I'm not going to go ahead and pivot. I'm not going to call the audible now. There's no reason to. And so we're all the way with the Canes. I've been saying that from the very beginning. And so I appreciate you. And so let's see, where are we at? Well, hold on. I see up and down at the end. We're going to have some fun today. This is going to be fun. Extra time with you guys? No, we're going to have some fun with it. So up and down says, tell the boss you want MacBooks, man. So let me tell you something. I cannot stand MacBooks. So here's something that's really funny about MacBooks. So for those of you that are Mac users, I know you guys are, man, you guys are a feisty bunch, man. Like you guys do not like people throwing shade at your MacBooks. Like you do not like people just telling, the real hard, I was going to say the real hard, cold truth. I guess it would be potentially cold. You don't like people throwing shade at your MacBooks. Here's what's funny about a MacBook though. So everything is obviously opposite on a MacBook. Everything is obviously like turned around and like up is down and left is right. It's kind of like scrolling through the strikes on the Tasty Trade options chain. So it's sort of like that in a way. So Autumn has a MacBook, right? So she has a MacBook. So she's one of those people. And I bought it for like, I don't know, however many years ago. It's like 5, 6, 7 years old or whatever. It's still going strong. It's still been amazing. I mean, I've had to get like 7 new laptops in the time that she's had the same one. So that might be somewhat telling. But the funny thing is, whenever we're on her computer, again, you guys better not rat me out. Do not rat me out. I'm trusting you guys on this one. Whenever we're on her computer and we're doing things, she has no idea how to do anything. Not because she is not like intelligent enough to figure it out, but it's because the MacBook makes it so hard to get where you're trying to go. She has no idea. No idea. I'm like, just close that window. She's like, I can't. I'm like, why not? She's like, I don't know. Let's do it a different way. I'm like, why do we have to do it a different way? I'm like, hey, just right click. She's like, you can't right click. I'm like, you can't right click. I'm like, what world are we living in? You can't right click. She's like, no, you can't right click. We got to find a workaround. I'm like, a workaround for the right click? Man, this is some crazy, crazy stuff. And so anyway, I'm not a MacBook guy, but I appreciate y'all. So let's see here. Where else are we at? Brian Dowdy. Brian Dowdy has a great question. And again, the platform froze, so it's just me and you guys. We can look at this again tomorrow. But Brian Dowdy, remind me of Brian Dowdy. So Brian Dowdy says, how's the P&L year to date looking? So you would think I'm probably getting absolutely steamrolled. And you're not too far off. But remind me tomorrow and I'll show up. We'll take a look at it. You don't have to take my word for it. But you would think with all the cash that we've hemorrhaged on MES, with all the cash that we've hemorrhaged on MNQ, with the cash that we are in the process of hemorrhaging on Micron right now, you would think that I am getting absolutely gorilla smacked. I'm actually kind of not. I think I'm down maybe a couple $1,000 on the year, which is not too bad. I mean, last year we had a great year. I think we were up like $7,000 or $8,000 on the year, whatever it was. So we're obviously way behind the market this year, but it's still early. It's only June 2nd. Like this thing's barely gotten started. Like we've just gotten through the warm-up sets. I mean, we barely have any lactic acid built up in the quads. Like this thing has just gotten going. And so I think I'm down maybe a couple $1,000, but we can take a look at that tomorrow. Just remind me when we've got the platform back up and running. But let's go back to you guys in the very beginning. Man, let me take a look at this. So Griffin, by the way, if you're watching the show, if you're wondering where I'm pulling these questions from, I'm on the YouTube channel. So if you go over to the YouTube channel and you go into the live chat, you will see where I'm getting all the questions and the comments from. And you can drop one in there and I'll try to get to it, later on in the show. Although if you drop it in now, you'd have to be banking on a midstream surprise and delight. I don't think it's ever been done before, but maybe today is the day. Maybe today is going to be the first day. And so Griffin Jones is in the house. What's up there, Griffin Jones? Dr. Jim family has been Knicks fans, or Dr. Jim's family has been Knicks fans since the Dutch founded the team in NYC 100%. And again, I've been very clear about this. Like I've been clear about this on record, consistent from the beginning. John Starks, Patrick Ewing, Allen Houston, Larry Johnson. I mean, these are my guys, man. These are 100% My guys. Wolf is in the house. Let's go, Doctor. You're the man, man. I appreciate you, my friend. Thank you so very much. Oh, Daniel is here. Hello, Dr. Jim. The best time of my day. Thank you so much for your amazing teachings, man. I appreciate you so much, Orgenu. I mean, you guys are the core position, man. I mean, the first three that I rattled off, Griffin Jones, Wolf, and Orgenu, I mean, you guys are like in the center of the core position. And so I appreciate you guys very, very much. I'm just going to keep rolling you guys out at 21 days, and we'll just kind of see how it goes. Sam L in the house. Well, speaking of core position, since it's Taco Tuesday, I need your nutrition expertise. Let's go. If you skip dinner at a party and only drink banana natties to hit your macros, is it acceptable to have a chicken taco or french fries for breakfast? Of course it is. Of course it is, 100%. Because, I mean, when you forego a dinner and you kind of go banana natty, you're obviously tapping into the fourth macro, right? You got your protein, you got your carbs, you got your fats, right? But you get to that fourth macro, I mean, those are the banana natty macros, right? And so that's where the real power is unlocked. And so, yeah, I like where you're going with that there, Samuel. And I agree. So Danish Dynamite is here. What is up, my friend? Sam L. Algo update. Doc spent 20 minutes calculating macros. Then someone mentioned Taco Tuesday. It is a Taco Tuesday, but is there anything to taco from? Like, I can't keep up, man. I legitimately lost track a couple weeks ago. It's very difficult to keep up. I mean, there's a ceasefire and then no ceasefire. Like, there's bombing and then no bombing. And there's like a deal and then no deal. I mean, I know we've already won the war 14 times. And so maybe we're going for 15 today. I don't know. I can't really keep up. You guys let me know, because I do need to know. And the algo really, really needs to know. And so let's see. Emmett Morrison is here. And then look at Peter Leger is in the house talking about some aliens. Man, I'm going to go ahead and sidestep that guy real quick. But I appreciate you. Patrick Maslanka is in the house. What's going on for the algo? That's it. Superstar. Dr. Jim, what earnings plays are you putting on? Yeah, we'll have to take a look at them tomorrow. No earnings plays today for obvious reasons. I want to buy a Lambo in every color by the end of the summer. So I need to know what to fade. I got you. I got you, boo. You think I would let you down? Like, I know we've already secured the first Lambo. Do you think that I would let you down when you have not yet accomplished your goal? Like, do you think that I'm going to ride this long with you down in the foxhole to get you that first Lambo without getting you 2, 3, 4, and 5? Like, you need a Monday through Friday set. Like, I got it. You need a Monday through Friday roster, and I'm your guy, man. Just stick with me to the end, and you'll be all right. Sam L. said, Doc, 20 years ago when you met Miss Marie. Miss Marie. She never gets Marie. She gets April a lot. She gets she's gotten August a couple of times. Obviously, her name is Autumn. Well, her first name is actually Mary, so maybe that's what you were going with there. Yeah, the Southerners, man, they're kind of weird, right? Again, don't you dare rat me out. First, you got the MacBook thing. That's a little bit odd. But then, secondly, let's see here. James is sending me some messages. Yeah, James, I can't. For some reason, it's all like everything is locked up. So I'm not going to. James said to maybe try again. I'm not even going to do it because everything is like, I'm afraid we're going to lose what we have. And I don't want to lose what we have. We worked so hard to build it. And so this will be all right for today's show. It's fine. And so, but yeah, the Mary Autumn, the double name in the South is like a normal thing. Like, it's a very normal thing. Now, she doesn't go by Mary Autumn. She's never gone by Mary Autumn. She's always gone by Autumn. But her first name is actually Mary. And so it goes after her mom. Her mom's name is Mary. But I've always known her as Autumn. And then her sister's name is Evelyn Grace, and she goes by Grace. And so kind of the same thing. In the North, I mean, Northerners, help me out here, man. Northerners, Midwesterners, do you guys ever do a double name? No. I'll go ahead and answer that for you. Do you ever go by your middle name? Very rarely. Like, very, very rarely. I didn't even know what my middle name was until I was like 17. And so let me know if you guys are doing something different in your neck of the woods. But I'm pretty sure that we nailed that one. Jason's in the house. Spike Lee sits in Dr. Jim's old seat. Check the tapes. That's right. That's 100% right. Emmett Morrison, Dr. Jim. Oh, there's the Canes and the Knights. Yep, there's my Canes right there. Let's see. Jared Kramer is here. What is up? Griffin Jones. The algo, my futures are green for the day, but BA, Crowd, and Google are inflicting serious pain. Yeah, BA, Crowd, and Google, man, that is some crazy, crazy stuff. BA, that's Boeing, right? Yeah, then you got CrowdStrike, you got Google. And so, Griffin, you must be short those names, I would imagine, because obviously everything has just been ripping to the upside. And so not fun at all. BBB Fine is here. What is up there, BBB Fine? I appreciate you. Sam L. The VIX is trying its best to be scary. Meanwhile, the market looked at it and said, that is cute. Yeah, the VIX was kind of weak. The VIX was kind of down when we checked it just a bit ago. Jared Kramer, provide us with some of your B-minus humor on the snoozer of a day, Doc. I know, man. Has this not been like a total snooze fest? I'm pretty sure that, I mean, this has been one of the slowest days I can remember in the last couple of weeks. But let's think here. Hang on. Since I have your undivided attention, I mean, you're probably multitasking with many, many things now. But if you are, so today is June 2nd. So that means that tomorrow is June 3rd. And the next day is June 4th. And so that can only mean one thing. The day after that is June 5th. Guys, come back to me if you are multitasking. This is serious. So this Friday, there's an economic data drop. Guys, this is not good. So I've been studying the markets for 20 years, over 20 years, maybe slightly under 20 years, about 20 years. I've never in my entire professional career seen, studied, or been up against a more impactful economic data drop than the one that is coming on down the chutes on Friday morning at 8:30 Eastern. We have an NFP, a non-farm payrolls print, that is going to drop and is going to change everything. Is it completely made up? Of course. Is it totally fictitious? You know it is. But it doesn't matter. This is going to change the trajectory of your entire financial future. Like everything you are working for, it's all based around 5,000 jobs up or 5,000 jobs down. Now, are they going to revise that away 2 months into the future? Of course. Are the numbers going to be completely changed 6 months down the road? You know they are. But when that headline drops, everything that you've been working for, it all comes into question. And so you've got 3 days left. You've got under 3 days left to get your affairs in order. I would get them all in order. I would make sure that people can find your digital accounts, that people can find, where the money is. Because if this thing goes sideways and the apocalypse shows up, which I checked Polymarket before the show today, it's a 67% chance. And that's not my opinion. This is real money on the line. Friday, apocalypse after NFP, 67% chance. That's the expected move. Like that is the one standard deviation move. And so best of luck to you and yours, but all I can say is this is not good. And so Griffin Jones in the house. We had a little extra time for that one today, so that was kind of fun. Griffin Jones, Dr. Jim, the unofficial strength and conditioning coach for the Knicks. No, definitely not. I can do some dad bod coaching these days, though. We can do a little dad bod deal. Brian Rackerton is here. Dr. Jim, been having some luck with both the 0 DT and the 7 DT put spreads. Put spreads and Jade Lizards. And so, yeah, that's interesting. So you mean short put spreads, I'm assuming, right? I'm assuming you mean short put spreads. So that's really, I drank the water a little too quickly there. So that is interesting to me because in a 0 DT world, I'm not usually a huge fan of selling premium. I'm not usually a huge fan of being on the short side of the contract or the short side of the strategy because you are collecting theta, you are playing time, and you do have, the probabilities in your favor to some degree, but there's so little time. Like a lot of times you're selling these things in the morning, of course, and playing for the end of the day. That's only one day. That's only 1 day's worth of theta. That's only 1 day's worth of extrinsic value. And so oftentimes you're still pretty close to where the stock is right now, unless you go really far away. And now there's not really a lot of economic significance. So of course there's a lot of, gimmies and gotchas. There's obviously pros and cons that you need to consider when it comes to, deciding what strikes make the most sense. But generally speaking, when it comes to selling premium, I'm far more interested in doing something that has more beef to it, that has more days in the mix, whether it's 35, 45, 55, probably somewhere kind of within, 35 to 55. I mean, obviously 45 is kind of the sweet spot, but you could go a little higher than that if you want to have a little bit more credit and maybe have things move a little bit more slowly. You could go a little bit lower than that if you want to move a little bit faster and kind of get, into the meatier part of the decay curve a bit more quickly. That's all fine and dandy. I mean, 45 is the mid price or the midpoint makes a lot of sense, but because there isn't a lot of beef, there isn't a lot of juice in the orange, man, I don't know. Like selling premium in a 0 DT world, it doesn't make a ton of sense to me. But walk me through your thoughts, man. I'd love to hear them. And the algo is dying to know what your thoughts are on that. I like 0 DTs for like taking shots. I mean, we do that a lot with expecting move butterflies and things like that. Let me know kind of what you're thinking there, though. So Paul Heyman is in the house. What is up, Paul Heyman? I sold one June 5th, which is this Friday, Micron 625 put for 31 cents. Paul, man. One bonefish dinner for this Friday night. I mean, you got it, man. You got one BEU plus tip. So you are going to secure one bonefish equivalent unit plus the tip. And so that's a nice trade, my friend. And by nice, I mean, don't do that again. Right? Because because when Micron's down $300 one day, like that trade is going to absolutely blow up. Now, I understand this time is different. It's never going back down. It's not going to happen. Like, Jim, stop raining on my parade. Like, Jim, take your wet blanket and throw it in the washing machine, man. You don't need to bring that stuff around me. Like, I understand that. But, man, I'm looking out for you, Paul. Now, again, you're the one at Bonefish. You're going to be the one at Bonefish, right? Where am I going to be? I'm not going to be at Bonefish. Because, I mean, my Micron trade is hemorrhaging cash. And so we are doing some inverse BEUs here on my show. So good trade out of you, but be careful with that, my friend. Be careful. Dracos in the house. What's up there, Dracos? Helping the algo, man. I appreciate you so much. BBB5 says some earnings. We had Palo Alto Alta, man, and then GTLB. What is GTLB? What is GTLB? I want to say GitLab, but I don't think that's right. I don't think that's right at all. That I'm just kind of phonetically working through the actual characters on the screen. I don't think that's right at all. But Palo Alto, I have no thoughts on Palo Alto, but obviously your boy is going to be mega. We don't even have the platform, and here, I'm going to help you guys out. Here you go. This is it. So you guys wanted earnings trades? Here you go. Guys, it can't possibly be more obvious, right? Alta, lettuce that you see on the screen. How could I possibly not be mega bullish on Alta? They got everything your boy needs. It's a one-stop shop, right? And so I am super duper bullish on Alta. So load up your puts, load up your short call spreads. You guys should be fine playing that thing to the downside. But I would absolutely play Alta to the upside, 1,000,000%. Ranch is in the house. What's up there, Ranch? Jason is here. Yep, Griffin Jones. The K wasn't even silent back then when he started his fandom. That's correct, right? I was on the board that made the change over to the Knicks from obviously the Knickerbockers. So Vicky Zags is here. Seriously, when are we pricing treasuries in NASDAQ futures? Isn't it time because they're that risk-free? I know, man. It does feel like we should be doing that. It does kind of feel like when you go to like the U.S. Treasury website, like you guys have, I'm sure a number of you guys have done this. If you haven't done this, here's some free little tip for you today. You can do this. You can buy U.S. T-bills like straight from the government. There's no commission. There's no fee even. You just sync it up to your bank account and then you can buy U.S. T-bills. Like I think they come straight from like Mar-a-Lago. Like I think they come straight from Trump's actual personal address, which is kind of cool. Or maybe kind of not. Depends on which side of the aisle you might be on. And so, what we need to start doing though is like when you go to the U.S. government website to buy a T-bill, there should be like a pop-up box. You could say, I want to buy $10,000 worth of T-bills. There should be a pop-up box that just says, are you sure? And then you're like, yes, I'm sure. And then a second pop-up box that says, why don't you consider a long NASDAQ future? Like I know the U.S. T-bill looks good, but have you considered some MNQ? Because this actually could be a better fit for you given its also risk-free nature. And so I'm with you there, Viggy Zags. I'm with you there 100%. Brian Dowdy's back. Sam L is here. Doc, since you called the bubble, I bought an SPY 700 put for the December 26th. I'm bleeding hard while I'm blaming the bloop analysis and the fade doc strategy. So you bought an SPY 700 put for December? So a long-term put for the end of the year? Nah, man, you'll be fine. I would not worry about that at all. And by not worry about it, I mean, I'd keep an eye on it on a pretty regular basis. And so Superstar is here. Apple new all-time high today. Of course, why would it not be? We going to Pluto, baby. Yes, the artist formerly known as one of the planets. Like right now, didn't Pluto get demoted? Didn't Pluto get, I mean, I know it got downgraded, but what did it get downgraded to? Like, what's the process like that, I wonder? Like when you go from because obviously you're a planet, right? I mean, I'm obviously speaking as an ignorant layperson here, but that's the king of the jungle, right? I mean, maybe your black holes are higher. Maybe your galaxies are higher. I don't know. But when I think about it, just as a peddly little earthling, the planets are kind of the king of the jungle. So when you come off that throne, when you get demoted off that seat, now you become like a dwarf star? Is that kind of the process? I don't know, man. But Apple's going somewhere. Hopefully it's not to Pluto. I wouldn't want to go to Pluto. And so since it's not even a planet anymore. But Brian Dowdy, yes. How is the P&L year to date doing? Yeah, I think we're down a couple $1,000. But remind me tomorrow. We'll show it. I got no problem with that. Just don't tell anybody. So Stan Lucian, tell us a good story about a boss at Tasty Live. I need one today. Stan Lucian. Well, I mean, one thing that's pretty funny is, so it's different now because, you know, obviously we're underneath IG. So everything is a lot different now in terms of like the hierarchy and like the vertical nature of things. But like when I started at Tasty, so this was back in 2016, you know, obviously, I mean, the heads of the company were Tom and Christy. And I reported to Christy, and Christy was great. And so I reported to Christy, and so I mostly worked with her in terms of like, you know, like boss type things. But what was awesome was, I mean, we all had so much autonomy, and we still do. But just thinking back to like back then, we all had so much autonomy with like our content creation and like all those kinds of things, and it was great. It's always been, I mean, that has not changed at all. But what's funny is in this process, at some point in the process, the reason why I'm bringing all this up, at some point in this process, there must have been some kind of mistake in the system because it actually showed up in the system that I reported to Tony Batista. Nobody should be reporting to Tony Batista, right? Nobody should be underneath Tony Batista. Right? And so I saw that in the system. I'm like, that has to be a mistake. And then like a week later, I didn't even say anything. It just corrected itself. And then obviously Beth became my boss and who I report to. And Beth is amazing. I mean, she's absolutely terrific. But it was just funny that one day I looked up and I'm like, wait a minute. I'm going to have to do my annual report with Tony Batista? I mean, well, at least we get to do it at the Olive Garden. So I guess that's a pro. That's a gimme. But other than that, I don't know about this, man. I mean, it is unlimited breadsticks. And that tour of Italy, man, y'all been sleeping on the tour of Italy for decades now, and you guys know it's solid. And so Stan Lucian, hopefully that helps a little bit. But eMedia, oh yes, any interest in Alta? I'm bullish. Palo Alto, no thoughts. GitLab, never heard of them. And so Griffin Jones, trade idea, NQ for the micro version. Yep, sell a 45 TT short put, the 27,750 strike, 12 delta for 161.50. 36.67 collected for $27,000 in buying power. I mean, you know I love the options on futures. Like, you know I love that. Whether it's a micro, whether it's a mini, it obviously depends on account size, depends on experience level, depends on, you know, what kind of gradient of Shooter McGavin you might be. And so that all obviously makes sense. But you know I love that idea, Griffin. Remind me tomorrow. We already have an MNQ trade, and I was going to do something. I was actually going to turn my in-the-money short call into a bit of a covered put. Well, actually, I shouldn't say that. I guess that's what it is. I was going to turn my in the money short call into kind of, you know, not obviously a covered call because that would be to the upside, but a little bit of a covered put because this is kind of like having a static short position. And so, but we'll have to take a look at that tomorrow. Biggie Zags, the P&L open rolls will get you. They most certainly will. Debbie J is here. What is up there, Debbie J? Man, I appreciate you, Debbie J. Let's see here. Michael Ellison, surely a down day is coming along soon. Not allowed, man. Not allowed. Again, it's not my, I mean, hey, man, I don't make the rules, right? I'm just giving you the messages. I'm just relaying information. The internet has reliably informed me we can't go down again. It cannot happen. The Fed won't let it happen. The administration won't let it happen. The algos won't let it happen. Nobody's letting it happen. So we're not going down again. So again, I mean, your next 3 ticks in the NASDAQ, I'm looking at it right now in a frozen type of way. 30,600. Your next tick is 30,900. Your next tick is 31.2, and then it's 24.8. Those are your next 3 ticks in the NASDAQ. Again, I'm just giving you guys information. And so let's see. Jason, even TK covered that one. Which one? If TK covered it, I know it was probably pretty solid. Federica is in the house. Federica, am I saying that right? Hello, Dr. Jim from Milan. Man, Federica, what is going on there, Federica? I appreciate you so very much. I hope you're still here. I'm sure you put that comment in a while ago, but we're getting through a lot more today. So this has been kind of fun as a bit of a change of pace, honestly. But thank you for watching all the way from Milan, man. You guys are my people. And I studied abroad in Nice, France in 2003. And we made it over to Italy, I think maybe just once, maybe twice. It was either once or twice. I never made it to Milan. Wait, did I go to Milan? I think maybe I did. I went to Rome and I went to Florence and we went to a third place. It may have been Milan. I didn't go to Venice. I wanted to go to Venice, but I ran out of money. So I was running out of money. I was like, well, I also kind of want to get home to like the United States. And so I couldn't go to Venice because I didn't have any money left. But I think I maybe did make it over to Milan. which makes sense because when you look at a Dr. Jim, like if you didn't know anything about me and you had to use one word to describe what you see on screen, what would you say? You would say Milan. I mean, it's obvious. I mean, that is the most obvious choice ever. So, Federica, thank you for being here. I appreciate you. Superstar, crypto is deader than disco. Man, I don't know about that. That's when they get you, though. That's when you got to load up, man. You got to load up on everything. You got to get your Bitcoin. You got to get your Batcoin. Obviously, got to have a little Fartcoin just to diversify your exposure across the board. And there you go. So Superstar, all a lie. 99% of people born poor or middle class stay poor or middle class. That might be true. That sounds like a little bit of a grandiose statistic, but it could be true. Let's see. Jared Kramer. Oh, you guys are telling me about the market. I'm living vicariously through you guys. Jared Kramer says the market's actually going down now. Now, he put that comment in there 30 minutes ago, so who knows what's happening. Now, Dexter is here. What is up there, Dexter? Hey, Dr. Jim, I just finished watching Core Strategies. Best ever. Yeah, I think I did that with Kai, right? In fact, I'm pretty sure I did. You talked about loving diagonals a lot. Is this a good time to put diagonals in the indexes with the VIX so low and all-time highs? It is. It is. And when it comes to defined risk strategies, I do really like diagonals. It's not one of my favorite strategies if you include like short premium strategies and high volatility, because all those are going to come ahead of the diagonal. But I do like the diagonal. And I mean, that out of the money deal we just did in Zscaler was pretty awesome indeed. And so, yes, with volatility low, if you want to take a directional shot right now, diagonals can be a great way to do that because a diagonal basically combines a vertical spread and a calendar spread. So you get the directional element of the vertical spread, you get the time element of the calendar spread. You put them together, just sandwich those guys right next to each other, and you have a diagonal spread. And so it really leaves you with a lot of ways to be right on the strategy and make money. If you get the direction of move that you want, you make money. If time just goes by, you make money because you have the multiple expiration cycles and all that theta working for you in that front month. And so, but thank you there, Dexter. I hope that helps. And thanks for checking out Core Strategies. Man, that was a few years ago now, I think, that Kai and I did that series. And so thanks for going back into the Wayback Machine there. Sam Ellis here, up and down. Oh, yeah, you guys, when I was asking you guys if I was still live, thank you guys for coming up clutch there because I wasn't sure. And so, Jared Kramer, the market's not doing anything, so the TT platform went to sleep. That's true. I mean, better now than on Friday. Because, again, what's coming on down the chutes on Friday? All I can say is it's not good. It is not good at all. So hopefully we are firing on all cylinders then. Sam L, the piano open rolls won't let you go. They won't. They absolutely won't. BBB5 says, get your intern. Yeah, I think she's in the house right now doing school. And so it's so funny because we homeschool our kids. And I've got Penelope, who's 11. Got Eli, who's 9. And then Amelia, obviously my intern, my trading assistant. She's only 6. And so she's in kindergarten or whatever. I don't know, 6-year-olds or what? What are they? 9th grade? I don't know. Whatever they got going on in there. But it's a madhouse, man. Like I try to stay out. I mean, I'm out here a lot anyway because there's so much work to do. But even still, I'm like, man, I don't want to go in there. And when I do go in there, I don't make eye contact with anybody because it is a circus in there. It is total chaos in there. Like it's crazy. Like out here, it's just me and you guys. It's quiet. It's really nice and cool. I got my AC unit on. I got this, that, the other thing. Got my water. Got whatever I need. Got my Ghost, obviously, not too far off. But man, I go in there. Man, it is no eye contact with anybody. I just hold my breath. I try to sneak in like through the window so nobody sees me. Because if they see me, I get roped into it. Man, no, thank you. And so, oh, Griffin. Oh, there's a forced upgrade in the platform. Maybe that's what it was. Okay, well maybe I've got to upgrade my deal, and then that will be that. And so let's see. Amero Amigo is here. What's going on there, Amero Amigo? Let's see. Debbie J closed the Starbucks call today. Anything else to do in Starbucks? No, not for me right now. For right now, Starbucks is still at like 96, 97. I'm just gonna sit tight. And I'm going to wait for it to pop back over 100. If it pops back up over 100, maybe we'll sell another call against it. But for right now, I'm just going to hold the naked long shares, which again, it's really nice when you have an investment style covered call, when you do some calls around the edges or here and there or all the time, whatever, but you take one off. I like the fact that I never feel a ton of urgency to like do something right away because I'm like, man, I would just have the shares anyway. Like I would just have the shares naked anyway. So this is essentially what I would have been doing from the beginning to begin with. So to do it now for, a week or a couple of weeks or a month or even longer than that is totally fine. And so Debbie J, I'm not going to do anything. I'm going to sit tight. And so, wow, somehow we made it to the end of the show. Man, I see you guys in the chat, man. Look at you guys. Death Sneeze is here. Man, Anthony is here. Anthony talking about bonefish on hold. That is correct. That is 100% correct. Brian Rackton, Vicky Zags is here. Man, you guys did some work. Look at Dominique here. Look at Bob Love is here. Man, Clean Tigers is here. Man, I appreciate you guys so very much. Look at Bruxy is here. Invierte is here. Man, look at you guys. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hello, everybody. What day is it? Tuesday. Oh, yes. Happy Tuesday to you. Tim Knight here. Well, Bitcoin. Bitcoin's worked out great, hasn't it? I've been talking about that, well, forever, but particularly focusing on it from about May 11, when it was in the mid 80,000s, because I noticed the Fibonacci's were configured in such a way that it was looking like a really promising trade. It took a couple of days to get itself into gear. But that was $16,000 ago. And you know how many people have written me to thank me for that trade? Zero. And you know how many people should have written me? Zero. That's exactly the right response. I'm not here to give you ideas and to be thanked for it or yelled at for it. That's your problem. I'm here to show you what I perceive, what I believe based on market history, and doing this charting thing since 1987. And creating a couple of charting platforms and writing about charting for the past 30 years. So I'm not asking for thank yous, just like I'm not asking for you to say, thanks, Tim, for screwing this one up. No, the trades are yours and yours alone. So thank you for not writing me. That's good. And congratulations for those who have quietly made money on the Bitcoin trade. I'm glad it worked out. It has saved my hide recently. Because, as I've said many times, crypto and Bitcoin in particular is just about the only organic market left. I say that even with, because there's definitely politics around Bitcoin. You know, the whole Clarity Act thing, which they're still, I guess they're trying to ram through, et cetera. And Senator Lummis from Wyoming tweeting about it every 12 seconds. So it's not devoid of politics, but for whatever reason, I guess because the Fed's not directly manipulating it, Bitcoin is a good classic chartable creature, and it behaves as God intended. And like I said, it may take a day or two, but it does work out beautifully. So confession time, I have taken profits on that. I think it's far from bottoming. I don't know how long it'll take, but I can easily see going to 40,000. But what does Tom say? Don't sell into the hole. That's kind of what this feels like. And so I am taking profits on the short for now, which is risky because it just might keep falling. And if it does bounce, I'd love to get back into it in a big way around 71,000, something like that. It also has brought me the happy benefit of the crypto creeps not jumping on me because, listen, they say don't talk about politics and religion. Add crypto to that. These guys are weird. So you just don't want to, because they will trot out the same argument. Well, it's up 1 billion% since 2009. Oh, did you buy it at a penny? Congratulations. That's terrific. So anyway, enough of those weirdos. But anyway, congrats to those who made money on the Bitcoin short. Let's jump into the otherwise quite green market of ours. Chips and ships. This holds true. T-minus 8 days till SpaceX. Here is SOXL, the leveraged bullish instrument on semiconductors, and it's at a lifetime high. Today alone, up almost 16%. It has gone from around 40 to 260 in the span of a couple of months. Hundreds and hundreds of percent. And even though it's a leveraged instrument, really not too much of a drawdown on the way up here. So eye-popping stuff. Comically, going from chips to ships, here is Virgin Galactic. Remember this one? We closed the show with this one yesterday. This was the one where, and again, I don't know if it's true, but no one could figure out any other reason that this space tourism company that Chamath trotted out and was a complete disaster, like negative 99% plus loss, blasted higher over the past few days, hundreds of percent. And all anybody could guess was, I guess people will think they'll mistype SPCX and punch in SPCE, I suppose. And that made it a brief meme stock. It's down almost 40% right now. And that's even after yesterday being well below its own high yesterday. It got to around 9 yesterday, and it is at half that right now. And I am highly confident that in the month of June, you will have a 2-point-something price on this sucker again. So never, ever underestimate how dumb most people are. Okay, that's my life lesson. It's the first thing I taught my children before doing to others and all that. It's just like, don't underestimate just how dumb most people are. Just don't. And here we have Exhibit D, SPCE. So that was kind of amusing. Diamonds, DIA, a lifetime high. How about that? Okay, up it goes. I am up a little today, in spite of being all short. Bitcoin, as I suggested, did help. But I'm not touching the likes of Diamond because lifetime highs tend to beget more lifetime highs because everybody's a winner. You have no overhead supply. And it feeds on itself until it doesn't anymore. And we're going to see that writ large with SpaceX. It's going to be quite a sight. EEM, the emerging markets, they are doing just fine also. Thanks for asking. Up about 1%. And there's this whole series of gaps, price gaps over the past couple of months as we've trotted higher. And of aid to this is China FXI up over 3% today and blasting toward this pretty significant price gap that was on the heels of the that completely pointless summit that they had last month. As far as the cubes go, up, but more modestly, 0.36%. Lifetime high, of course. And as with SOXL, just a couple of days of selling here, but otherwise just day after day and month after month of green. I believe today It's the 9th day in a row the S&P will rise, which hasn't happened for years and years. And I think it's the eighth week in a row, something like that we've had a great. The poor bears, poor me. It can't catch a break. It is just up constantly. The only good news for the bears at all is that pricing is getting just insaner all the time. And if you can bear it, if you can stand it, if you can stomach it, then your entry prices just keep getting better. I wish they weren't this better. But there are opportunities out there under rocks here and there, although I'm certainly not saying that the stuff pushing lifetime highs every day is one of them. Here's SMH, which I guess in the lingo of today's may shaky my head, and that's appropriate here. This is the just straight up semiconductor fund, up 3.61%. And it is at a lifetime high, of course. Most items within that realm continue to push higher. The AI fever has definitely not broken. And if and when it does break, first they will make movies and books about it galore. I will happily write a book about it. But where will it start? Will it start from CEOs saying, this isn't helping that much, we're going to scale back? Will it come from a lack of consumer adoption? What have you? The fuse will be lit somewhere. Some of you have watched The Big Short, and you saw that just month after month they were all going crazy. Like, when is this thing going to break? And finally, a couple of big hedge funds blew up, and that was like the signal that, okay, this is starting to happen. And even when that signal came, it was a good 7 months before things really began to unravel. So it's not like you get a signal and you've got 12 seconds to act. If and when that happy day comes, you'll have months and months to act, I believe. So, but I'm always vigilant, waiting for it. Hasn't happened yet. Intel, amongst those semiconductors, is down. As I said yesterday, when it was also down, it is the only semiconductor I am short. I've got puts on this bad boy, October puts, and those are doing fine. And my target for this would be something like closing that price gap, but it is encouraging to short something in a sector where everything is raging higher except for this one freak over here. And so that's Intel, and I hope it continues to be so. Earnings came out in dribbles and drabbles. We're very much off cycle now, of course. Marvell, MRVL is one of them, blasting higher, about 30%, lifetime highs. There's those words again. This has gone from around 73 to almost 300 in the span of weeks. So this is eye-popping stuff. I'm glad I own a house in the Silicon Valley now, because I do not, with all this new money sloshing around from the stock wealth, it's going to be incredible what people will pay for houses. Between, Anthropic and OpenAI and even just stuff like Marvell, because they've got plenty of shareholders too, you're going to have that K-shaped economy is going to get very warped. Anyway, an unnecessary diversion there. Another earnings item coming out is Hewlett-Packard Enterprises, HPE. And this is, don't let the red bar fool you. It's up big. It's up almost 20%. Of course, the red bar only means it opened really strong and has sold off from some of that strength. So another record high there. Some of the ones that were raging in recent days are starting to look a little tired for the moment. IBM is up again, but it's basically just churning around the same range it was yesterday. And Dell, which I've got, a bug up my bottom about, I've decided early today to short this sucker, and we'll see if that works out. I've got a profit on it so far, but this thing's been a monster. But yeah, I'm short Dell. Not short IBM, but I'm short Dell. And it is very, very lofty, as you can plainly see. Let's get back to our buddy Bitcoin. Here is the inverse fund, which I talked about. And this is up 6.2% today alone, BITI. And it is beautiful pop higher. As I'm glancing at the Bitcoin chart here, I'm always worried. It's just my nature. And I'm thinking to myself, oh man, should I hold on to that Bitcoin short? Because we're at the lows of the day right now and the highs of the day of BITI. So that's doing very well. And Michael Saylor's strategy is down 10% plus. This is down, by my last calculation, about 76% since October. And I think that's right. No, that's not right. Bitcoin peaked in October. Saylor's company, I'm like the Rain Man of ticker symbols and stock data, so I know this stuff. Saylor's company peaked on, I want to say, November 25th, 2024. I think so. And it was like 553.84, and it was on the heels of the election. And of course, the supposition was, golly gee whiz, we have our crypto president now. Isn't that swell? And so yeah, it's down 76% from those levels. And we are trading on strategy the same price that we were trading in, I think, January 2000. So try to find me an asset 26 years ago, which is the same price. I don't know. Bread flour, maybe? I'm not sure. SBIT, incidentally, for the truly insane among us, is the leveraged ultra short on Bitcoin, and that is up 12.7%. I have 100 seconds left. Okay. I'm long Palladium. I have not been long Palladium since like Thanksgiving or something like that, way back last year. I'm going to give this a go, and fingers crossed. I buy next to nothing. This is my only long, but we'll see how that goes. So feeling pretty good about Palladium. We'll see if I get egg on my face on that or not. NUGT is a based on metals miners. Long term, this looks good too. Nice base there. And, I've been kind of not very nice to precious metals in recent weeks and months, but I'm starting to kind of turn the corner right now about that. It's starting to feel maybe like we got a bottom here. And here's XME, which is having a good day too, up 4.21%. Gee willikers, I'm just about out of time here. Well, sorry everybody. I've got like 8 symbols left. I'm just gonna jump to TLT, bang, like so, and say that I roll. I guess you fancy options people say rolled forward or something like that. But I dumped my September 30 TLT options, and I'm in November now. I want to give myself more time. Also, there's an ugly loss on the screen that bothered me. So keep the dream alive, like Tom used to say. So I'm in November's now. TLT $86 puts. And it still looks like a good chunk of overhead supply. So that's, I've always talked about anchor positions of Bitcoin and bonds. Bitcoin I've taken profits on, and shame on me because we're at new lows now for the day. But the anchor position of bonds is still there. So that is it. I'll see you with more lifetime highs tomorrow. And thanks for coming by. Good night.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better. In fact, I've never seen anything like it in any corporation in the United States.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Let's get our shoes on. I'm done with all your fussing. This body totally bussin'.
Hello, everybody, and welcome to a very special edition of Last Call. It's your lucky day. Liz is busy, so Tony is joining me today. Welcome, Tony.
Thank you for having me. I appreciate it, Jenny. It's always a pleasure to be with you on the show.
You know what? I'm thrilled to have you on because I haven't seen you in a while, and I definitely have not been on air with you in a while. It was I was telling our viewers today, it was a nice surprise to receive a couple texts from you this weekend.
Well, yeah, I saw that you were selling your boat, and as a fellow boater, I figured let me find out what the scoop is here. So that's why I texted you. Any reason to text you is a good reason. So well, I just use it as an excuse.
I was hoping that you possibly had a buyer for me. If you have a buyer, it's a good deal. It's a beautiful boat. It's a good deal, and It's funny. I do not. Usually, what they say about boats. The happiest day is when you buy it. The second happiest day, or the most happiest day, is when you sell it. So I'm waiting for you to be really happy. So well, I thought since you bought a boat for Vinny in Florida, you could buy this boat for Nikki in Chicago.
We talked about it. Unfortunately, it was just something that it can't be. He can't be the number one son always. You know what I mean? So he has to. Hardship is good. Like anytime you have hardship, and every knock is a boost. It makes you better. So he's okay. He's going to be boatless.
He's going to be boatless. Well, hopefully, cross my fingers soon. I'll be boatless. My breaking point. just a week ago, Memorial Day weekend, I went out to the dock, went to get the boat ready. There was goose poop all over the dock, the bird poop all over the boat, spider webs all over the pier, and I reached my breaking point. Like, it's not the lifestyle I'm looking for.
I understand. You're a kept woman. It's not easy for kept women to play with boats. But I have people that clean the boats and do all that stuff for me. So
I don't have that.
I'll put you in touch with my guy.
So this is last call.
Yes. Let's talk markets, because we do have a. Isn't it crazy? We haven't spoken together for a while. I haven't done a show together. So I have a couple questions for you. Sure. How would you categorize what's going on in the market today?
So Tony, it's funny because I think something looks very weird, very off, reminds me of like the .com bubble, and I'm being very cautious, and I'm kind of waiting for the floor to drop. Sure. But the market just keeps going up irrationally. It's insane. I texted Tom a couple weeks ago, and I was like, "What the heck? Like, what?"
Oh, don't text him. He's short MU.
Oh, I know I know. I said to Liz, like, it's probably.
Don't. I don't take his call anymore because now he's asking for loans. Like, I'm not doing that. I'm not doing that.
Yeah, I said to Liz, I said, it's probably better he's not on air here, or he would have taken.
100%. We saved thousands upon thousands of customers. Matter of fact, I told him I'd rather have him as a friend than as somebody who owes me money. So I don't take his calls anymore.
Okay, so I feel like it's very, very scary looking to me. What do you think?
You see, I don't see it. But I understand your point of view, and of course, I'm always looking in the rearview mirror to see what you see. I always say I'm going to miss the top and I'm going to miss the bottom kind of thing. But right now, I don't see any signs. I mean, I would love to see a 3%, 4%, 5% pullback, and I think that would be normal. And I mean, I don't know. After today, I think this is the 9th straight day for the S&P. I think it'll be a record. I don't think we've ever done that before. Anyway, it's just, to me, it's just crazy. But it feels like summer. It feels like summer rally on top of a rally. Like I don't know. Gold isn't percolating. Bonds are in good shape. Volatility is anemic, and I know when volatility is low, you can get. And /VX is trading, 1780 today, down another 30 cents or so. When volatility is low, you can get that surprise, spike in volatility, turn in the overall market. I just don't see it right now. So like I said, I'm going to miss the top turn and hopefully benefit from there.
So I don't think it's not everything. Here, we could jump in the platform. Sure. We could jump in the platform. Like, here's an example of what this is an example of what I'm talking about. Like, I don't know if you can see the platform right here. Yeah. So I pulled up Marvell, up $66 today on the heels of being up $30 the day before, $25 the day before. And you have so many of these products that are just insane, where how could we have been so wrong? How could valuations have been so off? How could, like you mentioned Micron, how could the world have had it so wrong when nobody wanted it at 75 and you can't get enough of it at 1,000? Like, those don't make sense to me.
And you don't have to stop there. I mean, AVGO is up $17. Goldman Sachs, Apple's up $8. It's a $4.5 trillion, $5 trillion, $12 trillion company. It's up $8 today. One of the most widely traded products in the world. I mean, these are crazy moves, and you've got those. The silly stocks like the VRTs of the world that are up $10. You mentioned Micron up 27, Marvell up $67. MP, moves around $10 a day. It's a $50 stock. I mean, I agree with you. There is some shenanigans going on, and this is why on the show with Nick and I, we talk about, listen, you want to get short these products? We understand. The only reason to get short here on any product is price, right? I mean, you can't give me a volatility percolating. You can't give me bonds selling off, which we had before. Nobody even cares about oil anymore. We don't even talk about oil. It's up, happens to be up today about $1.30 or so, trading at $93. But even that doesn't spook the market. Like yesterday when we had oil percolating and bonds going lower, you had almost like the perfect storm. Nothing happened with the market. Volatility never did anything. It doesn't matter. It seems to be like water on a duck's back.
And I'm not expecting a big pullback in the SPY. I just think there's got to be some kind of rotation, out of these.
Well, let's think about what's the worst thing that can happen for your scenario, which I think is valid and probably. I don't want to call you public because the last co-host that you had to answer to, Tom, might have called you public in the past, and I don't want to be that guy. Like I don't want to play that role. But the public's got to think this can't end like this is 2000 all over again. I think that's a popular thing to say about this market, and time will tell whether
we get those emails. We'll get those emails every day, right? Every day I'm getting emails saying like this doesn't seem right, and.
But what could be the worst thing? What could be the worst thing for that scenario? Because that's usually what happens when the ship is crowded or the play is crowded or what could be the worst thing? A sideways market in these crazy stocks where they make these big moves. And Marvell makes a $70 move. It goes down $25 and then sits, for the rest of the summer. That would be the worst thing that can happen to that scenario. Not the worst thing that can happen to the market, but to that thinking scenario. And that's exactly what I think. I think we kind of go sideways. We don't take it back.
Well, I wish there would be some type of rotation out of some of these products into some others. People laugh at me. People laugh at me. If you look, Tony, at my account, I've got a lot of and people might laugh, but I've got a lot of things like, here's ConAgra. It hasn't been this low lifetime lows.
Wait. So you're acting like a value investor, right?
Yes.
You want to buy low, sell high kind of thing. I completely get that. But why on God's green earth would you be looking for a $3 move in ConAgra when you're probably wrong by $8 already? Why would you be looking for a $3 move in ConAgra when you can get $8 in NVIDIA?
So if I'm looking at long positions, I've got long positions in some of these higher dividend stocks that are so beaten down.
Dividend stocks? I mean, seriously, is this your grandma?
So I'll get paid the dividend. If they go up, eventually they go up. And then in the other stocks, it's a high flyer.
That's your grandfather's market. That's not even your market. When you were a market maker on the floor of the CBOE, you weren't looking at dividend paying stocks.
I'm like a grandmother now. So in the high flyers.
I am a grandfather. I could say it. You can't say it.
All I do in the high flyers, and I just do these in the weeklies. All I'll do is I'll come out and I'll buy just to keep riding the wave. I'll buy a call spread and I'll go way down and sell a put or a put spread to pay for it. So to participate in these high flyer moves, I'm doing these little buy a call spread, sell a put, or buy a call spread, sell a put spread.
It's a great play, and I like the shorter term play. And there's a lot of liquidity in all these shorter term plays too.
But I have a lot of these. I have a lot of the little beaten down bottom of their. Hey, you know what?
I don't mind it.
When Intel was 19, nobody wanted it. When Micron was 75, no one wanted it. And these are the types of stocks I'm buying now. So one day when they're tripled, quadrupled, 100 times, I'll say, nobody wanted it when it was 20. In Intel, they couldn't give it away at 19.
Yeah, and that was just 8 months ago or less. I mean, so it's not like you're talking about a long time. So yeah, I get it. But you're never going to get another. I mean, I shouldn't say you're never going to get it. It'll be hard pressed to get another type of administration like we have today that's so friendly to the market. And I think you have to make hay when the sun is shining. And I think if we've done anything to help the public on our show, we've talked about not selling naked calls. So
you know what? Yeah, you're never.
You can't. You just in this environment, you just can't do it. You could do diagonal spreads. You can do vertical spreads like you're doing. I know you're doing bullish ones, but if you want to be bearish, you can do bearish ones. There's no problem with that. But you cannot sell naked calls. Here's Palo Alto Networks. I mean,
they have earnings today. I don't want to run out of time. We're going to take a look at earnings. They have earnings today. So when you open something up like this and you say, okay, they have earnings, and you look at this chart, what kind of earnings trade are you putting on?
Palo Alto Networks has expected move of close to $36 for the next 3 days. $10 expected move. It's got an IV rank of 105, right? So if I'm going to do something, I guess nothing ever goes down here in anything. So a J Lizard, what you just looked at, might be something that I would look at. It's basically like selling a further out of the money put.
Right, where you would sell this out of the money call spread. I'm going to turn it into collect something. So just a 250 wide, and then we need to put for about $2.
Yeah, something with defined risk. My son might do something like a June 18 option. He might look to buy that, at the money. Let's say the 300 strike or 310 strike, and sell something higher in the front month. That's going to give him some long delta, like selling a 320 or a 330 even.
And we like those diagonals. I do like those diagonals. And that's not bad, honestly. You've got the 300, 330, so $30 wide for $13. That's not bad.
Yeah, listen, if you hit it right, you make $1 to $1 almost. If you hit it a little bit, you make 50 cents for every dollar worth of risk that you have. It's not a bad. I think on these stocks, that's the way you have to play it. And if you don't like them, you want to play the contrarian role, which is nothing wrong with it. Only they've just been taking you out of the woodshed all year. I mean, if you want to play the contrarian role, you do the diagonal on the put side.
I don't know that anyone's doing well playing the contrarian role on the downside. And on our show, we're not. We're just trying to be careful and define our risk.
Yeah. I did I said, you know what? I don't have any naked options. Very few naked strangles in my portfolio. Yesterday, for my option trades today, I said, where would you go? If you had to do a strangle, what would be the parameters to your strangle? High IV rank, liquidity, right? Have you looked at Apple lately? Apple's got a nice IV rank. There's no stock that's, maybe besides NVIDIA on the option world, that has as much liquidity as Apple. You got a 44% IV rank. You've got a behemoth of a stock. How much is it going to move? It was down $4 or $5 yesterday. It's up $8 today, and volatility is expanding too. So,
Tony, they've got their big conference or convention or whatever going on.
It's at all-time highs. Yesterday they knew about the convention. It was down $4 or $5.
Wait, today we put on this
a little bit of long delta, but I can't absorb an $8 move. I've rolled up puts 2 strikes already.
The only thing I'm selling strangles in are, things like Walmart or if things go down on earning, if products go down.
Walmart? Are you kidding me? That's like an AI play. Yeah.
Someone just sent us a message because we do have a strangle in Walmart, and so that went down on earnings. We threw on a strangle in Walmart. I think Shop was down on earnings. We threw on a strangle. If something goes down on earnings instead of up, we'll throw on a strangle. And so I don't know. This market is crazy. We've been doing this a long time. I don't know if I've ever have you ever seen a market like this?
I mean, I guess not. I mean, because I don't think this is like the .com. So I would say not. But I've been saying that for 15 years on this show. I mean, the market's always giving you something that you didn't think you would see. Like I didn't think I would see $4 or $5 trillion companies in my day. And I didn't think I would see handfuls of them. Forget about one.
Right.
I didn't think, we'd see 7,600, by the middle of the year when we were 6,600 not too long ago. I mean, this is,
what do you think
it doesn't matter what I think.
What do you think of the people who say, you know what, I'm just going to trade SPX. I'm just going to trade the 0 days. I'm just going to trade.
I have no problem with it.
The underlyings are getting too crazy. The valuations
I have no problem with it.
I'm just going to trade SPX.
I have no problem with it. And it's been all our research has supported it. It's been a nice trade. I like the people who are doing kind of short-term covered calls because it's working. I mean, I'm not reinventing the wheel here. It's working. As a matter of fact, at Tasty Trade, I've been trying to, I don't have any pull there anymore. I'm on the Tasty Live media side, so they don't listen to me anymore. But I've been trying to implement that every time a customer calls up to ask a question, the trade desk automatically sells a put for them because it's a money-making strategy. Like, it's just, why ask questions when all you have to do is sell puts in something? So they'll just sell a 0-day put for you. You call up, they sell a 0-day put for you. I know it's hard to do, but they'll just do it for you automatically.
I don't know what to say, Tony, but at some point in time.
No, I'm kidding. But that should be.
That's like when we were on the road and we wanted to give out XRT strangles.
Remember?
Yeah. And you get a strangle, and you get a strangle, and you get a strangle. All right. Before we run out of time, because it's
sure.
I'm going to put on some earnings trades. So I'm going to put on some earnings trades. We have PANW, and I have a hard time pushing the button on that diagonal because
it's expensive.
Because it's a little expensive. So let's do a few cheaper ones. So GTLB, if we go to GTLB, I think that's a little more our speed. GTLB only $31. And if I do the same trade that Nikki likes to do, we like to do them too.
Oh my God, we're starting to act like Nikki. Do you know how bad this is for your ego? I mean,
we will 100% give credit to Nikki for, he was a big fan of these diagonals or the crab trade. We actually like the diagonals more than the crab because, so if I'm going to go as far as I can in the 3-day. The furthest option they have is the 37 and sell that call. And then I bought the 10-day 32. So I've got $5 wide and I'm paying $1.90.
Yeah, you got $1.90 worth of risk, got a little bit of time. You got some upside potential. I like it.
All right, so I'm going to ship this. I'm going to pay a couple pennies up to get filled. Look at that, filled. There we go.
That's easy.
GitLab.
Ding.
That's trade number 1. Earnings trade number 2. Medtronic. Okay, Medtronic.
Yeah.
You make a noise like you're going to hate it, but what is it? MDT, Medtronic. Yeah. This is one of those that doesn't look like anything else. This is one of those that I'll say, hey, I'll sell some puts here. It's how much lower can it go?
Oof.
You don't like it?
I mean, where are you going to do these, in June or July? Or are you going to go in the 3-day? You got a $3.50 expected move. I mean, what are you going to sell? You can't do the 3-day 71 put for 80 cents, 90 cents. I mean,
I think you go to like the 70 put in the 16-day for $1.
Okay.
Or do you think, 70 put for $1 in the 16-day?
Okay.
That's not bad. That's not bad. Tony, I met someone, gosh, I was at a barbecue and some guy came up to me. He's like, hey, you're Jenny from the Liz and Jenny show. I watch your show. Now this is not a trade recommendation. He has like no positions. Every week he picks 5 different products and he sells he makes like $40,000 a week just selling weekly puts in 5 products a week. So every week he's just in.
He also has a boat for sale.
so every week he sells like 40 grand in premium in short puts, just in weeklies, 5 products. Then by the end of the week, whatever they are, they're all gone.
Sounds like you should have a new service.
Win or lose, he closes them all. And then the next week he picks 5 different products to sell puts in.
Well, let me say this. I mean, the breadth hasn't been that good. Well, I mean, I know it's only Tuesday, but it hasn't been good for the last couple of trading days. So even though we're at all-time highs and making new highs, most stocks are lower than higher. It's just that the higher ones have been making much larger moves. So I don't know, unless he's completely, gifted like my son, that's a viable strategy. But, I'll listen to anybody. Okay, sure.
I was looking at how many he has to sell to really add up to 40 grand. It's a heck of a lot.
Quite a number.
It's quite a number.
It's quite a number in buying power too.
Oh yeah. I asked him how big his account was. He said 1.5 million.
It's still not enough.
Right, for that much.
It's not enough.
Right, that's what I thought.
Yeah, and that's because when people talk to people in the business, sometimes the fabrication is it's like a fish story. Okay, we'll go back to the boats. I caught a fish. It was this big. It wasn't that big, kind of thing. You know what I'm saying? You've been disappointed before
So,
with your fish.
Yeah. So I don't know. I mean,
Even S&Ps 900,000 have traded. Is that a lot? A little? Good? That's what I mean. It's summer. At all-time highs, 900,000 even the S&Ps. It's summer. I know it doesn't feel like it in Chicago, but it's summer.
Where are you
get a little bit of volatility and then nothing.
Hey, Tony, what are you looking at that you said?
/ES.
Oh, right here. Just
volume.
So
912.
What I want to look at is take a look. So what I want to see, I'm going to go to SPX and I'm going to go to the 0 day. And I want to look at volume. Okay, here I've got volume on the 0 day. So take a look at this volume. And I think after PDT rule is gone on Thursday, I think this volume is going to explode.
Well, not according to CBOE stock.
I bought it. I bought it today. Today, I bought. Well, no, I mean just today.
I'm along a little too.
I said with the PDT ending, I think SIBO stock is going to explode. I bought some today.
It's a pretty public. Again, I don't want to say nasty things, calling you public and stuff like that. But yeah, this to me is something. I'm in the same boat as you. I bought some today.
So I was at this SIBO. We finished our show, and I was looking at the SIBO stock and talking to the guys about how once this PDT rule ends, I think the volume of those 0 days is really going to increase. And then I thought, well,
I know, but how many accounts under $25,000? And I know you can do $2,000 strategies by defining your risk, which is the way you should be doing it in SPX. But how many of those are really going to go into SPX? I don't know about that.
I think they're like Liz's kid, her 18-year-old son. He's trading 0 days every day. His friends, 0 days every day. These kids.
Okay, so that's more scary to me than you thinking that it's 2000.com bubble. Okay, so when Liz, and let me guess, Liz kid's selling puts, right? Because it's just so easy.
Well, he's selling SPX put spreads.
Yeah, of course. Put spread. That's what I meant. SPX. Right, yeah. That's why I want to get that implemented at Tasty Trade. Every time you call, you just got filled. You want to stay on the phone? You're going to get another put. You're going to get another short put. You got another put spread. 0 day.
Oh my gosh. Okay. So here, I'm going to, in SIBO, here's a trade idea for you. In SIBO, all I did, and it's tricky now because we're in between strikes. I did a zebra where I bought 2, sold 1.
You just told me you don't like my kid's zebra.
No, so I did the 0 extrinsic back ratio. Bought 2, sold 1, replicates 1,000 shares or 100 shares. If you buy 100 shares, it's 27,000 notional, and it's using a lot of buying power. Zebra somewhere you can get it
$3,100 or something.
Yeah, you can get it somewhere between $2,000, $3,000 and control 100 shares of SIBO. PDT ends. I'm hoping that the SIBO does well with that.
It's going to take a little time. This is going to be a long-term hold. Not quite as much as your ConAgra, but it's going to be a long-term hold.
You laugh at my ConAgra. Just wait. One day, Tony. One day.
One day. I will when I go by. What is ConAgra? I mean, that's not the pork roast, is it? No. I mean, is it fertilizer? What is it?
I think it's like almost half the grocery store. It's like
half the grocery store. When I buy something, when I buy a pork roast, I'm going to think of you. I'm helping Jenny.
But that was it. It's 3:00. What did we get in? 1 earnings trade?
Yes, we made it.
We got in 1 earnings trade today.
It's okay.
Get labs.
How about this? 70,000 futures traded in the 5 minutes or less that I talked to you about having 900,000 even the S&P's traded 9.8. So tell me the volume is still there without telling me the volume's still there. Volume's still there.
It's busy. And what do you think? Every day, do you get the report from Frank every day, like calls over puts?
I do.
How people are out there just buying calls.
Because it works.
I said to Liz, there's the old Microsoft millionaires. And now there's going to be the Marvell millionaires, all these, the Micron millionaires.
All I say is get yourself some. Who cares? It's irrational. I'll give you that too.
How do you get yourself some when the calls are so expensive? How are you getting yourself some?
Do the way we just did. Do a diagonal spread. Do any kind. Do the vertical spread that you're doing. Do whatever. Don't think. Just trade what's in front of you.
And I get it. But that, those are all very.
And accumulate the ConAgras of the world if you want to, too. I have no problem with that. I make fun of you because you're better looking than me and it's easy to do. But I mean, other than that, I have no problem with it.
I have teasing, but I have a lot of. How am I protecting myself in this market? Shifting to some things like that. So if the wheels fall off, I don't see those really.
How do you protect yourself in this market? By not thinking you know something.
But the best thing we ever did, best thing to ever help our trading was actually stop listening to other people and just do what you want to do.
That's correct.
Stop listening with what other people think.
That's correct.
Have your own opinion and do what you want to do.
Stick with the IB rank. Don't fight it. When markets change, and they will change, you'll adapt. Right now, go with the wind.
What did Chris say? The last time we had Chris on, he said, "All tech, no breaks."
I try not to regurgitate what Chris says. It makes my head hurt.
Tony, thanks for coming on.
Thank you for having me. I appreciate it. I really do. It was fun spending the half an hour with you.
Oh, if you change your mind and you want to buy my boat for Nikki, call me.
I'll give you a buzz.
I'll give you a deal. I'll call you.
I'll call you.
Real deal.
I'll call you. Goodbye for now.
Bye.
Bye, everyone.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And BrokerChooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Stocks meander, but it's a day of dispersion. It's still Tuesday, June 2nd, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes. Well, it's actually closer to 24 as we wind down this trading day. Matt, we can go right to the charts here because stocks are getting a little kick in the can here after hours to the upside. Palo Alto Networks with their earnings after hours beat EPS 85 cents versus 80 cents expected, 3.002 billion versus 2.94 bill on the revenue. That's 6% year over year higher in EPS, 31% higher year over year on the revenue there. Share prices are getting a little bit of a jump here, 10% or so after hours right now. It's helping the S&P 500, the NASDAQ give a little bit of a nudge to the upside here as we get into the close, 76.28.29. NASDAQ is up at 30,756, a clearer expression to fresh all-time highs here. Today, of course, was led by materials and mining, which is not really an of course, but it's still 4.2% higher. Copper had a pretty good session for what it's worth, up 1.8%. But it's the semiconductors, and semiconductors are not a futures product yet. We'll wait for compute demand to come on. But 4% higher today, Ilya, breakout to new highs and a little bit of an extension here out of that bull flag. So the usual suspects are on display here, but I'm sure as the bear would have it, let's hear the gripe about low volume. We did not get to 1 million contracts traded. I did the due diligence of making sure, okay, maybe it's just folks leaking over into U6 right now. No, it's not. No. It's just a very, very low volume day here in the summer trading season. Should we be surprised?
I don't think we should necessarily be surprised, especially if we don't really have anything meaningful on the news front. I think if you look really across markets today, it's a day of congestion. The US dollar isn't really going anywhere, barring a rally against the yen. There's not really anything in particular that's eye-catching about what's going on in crude oil. It's up another percent and some change, but hasn't really gone anywhere. Gold tried to rebound and has erased all of it. So bonds haven't really gone anywhere. So it's a quiet day all around. It's a day of congestion. So I don't think we should really be surprised. I also don't think we should interpret anything by the fact that the market is quiet on a quiet day. More interesting is that the market has been more responsive to things having to do with inflation and the war being a kind of vector for the inflation narrative at this point, but also the sense that the inflation narrative isn't just about that it's also about maybe overheating the economy. The manufacturing numbers that we got early at the start of the week, S&P Global and ISM, were very interesting indeed. Booming growth, but much more inflation for the growth and no real employment to show for it, which is a really interesting set. We've talked about this before of circumstances. We're going to get the services one tomorrow. That'll be another question about whether all of this inflation is spilling out of the AI boom into the broader economy. And that's probably the next time the markets are going to think about this very hard. For now, we're just kind of waiting to see.
Non-farm payrolls on Friday. I think maybe that deserves a quick mention.
Oh, sure.
The top catalyst of the week. I'm looking at what are the most important earnings over the next few days, Ilya.
CrowdStrike is there.
Broadcom's
there.
Broadcom's going to be the one that I'm paying most attention to. That had another 5% day today. It's closing up at new all-time highs. We had Hewlett Packard yesterday after hours. In terms of the hardware space, it closes up 19.5% today. IBM has another strong session. It's been going absolutely bonkers over the past 2 weeks. Here up from 220 now 329. A lot of these older legacy names right now are seemingly doing better as the server build out, thanks to Dell's earnings. It really
kind of a funny story, isn't it?
The space. Well, it's really interesting. I don't think the interview is up on our YouTube channel yet, but I had this conversation last week with a gentleman who, believe it or not, Ilya, he calls me in and I go, nice to meet you, Clem. Guy's Clem Chambers. I go,
I've spoken with Clem before.
One of his castles. Okay. And he's going on about how he was thinking about this whole AI stuff. He's like, oh yeah, well, the government can't build this stuff fast enough and can't get approvals fast enough. So they're probably going to go to their legacy hardware distributors that already have approval. And like, who do they trust more than anyone else? IBM. That was like, 5 days ago, and the share prices were at 240. Now it's up at 330. So the evolution around these names are just happening so fast, so quick. I can't believe I And this guy telling me this to my face, President Trump saying buy Dell, and what am I doing here? Am I buying enough? I didn't even buy enough semiconductors last week.
Yeah, I mean, I think this is really where things get really, really interesting. I mean, there was a chart that was out there earlier today showing ETF capital flows by sector, and there's everything, and then there's tech. And the tech is so far to the upper right of the chart that you can barely see the distinction between any of the others below it. They just kind of look like a little rainbow on the bottom. It's not even close. It's a one-way market. And so the question in my mind, when you look at that at the same time as you look at the ISM and the S&P Global PMI numbers we just talked about, where you do in fact see the demand. I mean, manufacturing sectors are booming, but why? They're booming because they're stockpiling inputs ahead of even higher prices, and prices are surging. We're back to peak COVID era for the speed of price growth in the ISM manufacturing numbers. Same thing for S&P Global. So we remember what happened the last time inflation was going this fast. The Fed had to hike aggressively, and we ended up with 2022 a down year. That was essentially overheating. It's not like the economy was super strong, like it was minting jobs left and right. That's really not what overheating is. If inflation is up because demand really is that strong, it won't be up for long. That's healthy. That's healthy growth. This is not that. This looks like the economy is really spinning the dynamo very, very quickly and isn't going very far.
Yeah, I'm looking
because
at
those
the
same ISM reports and PMI reports show you employment is shrinking.
I'm looking at the Federal Reserve's GSCPI, which is the Global Supply Chain Pressure Index here. The current reading is only 1.82. The readings themselves, I don't think matter all that much. Where's the index? Directionally, it's accelerating at the same rate that we saw in early 2020. The index pressure level is somewhere between where it was in February and March 2020. But after you get through that initial COVID bump, it's really what happened in 21 going into 22.
Yeah.
Where the supply chain pressures were building, and then ultimately when do inflation pressures peak? Well, just as a point of reference, December 21 is when the supply chain pressure index peaks, and we get the high print in CPI in June of 22. So we're still on the way up, about 6 months. So we're still on the way up right now, is the point.
Yeah.
And it's not like, unlike what happened in COVID here, you had this big, drop out in aggregate demand. Big drop out in aggregate demand, kind of counterbalancing the supply chain stress at the same time. Yeah. So the inflation doesn't appear in the first little bit of 2020. It really appears as you move past the initial shockwave of COVID itself.
Which would make sense. If you turn off global demand all at the same time, you're not going to have much of an inflationary impetus.
Yeah, and that does more or less bring me to oil for today, which is up another 1.5% here. Ilya, the headlines over the weekend make absolutely no sense. Who knows what's
right?
Who knows what's real anymore?
That's another fun part of kind of bubble-like behavior. The market is levitating on really low volume, and absolutely nothing makes any sense unless you look away from stock markets. And you go, okay, well, gold makes sense. Oil makes sense. Dollar makes sense somewhat.
Okay, so here's a fun fact about oil. Oil traders, when they start first trading, what is their initial first quote? When oil futures in their current iteration, as we know them, light sweet crude in 2007. Do you know what they first printed? $93. Today's price. Crude's gotten nowhere since 2007. That was from Mark McGlone over at Bloomberg Intelligence for today's trading trends, Ilya. But that also emphasizes a point. At $93, the American economy in 2026 deals with $93 barrel in oil differently than it did in 2007.
Of course.
And so this oscillation around these levels, it's not going to lead to significant pain in the short term. It might not derail the AI rally in the short term, but if we squeeze higher from here and get back above 100, that's where it becomes problematic. earnings right now have been so good. We have 97% of companies that have reported for the first quarter. The earnings growth rate for the S&P 500 is up to 28.6%, which I would remind people we came into the quarter expecting 12% growth rate with whispers of 19%. So it's just been astronomically good here, Elliot. Yeah. But I want to focus on the oil part of this right now. This bounce that we're seeing here, I'm trying to figure out the ordinal ranking of how countries reallocate money once the war ends, because they're going to have to refill SPRs. They might want to start shifting around their currency reserves. As we enter another week here, do we start this week off with the same unified opinion that oil has a floor underneath it and we should continue to trade around and operate around that thesis?
That's how I'm doing it. In my mind, 80 to 85 is basically the wartime bottom. And it doesn't look like oil wants to go basically below that. It seems like that's where kind of the wartime normal is, as far as the lower end of what that wartime normal is. And it seems like the wartime normal kind of average is about where we are currently. We can see if we were to look at a, let's call it a horizontal line right through the middle of this range, we can sort of see what about normal is. And we can get a little bit lower and we can get a little bit higher, but that's about normal. Where are we now? About normal. For the fact that the Strait of Hormuz is closed and we haven't exhausted all of global supply yet, although we're getting close as far as strategic reserves and inventories. I mean, they're precipitously sinking.
They really are. You can't ignore that here. They're getting dangerously low, getting frighteningly low. Just a quick check-in, by the way, on Palo Alto, which was trading higher after its earnings report. Ilya, still holding on to that near 10% gain, 331 right now. Broadcom and you mentioned before CrowdStrike are what appear after hours tomorrow. Broadly over the course of today, Ilya, I was just kind of tending my P's and Q's here. I wasn't changing any of my positioning whatsoever. I've been enjoying doing little dip buying things in baskets of stocks, including CRM at the end of last week when I was selling puts down below 165, 160 here. It's a nice chart set up, and you had been put on to IGV trading higher, and CRM hadn't joined the equation yet. Given the short covering that was going on, I figured there may be a way to latch on and join the chase without chasing the thing that had jumped up already 20% from the lows, 30% from the lows. So that seems to be working out well. I'd like my NVIDIA to be working a little bit better, although it has bounced from this zone around 210, 215, as one would hope, if that's the place where it should be bouncing from, given the former resistance turn support. And then, of course, semis, which was probably this was the easiest trade I've had so far in the past week, because buying dips in semiconductors has been working like, no one doing this is smart. Right. Don't confuse brains for what the market's doing and making you money.
But it is working.
It's still working for now.
It is working.
Another new
all-time high. Not argue with something that is working.
I'm trying not to look at the price on the y-axis.
Probably wise.
Ticker agnostic. Yes. Bottom left, top right. Buy high, sell higher. It's tough. But right now it's working, so I don't see a reason to tinker. The one thing that I'm happiest with, though, that is already working out here is this little split trade that I'm doing, kind of like a calendar spread here in the MCL Q6 versus the MCL Z6 contract. Long the MCL Q6, short the LQ Z6, basically saying that we're going to see a greater degree of backwardation moving forward. The spread between the two is right around $11 now. Like we had seen in previous months or episodes when the things got crazy, the front of the curve blew out. If we're going to start to look at, compounding supply chain issue, the Q6, U6 would blow out. Both would rally, but the Q would go up faster than the U. The Q would go up faster than other parts of the curve here, Ilya. And so I think one way to be one of these equity market bulls, right? Like if oil all of a sudden we wake up.
One of them.
Oh yeah, one of them who's being slightly more responsible than completely irresponsible. Right? The risk to this equity bubble in the short term, if it's a bubble, is that you get oil that goes vertical again, rates shoot up rapidly one morning overnight, and all of a sudden people start to panic in their stock position. And because it's such a crowded trade, it leads to a cascading effect. I would prefer to have long deltas in equities as a hedge rather than not trade the semiconductors or try to short them at this point in time and call it top. So I'm still very much
shorting
let's
them
run
and
this
calling
thing
a
up.
top here is impossible. I mean, you do that, you take your life into your own hands, as it were. A low liquidity melt up like this can rally in your face with absolutely no problem whatsoever, on no logic whatsoever. Whatever you may think needs to happen, the market doesn't have to do it.
Micron is up 50% since its low on May 26th. Did I just see that correctly? Micron's up 50%.
You did.
Yeah.
And so
what's its PE ratio now for the record? Do you know that yet?
I mean, this is just high com.
Okay. Its forward PE is now only 10.
Right. I'm saying, like, this is just.
I've been arguing with you since it was a 6 PE. If this thing is, if we are escaping the boom bust understanding of semiconductors, then this industry should not have single digit forward PE ratios moving forward.
No.
And a constant and a permanent re-rating. You know, AGI is coming.
Eventually, one would think.
Can you afford to be the second place winner in that race?
Well, somebody's going to be.
But if you're the United States, can you afford to come in second to China? You're an empire in decline. That looks like it just lost the Iran war. If you lose AGI to China, what are people saying about America?
Well, no, nobody, I don't think, is competing in order to lose the AGI.
But there's only two people competing. No one else can build the scope and scale that the United States or China can right now. And so that we're going
one would argue nobody else can build the scope and scale that the United States can. The data center spread is so centered on the United States, it's not even close. It's like comparing a skyscraper to a single story hut.
For sure. We don't have the energy that China has, though. And so when they start to scale up their data centers, they're going to be able to meet their data center demand much easier than we are right now. And as you see, and as we've seen all around the country, you point out data centers are being pushed back, locked out. Are we doing anything with grid transmission right now? Are we doing anything to build up power base supply? What's going on there? We're going to need more batteries.
I mean, it'll take a good long time before there is anything like the U.S. concentration of data centers anywhere else in the world, if that's even feasible. Because for all of our issues, we're delaying them. We're throttling compute. Microsoft, for example, just banned the use of Claude code, apparently, for its employees. Just because expense. Just because expense. Just real expensive. And so you look at all of this and you go, okay, don't over extrapolate the tokenomics of this quite yet in a vertical line, because gravity does exist and we're seeing these companies go, whoa, too expensive. Back it up. And that's already occurring, even among the really big companies that are at the forefront of this and are champions of this. I mean, Microsoft, come on. It's OpenAI's money bag, essentially. And so when you look at all of this, you go, okay, well, the first part is don't over extrapolate just how much compute you'll need extra and how much of a first mover advantage already exists. And number two, everybody's going to be delayed. And everybody's going to be delayed everywhere and at the same time. Because, and this has been my central argument around what we're looking at right now, people need to eat. They need to buy things in order to exist in the world every day. And all of the prices of all of those things are rising. Data centers need all of the very same things. They need for things to be transported. They need energy. They need inputs to be built. They need credit to be available to finance all of it. All of the very same things that consumers need, data center building needs. Only data center building apparently is going to shine onto the land from fairy dust. based on these reactions from the markets. Apparently, that doesn't matter. That all of the inputs are getting costlier for them too. But you are seeing it in the real world, though, and
you are. It's in the leverage.
The GDP numbers, the ISM numbers all point to this. Inflation exists for them too.
Yeah, well, it does. And so we're going to have to produce a ton of it. And where are we going to put it? Oh, yeah, the market, I think, is giving us a little hint here. Batteries, very low vol in some of these ETFs. 25, 10 IVR. Power is a little bit more, but 69. But forget the tickers. Ilya, bottom left to top right, and then consolidations up here in lots of these names, which granted similar overlap in terms of the holdings in some of these ETFs. Bottleneck time. We went from GPUs to memory to servers, to keep all this stuff on. This may be the next place where I put some chips, my friend. But we're going to have to talk about this tomorrow because overtime's out of time for this Tuesday, June 2nd. We'll be back same time, same place every Monday through Thursday, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Catch you later. Macro Money up next.
See you there, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better. In fact, I've never seen anything like it in any corporation in the United States.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It is a meandering day for markets as they try to figure out what to do with all of what is buffeting them, from the ongoing confusion about what's happening with the war in Iran to the situation in the blistering AI boom, over to the situation with the implications for the U.S. economy and economic data that seems to be showing that despite relatively modest growth, the dynamo might be spinning so fast that the economy is overheating. We're going to look at the price action here and try to figure out what's going on before we get the next big batch of macro data to cross the wires. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And as ever, we are going to root ourselves in the price action first and foremost and take a look at what is already there for us to see, and then see if we can't figure out something about next steps, because we do have a little bit of a lull in the news flow, at least on the macro side today, but that lull ends once we get into tomorrow's session. We get another batch of ISM data there to chew on and see where the economy finds itself against all of these many challenging narratives intersecting at the same time. So here's the S&P 500. As we can see, it continues to kind of quietly limp higher. This slow extension now looking like into its 8th day. We're looking at, of course, likewise, a pittance in terms of volume. In fact, we've barely clawed our way to 1 million contracts exchanging hands here today. If we look at what that compares to, it's something like when volumes were just building into the contract around the last time that there was a handover of front month leadership for the ES futures, where the prior front month contract expired and this contract, the June one, became the dominant one. Now, we don't as yet have a rollover into the next one that's coming up, and it would be tempting to say, oh, well, this is happening because we're approaching rollover into the next contract, and so that's why what we're seeing here looks this way. That's why we have this sort of a situation with the diminishing volumes. Perhaps they're just rebuilding into volumes in another contract. But no, as it turns out, the situation is exactly the same there also. Volumes are essentially weak across the board. And so what we're seeing here then is a situation that instead seems like just a wait and see kind of pocket in markets, because what looks to be occurring is a kind of standstill, not just in stocks. This is one of the few days seemingly this week where we're actually seeing a relative quiet and a relative, let's say, consistency across markets. Of course, the main story since the April, late March lows has been that stock markets have kind of decoupled and went on their own. Meanwhile, everywhere else still seemed concerned with what was going on with inflation and the Iran war as its catalyst. So if we take a look at much of what has happened since, stocks have been sort of on an island by themselves. And even though the rally is, again, now showing signs of wear and tear, volumes are diminishing, the relative strength index is showing diminishing momentum, it is nevertheless much more impressive than the recovery from wartime moves that we've seen in other markets, which has been largely non-existent. Again, stocks here, of course, suffering the war outbreak much as everywhere else, but already erasing all of that by, let's call it the middle of April and then extending higher. If we look at the bonds, they only managed to rebound about a third of the way around that same time, and then have, of course, extended downward since. That continues to be the case here, but at least as you lack conviction in the stocks today, you likewise lack conviction in the bonds. And so that's not exactly the kind of reconnecting of the dots that you'd ideally want to see, if only because what you'd want is a convincing move from both markets, suggesting that maybe thematic type of thinking is back into the forefront here. But as it turns out, at least today, we don't have divergence, and markets seem to be collectively pausing for a think. Still, though, positioning-wise, we have a story in the bonds that very much still points to higher interest rates, and clearly, at least, on the thrust of it, diverges from stocks. There we can see over the past several days, we've been testing the underside of the range we'd broken here and pointedly unable to break above it. And so the bias here still pointing toward interest rates that are higher. And a similar story in gold. We're quietly leaking lower here after its mid-war rebound. This was the same rebound as we've said before in late March, early April. For all of these markets, stocks bottomed here. So did the bonds. So, of course, did gold, but the subsequent rebound has looked very different depending on which market you look at. So stocks, of course, showing the most strength, and everywhere else showing various versions of ongoing preoccupation with the war. At least in the case of bonds, you manage about a third of the way retracement here, about half. But since then, that retracement is being systematically erased with this slow decline back essentially to where we were as the war trade hit its peak for gold. And of course, in the context of rising interest rates, this makes sense. Gold yields nothing. And so an environment that seems to be increasingly entrenched with higher borrowing costs, likewise, is an environment where gold is having a hard time. It tried to rebound today, but that move was erased intraday. And so we continue to get this slow leaking. For the US dollar, we get a pause as well. It sort of continues this apparent pause across markets, though we're still hugging the top of the range here after the dollar's parallel pullback. It has been generally stronger as a consequence of this war, again, thanks to rising interest rates and the appeal of holding an asset that actually confers yield, like, for example, gold does not. And so we're sitting here scraping the top of the consolidation that's been there basically since mid-April, but the bias here near term, and certainly since the beginning of May, seems to have favored the upside. For crude oil, we narrowly extend back up from what has essentially emerged as the wartime bottom of the range, somewhere between, let's call it, 80 and 85 dollars a barrel on WTI is where we've been locked in since this war broke out. And while we continue to get a lack of progress on negotiations between Washington and Tehran, the price since the beginning of the week has been edging upward. We get a little bit more of that today, but again, relatively quiet. Looking ahead, what's increasingly interesting here are the consequences of all of this for the U.S. economy, because the evidence really seems to be stacking up. And the next inflation indication from the ISM service sector index may be the next shoe to drop. We already got the manufacturing part of the equation. It came in a little bit hotter than expected, 54 versus 53 expected. As ever, of course, this is done in the logic of PMIs. So 50 here is neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Clearly here we can see both the service sector and the manufacturing sector in the US are in growth mode. But since the beginning of this year, we have seen a rapid rise on the manufacturing side. We discussed this yesterday in the immediate aftermath of the data. And this, of course, reflects a massive building of input inventories that seems to front run expectations for robust demand. And when we look at what that implies, here's the internals of that manufacturing survey. We can see we're looking at overall sector activity growth, the fastest that it's been since, let's call it, the middle of 2022. So give or take 4 years. But strikingly, as we get this growth, last time when we saw growth at this pace, inflation was on the way down because the various issues with global supply chain disruptions were being slowly resolved. And of course, central banks were starting to act against this inflation. This time, what we're seeing is this amount of growth is producing as strong of an inflationary impulse as some of the worst price growth during the COVID period. And of course, we can see growth was much stronger here in early 2021 because this is the global economy becoming reopened after pandemic closures. So the pace of recovery, the pace at which things are spinning here is rapid because we're essentially going from nothing to turning the economy back on almost everywhere at the same time. Now, we can see here that this time on the way up, over the past several months, we're going from manufacturing having been in contraction mode, basically all through the hangover after this period, from about the second half of 2022, all the way here, almost uninterrupted, but for a month or two, into the fourth quarter of last year. And now at the beginning of this year, suddenly there is this surge. And it does come with a surge in new orders, which is, of course, encouraging. But as we can see, employment continues to shrink. It's still running sub 50. So what you're seeing here is this ramp up in activity, but it seems like much of that ramp up is really just chasing the price higher. That is to say, manufacturers stockpiling inputs, expecting them to be even more expensive later. We are not, as a matter of fact, getting new orders growth that's materially accelerating beyond that initial jump at the beginning of the year. And of course, now it's running a bit hotter, but it seems to primarily reflect manufacturers looking at the situation and going, okay, well, there's the AI boom. That's rapid demand growth for a lot of the stuff that we're going to produce. Then there's the disruptions from the war, which are creating higher input costs. And the longer the disruptions persist, the more of an impact they're going to have. This stuff accumulates over time. So, okay, that's 2. And then 3, last year, the Supreme Court overturned the president's tariff regime based on IEEPA legislation, which is most of it. And since then, there has been a patchwork of workarounds that have been put out there to put that, or at least some of that tariff regime back together, but it's on a timer this time, different legislation. And it's still unclear how it's going to get reconstructed, in what way and to what extent, and what ultimately the extra cost of that is going to be. All of that basically means that whatever the price of stuff is now, it might be higher later. And so with that in mind, markets seem to be clearly looking at this and saying, right, okay, so if things are going to be more expensive later, well, let's just buy whatever we can buy now. Let's stockpile it for when we'll need it later, because we know the demand is coming. This AI boom looks rabid. And then we'll be at least somewhat hedged, we'll be at least somewhat insulated. This is not unlike, for example, the large run-up in manufacturing activity at the start of last year. Only last year, it was front-running the tariffs for the most part, and it didn't last for very long, but we can see this run-up here. We also see the inflationary implications of it. That was the last big jump. Of course, what we're seeing here is many times over, but the same kind of dynamic seems to be really on display here. And of course, last time there was a meaningful hangover for new orders and for employment, where it didn't stop shrinking, but it started to shrink at a faster rate. One might think something similar could happen here were this to overheat as well. And of course, now what we're looking at is what this will do to the service sector. Because while this might oscillate with the back and forth of the cycle, and once you kind of build inventories as far as you can build them, you've got to stop. And so once that occurs, perhaps you get to a place where this can at least pause for a breath. But when you look at the extent to which this embeds into the service sector, that's where you get the kind of concern that you had in 2022 or 2021 going into 2022 that ultimately had the Fed say, you know what, we didn't think this inflation was going to be lasting. We think it was going to be a transitory thing, but looks like it's sticky. We're going to have to act with rate hikes. And of course, that's what gave us a whole year's worth of stock market declines in 2022, the Fed's aggressive response to what happened then around this very same kind of inflation. And so it'll be that service sector number coming up that we're going to be watching very closely. We can see the expectation is that it holds relatively steady at 53.8. That would be only a touch higher than the prior month. But it'll be the internals, once again, that the markets are watching. And just to give us a sense of where the lay of the land is there, employment has been shrinking for both. So the trend, were it to be uninterrupted, would continue to see employment shrinking in the services side of things. The kind of belated jump in vacancies notwithstanding that we saw in the JOLTS data for April. Those openings, of course, don't seem to have translated into meaningful employment growth expectations for this set of figures. And so you might expect more of the same. This, of course, is a little bit more forward-looking than the JOLTS numbers, and maybe not a little. And then the other side of it, of course, is surging inflation on both fronts. And what this seems to start to echo, this rise in service sector inflation a little bit after we see the surge in manufacturing, is not unlike what we see in the CPI, the PPI, the PCE numbers that we just saw out of the US. We already see spillover from the energy shock into what is going on in the service sector, be it the cost of freight, the cost of lubricants, the cost of truck transport, all of those things already as core services inflation, and of course as knock-on effects of the jump in the price of oil and more broadly the closure of the Strait of Hormuz, all of that is already starting to show up. And the concern, of course, is that you're going to get the same thing here in the ISM numbers, telling you that the inflation problem isn't just now so much an energy shock as it is the accumulation of all of these various things. The front running, the feverish boom in AI infrastructure building, or at least the promise thereof. We certainly saw it in the first quarter. And with that, the tariff uncertainty. All of it seemingly coming together for an inflation that's due to make things harder, just as the actual growth impetus that comes with that inflation is really not as strong as the inflation itself. And again, we see that here. The last time inflation was anything like this, growth was much stronger. Now we seem to be getting growth that looks strong in context to recent months, but seems to be doing that with a lot more inflation than similar growth appeared with last time. And that's certainly not surprising. Now, of course, we saw the same thing in the S&P Global PMI numbers that we've just seen. Inflation absolutely surging there as well and telling the same story. And it's not even just localized in the US. We're seeing this for manufacturers worldwide that perceive the same inflationary environment. There, the numbers for both input and output inflation growth are absolutely astronomical. And very much, especially for inputs, back to COVID area highs. Now, we already saw in the first quarter GDP numbers that the AI boom, spinning as fast as it is, contributing more to GDP than consumer spending, which is a very impressive feat considering investment is only about 14% of GDP, whereas consumer spending is 68%. Needless to say, that is absolutely staggering that business investment contributes in the first quarter to GDP more than does a sector nearly 5 times its size. But that's because business investment grew at a pace of 10.4% annualized, and consumer spending only about 1%, a little bit less, as we can see on second revision. But all of this inflation, especially what we are now seeing in the manufacturing sector as a kind of direct compounding of everything, including rapid AI build-out demand, all that buffets the building of data centers and throttles them and makes them more expensive in exactly the same way that higher costs throttle consumers, which we see have now been slowing for 2 consecutive quarters. And in fact, that are growing slower as a consequence of this boom than GDP itself. And so what we're looking at then in this ISM data is evidence that the inflation situation is becoming bigger, that it is spilling into services, even as it already seems to be overheating in manufacturing, and tells us a story about an economy that is going to start, in a sense, to overheat from exertion and higher prices, if not necessarily from robust growth and employment. And we can see that here, again, the inflation expectations baked into the bond market continue to follow crude oil prices and continue to stay sticky with them near the post-war range highs. And of course, the response from central banks is as you might expect. It is a hawkish shift all around, with the Fed now likelier to hike rates this year, that probability at about 68% before year end, than anything to support growth if this were to really start to turn inward on itself. And so from a positioning perspective, what I've done here is still maintained a bet on higher rates through a number of vehicles. I'm still short gold. I'm long the US dollar by holding futures short Aussie and pound and euro. And on the spot side, also short the yen and the Swiss franc too. Then I'm short Bitcoin now. That seems to be still marching to the beat of its own drum and ignoring the larger narrative, but its attempted upside breakout has failed in relatively spectacular fashion. And so last week I flipped over this position from attempting to catch continuation of the upside break to that break failing, and that seems to be starting to occur here. I'm still long a call vertical in IGV. This was an unloved part of the tech story and looked cheap by comparison, and so there's been something of a catch-up run here. But as far as overall risk, I'm still looking for the stock market to eventually recognize that this inflation threat is coming for it, and for this low volatility, low volume melt up to ultimately give way to something that looks a lot more in line with what inflation fears look like in other markets. And so I still have these short call verticals in SPY, in the Qs, so S&P, NASDAQ, and the Russell. And of course, still long the drivers of inflation, of course, energy first and foremost. So have call verticals in crude, call verticals in natural gas, and looking for direct rates higher types of exposures through outright puts at the middle of the curve, IEF, and at the long end, these put verticals in TLT. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.